Good morning, everybody. Today is February 6, 2026. What we will do on this live stream is best analyze the intraday stock market using cyclical analysis, time confirmation, and more to find the wind direction, trend direction. Time is 9:26 on the board. And the news we have overnight is that stock futures rebound Friday after a 3-day slide as tech shares prop and Bitcoin stabilizes. Okay.
Let's dig into the huge CapEx forecasts from this week as well as tonight. Joining us on the phone, Gene Munster, Deepwater Asset Managing Partner. Gene, great to have you with us. I want to pick up where Kate left off with that statement from Andy Jassy about CapEx and how that CapEx will be deployed. Is there some fear that the $200 billion, it's not a pure let's seize the moment in AI. It's let's also spend on robotics and, orbital satellites and all sorts of other things.
Well, Google last night talked about half of their CapEx going specifically to Azure and a lot of it going to compute for other training that they're doing. But I think in general, you should look at about 80% of this CapEx is going to be somehow AI related, whether it's robotics. And of course, they have their regular way of business when it comes to CapEx and doing some things on the outer edge, I guess literally in space. But to answer your question, it's probably 80%, still a really big number. And speaks to, I think, what is the conviction that these companies have in terms of where AI is going.
And Gene, if that's the case, let's say they're right. It actually helps you understand perhaps why the market has been so hostile to software. Because if we're going to be spending, $600 billion in 5 companies or whatever it's going to be this year on CapEx because they see so much demand, that has to displace some massive revenue and profit pools somewhere in the world. I mean, and they're assuming it's going to be a lot of software.
Yeah, I think it's a good assumption. And I want to go back to the, software is being impacted by this. I want to go back to the concept of what kind of weight should investors put into these huge CapEx numbers. And specifically is that they are coming from a select few number of companies. And there's a central question. This all plays into the software question, too. A basic question to ask, which is, are the companies that are amping up these investments, are they competent? Do they have a good view of where the world is going? And if you ultimately say they don't, then the reaction is perfectly fine that these stocks, Google last night, Amazon tonight, trading off on these big CapEx numbers. But if you think that they have a unique view, which I believe they do, and do have competence in terms of how to get an ROI
just a quick legal disclaimer.
Big ROI from
legal disclaimer. I am not a financial advisor, and I do not recommend that you buy or sell any securities or investments. This video is for information and educational purposes only. Might be better if I all caps this thing. Previous day, 4 p.m. close. All right, please consult your personal financial advisor before you make any decisions regarding your personal financial situation. I am not a financial advisor, and I do not recommend that you buy or sell any securities or investments. This video is for information and educational purposes only. There we go. All right, previous day 9:30 open on SPY. Previous day 4 p.m. close on SPY. 681. 687. SPX. Market just opened. We still have a gap up here at 6,879. We are now gapped up opening. IWM opening bullish since yesterday's close. Yesterday, IWM went down 2%, and now it recovered everything. It is up 1.76% right now from yesterday's close, 355, right, plus 1.76%. That's fucking wild. Jesus Christ. What a reversion. Right, what an ultimate reversion. SPY is showing the floor, right, as 11 a.m. of yesterday too. right? Showing a 1/3, 2/3, 3/3 from 11 low somewhere here. Not really. It's lower than yesterday's high for now, so it's just opening like this. Cycle down, did not break the floor, and then now it's opening. Yeah. What a confusing open. It's bear trapping a lot of things, right? Nvidia went to 170 yesterday, and it popped up open at 177, 175, burning the majority of the puts on Nvidia. I'm getting a phone call. 1 second. This might be the police department. Give me 1 second. Guys, 1 second. It's the police department. Give me 2 minutes. Alright, I'm back. Yeah, I just got my police report that I was waiting on for 2 weeks. Like, I should have gotten this thing last week. Alright, market is trying bullish right now. Man, I did not take 25% up on dust yesterday, and the thing reverted back up to 538. I was up in stocks. They're at 25% overnight. I did not fucking take it, and it reverted on me. All right, now it's getting closer to the roof, the gap up there. So now it's actually in a 1/3, 2/3, 3/3 from yesterday's low shown. Bullish cycle for now. Yesterday closed crazy because we tested the low. That is a nice bull open. I am going to see this. Cool. Where is his insurance? Charge. License. Give me 1 second. What the fuck am I supposed to do with this shit? Fuck. I have to call Geico because today's the only day I can take care of this shit, so. One direction is trying north off of market open for now for 9:35. I'm on the phone with Geico, so give me, I don't know. These motherfuckers just hung up on me, bro. God, I hate fucking Geico. I can't do anything, guys. I'm on the phone with Geico, so I mean, this life takes over priority before anything else, right? People be leaving and joining because they can't fucking do anything and they can't hear shit or they don't want to trade. It's whatever.
On from Google and Meta more recently on it.
I gotta do
but
life
if
shit
you
right now.
believe that they are in fact competent, the only takeaway you can have here is that we're still at the very beginning of the transformation around AI. That the amount of capex, it's not going to end in 2026. It's going to continue. The growth rates might slow a little bit, but it will continue to be huge numbers in 27, and we're still early. And why that should resonate not only for the infrastructure people, but also across in the software, is it speaks to the level of disruption that ultimately will come. And I think that's the central point, that I'm not getting the joke, because I still think this is really good with the CapEx numbers. The brain of AI is getting bigger. I think that's going to yield more AI utility and more AI disruption. It's not going to end with software. It's going to it will play over to everything and unemployment, and there's just so many rifts to it. But I still believe that this is a sign. The simple takeaway from Google and Amazon, their CapEx numbers, is we're still early.
All right, let's widen out and do a check on where futures are to start the last trading day of the week. We are looking at some nibbling in the pre-market here. S&P minis better by nearly 0.5%. NASDAQ 100 futures higher by more than 0.5%. Dow futures higher by approaching 0.5% gain. Small cap futures right now, the bell of the ball, up 1.25%. Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. All right, KG, let's help set the stage here. Big picture, how should we be looking at markets?
Well, we are seeing a little bit of a retracement bounce, Diane, after this aggressive sell-off over the last couple of days. And this is kind of not surprising. Actually, if you look at the technical setup on the S&P 500, we basically closed at the 100-day moving average yesterday. Now, we have seen this in the past around 3 times since the April lows here. And usually the next day we actually do see green on the screen. A lot of these moving averages, we usually do not flush through them the first time and see kind of this massive move to the downside, unless we have an exogenous event. So I think this is a technical bounce back here, at least for today. Now, if I'm kind of looking at the E-mini S&P 500 futures contracts, we did see an increase in open interest yesterday with the markets moving down. So that kind of signifies to me that we are seeing net new sellers coming into the market. And I think this is kind of a correction in time. We've heard about this term, kind of these rolling recessions. I think this is kind of a rolling correction within the market. I mean, we have seen some weakness when it comes to technology stocks. You have seen weakness when it comes to, obviously, the software names as well. But there has been some strength in some sectors that have not really performed over the last 2 years. Consumer staples continuing to make new relative all-time highs here. You're also seeing industrials a little bit more participation in that market here. And the Mag 7 names aren't trading particularly well. I mean, Microsoft is completely falling off a cliff. So I think right now this is kind of a little bit of a churn in the market. Let's see if we can hold this bounce back today. I think that's going to be a telling sign. If we actually do end in the red, that kind of means that we did see a lot of selling into strength here. And maybe we get another rally, not only just for today, but maybe on Monday before we actually start testing some key areas of resistance. But I think this churn or this kind of rotation trade actually has kind of helped us out from seeing even more destruction in the S&P 500.
Good point there. So it feels like already a theme so far this year is the rotation trade and the point you just made about rolling corrections. But let's talk about another member of the Mag 7, Amazon, out with its quarterly report card. Another big spender here in terms of CapEx for the year. Take us through some of your takeaways here.
Yeah, we are seeing the shares down. Now, it's off the lows. It actually traded down to $197. So you are seeing some buyers really stepping in here, at least in pre-market trading. Now, the company did miss when it came to the adjusted earnings per share. They reported $1.95 there. Street was looking for around $1.96. But revenue did exceed the Street's expectations, coming in at $213.3 billion. Street was looking for $211.4 billion here. And when you're looking at AWS revenue, that did exceed the Street's expectations, coming in at $35.58 billion. Street was looking for $34.93 billion. And advertising revenue, once again, came in better than the Street's expectations. But you kind of highlighted this at the open here. The CapEx spend, they are looking at around $200 billion for 2026. Street was looking for around $146.6 billion. Now they're spending a lot of this money on trying to expand their data center presence. Obviously, this is going to go into AWS as well as chips and robotics. And so the market obviously is not really enjoying that CapEx spend, especially when the guidance is coming in a little bit light, not only for top line, but bottom line revenue. Their Q1 guide did miss the Street's expectations, and their operating income guide also did miss. So the concern that analysts as well as investors have is that this ramp up in CapEx spend continues, and we do see maybe a deceleration when it comes to growth on the top line, and then also maybe pressuring free cash flow. And in fact, if it gets too aggressive, maybe even negative free cash flow, which makes it very difficult for these stocks to trade at the multiples that they are right now. So seeing a pullback, but let's see how the market actually reacts here. We did see buyers coming in and stepping into Alphabet, Google yesterday in the open as well, try to recover some of those losses. Maybe that's going to be the same thing for Amazon this morning.
It does feel like this time around that most of the Mag 7 are being punished for the level of spending they plan to do this year, if I recall correctly, except for Meta. Let's get into crypto here, seeing some recovery in Bitcoin this morning. But I mean, listen, it's quite a ways away from where it was back in October. Take us through what you're watching here in crypto.
Yeah, so, you know, it's defending a key area of support. We kind of talked about the 55,000 level yesterday. We were only $5,000 away, which seems like a lot of money, but just given the volatility, 5,000 can actually, you know, swing in a matter of hours, actually, when it comes to crypto and Bitcoin. Right now, this is exactly what you would like to see. If you could actually see a close above this around the 68,000 level, that would actually be a fairly healthy hammer candle on the daily chart. Maybe some buyers want to be able to try to step in there. You are seeing RSI also ticking to the upside here. Obviously, there's been a lot of technical damage when it comes to Bitcoin. You are seeing a lot of those that actually hold the physical selling out as well, which is causing a lot of this pressure to the downside. And this is, once again, a little bit more of a liquidity gauge as we see Bitcoin and Ethereum and some of these other you know, cryptocurrency adjacent type of you know, products selling off. That also kind of leads to a broader spike in volatility within the equity markets, as well as, you know, currencies just in general. So right now they're defending it. Let's see if this is just a dead cat bounce or if this is something that is actually very meaningful and buyers really do try to layer into some new long positioning.
KG, any correlation now still between Bitcoin and the tech sector?
I think that you probably are seeing a little bit more of a correlation. I mean, if you look at Bitcoin compared to the IGV or the software ETF, I mean, the chart pattern is pretty much almost identical here. But I would say, Diane, we always try to bring these correlations with Bitcoin and the US dollar, Bitcoin and gold, Bitcoin and inflation, and usually those are just short-lived type of phases or cycles that we see within Bitcoin. I think it does trade on its own. It has finally decoupled from the broader equity market as a whole. I think that's actually a really good sign, not only for Bitcoin traders, but also for equity market traders as well. So at least for now, we are seeing, you can make the case that yes, there's a correlation between software stocks and Bitcoin, but I think over time, Bitcoin trades on its own. I don't think it's really tethered to any other product that could actually sustain itself as far as that correlation. Once again, we've seen these cycles or phases, but nothing has really stuck.
Okay. All right. Let's get into one more earnings mover that's on your radar. Reddit, those shares rallying right now in the pre-market. Take us through what you notice in the numbers here.
Yeah, this is an earnings announcement that was better than the Street's expectations. The adjusted earnings per share for Q4 came in at $1.24. Street was looking for around around 94 cents, give or take. Revenue also came in at $726 million, exceeding the Street's expectations. Now, when you're looking at their daily active unique users, that was actually relatively strong, not only here in the United States, which once again kind of beat the Street's expectations, but when you're looking at it from a global standpoint. So their international presence is starting to increase, and we are seeing their guidance both on revenue as well as adjusted earnings per share actually exceeding the Street's expectations. So they're making a lot of money when it comes to not only the traffic and the ad revenue within their platform, but also these deals with some of of these mega cap names like Google, Alphabet, that's utilizing their data in order to train artificial intelligence models or these LLMs, and they believe that that's still going to be the future. And they also made a comment that a lot of individuals are actually leveraging LLMs or chatbots, if you will, rather than utilizing search, and they believe that that's going to be a tailwind for their business over the long term. So a decent bounce to the upside, especially after the stock broke below the 200 period moving average. Once again, this is kind of bucketed within that software kind of tech space, and so a nice bounce. Hopefully it's going to be able to hold here, and we may see some consolidation and potentially a breakout or at least a retest of the 200-day moving average, which is sitting at around $186.
All right. And then the levels that you're looking out for today on the S&P 500, KG.
Yeah, wide range once again, 6910 to the upside, 6700 to the downside. VIX is still sitting at 20.3, so we're implying a about a 1.3% move to the upside or downside. Diane, volatility is still elevated, so even though we have some green on the screen this morning, it doesn't mean that we're out of the woods yet. Once again, I would treat this as a dead cat bounce, at least for now, until you actually get over some key areas of resistance, and I would look at that 6900, 6925-ish area as that first major area of focus for technical traders over the next couple of days.
Okay. That makes sense. That is Kevin Green, our senior markets correspondent, with your setup for today.
Hello. All right, guys, I'm off the phone. They made a claim. They did all that. And now, all I need to do is send in my photos later. Let's go! Let's go. All right, good day. What is this spike up? All right, we gap filled on SPX. 6,879 that we made from yesterday. This is a crazy day, right? Look at the fucking Thursday open down. And then Friday, creating a W. This is a crazy day. Right, market is up right now. SPX is up 0.93%, QQQ is up 0.66%, and IWM was up 2.7%, and now is at 2.09%. That is interesting. All right, market slightly pulled back from the gap fill. Not bearish, not bullish. It was bullish. It was bearish. There's an algo range at 10.05 as well. Let's see what happens. Algo range. And today is Friday. I had to do what I had to do today. It was either today or I have to wait until Monday, and I cannot wait until Monday because it's been 2 weeks since the car crash. So man, though. What a day. Today is Friday. There's a lot of things happening, like NVIDIA options expiring, Tesla options expiring. There's still bear trapped on Tesla on NVIDIA from 171 close for now. VIX has crashed through below 20. It's at 14. 19.41, sorry.
And 5 things to know ahead of the opening bell. Amazon shares are lower following mixed quarterly results. The company raising its full-year spending forecast to $200 billion. Shares of Reddit higher
market cycling. It was bullish. It was slightly pullback.
Gave strong guidance for the start of this year. That stock, in fact, is up by almost 11% this morning. Shares of gaming company Roblox soaring after the company reported bookings that came in above what the street was expecting and a smaller than expected loss.
Yesterday
It
night
also
at
gave
7
first
p.m.,
quarter
9
bookings
p.m. It
guidance
was at
above
6:30.
expectations, and that stock is up by almost 15%. We'll be speaking with the CEO of Roblox
Gold
at
consolidation
8:40 Eastern time.
showed lower overnight
Buy now,
and
pay
went
later
higher.
company Affirm reporting a 30% increase in sales for the most recent quarter of $1.1 billion. That topped Wall Street expectations.
They're burning bears on gold too today, looks like.
Guidance for the
from
full
yesterday.
year. And Coca-Cola announcing that it is discontinuing sales of Minute Maid frozen juice concentrates in the United States and Canada. Instead,
can't lie because the market is still bullish. IWM is at 2.44. SPY is back at 1.14. QQQ is at 0.96. Right, that was a slight pullback and a bullish day for now. Showing north, or they are north.
But I don't think I've ever
For
bought
now,
it in my
they were
adult
pulling
life.
back off the gap fills from 9:55 to 10.
It's always there.
10:10. But
It's not fresh available.
No. Frozen. Well, they
things
maybe
change.
It always take a while to,
After
trying to
it
get it out.
cycles,
Sometimes
it
you just
decides
finally
to
say,
cycle.
okay, and use a spoon and dig it out.
Dig it out and you stir it up with water.
Yeah.
Add it in.
I remember.
Let's see on the QQQs.
Well, welcome back. Good Friday morning, everybody. Thanks so much for joining us this morning, and I hope you're having a good morning. I'm Maria Bartiromo, and it is Friday.
And 5 things to know ahead of the opening bell. Amazon shares are lower following mixed quarterly results.
Market moving volatile already. And today is Friday. Fucking moving volatile as fuck already. I guess it's deciding what to do here. Bears are.
Kevin Hanks live at the CBOE. Our pre-bell playbook.
Trying.
Good morning to you and a happy Friday to you. Quite the volatile week. We're earning our weekend, I believe. Kevin, your thoughts?
Yeah, the theme through this week and through last week, frankly, Nicole, has been the CapEx inflection point, right? They seem to be some red flags going up. You look at Google Alphabet, 175 to 185 billion. Stock went from 349 to 306. Now it's around 330, down on the week. Amazon is going to be down today sharply. We'll see something around the $200 level. They're at 200 billion in CapEx. Meta Platforms, right? CapEx 115 to 135, stock down on the week. Microsoft, 100 billion, approaching or exceeding 100 billion is the way they put it. That stock is down hard this week. So the overall inflection point that we've hit in CapEx spending that's hitting these, the question now everyone has to ask is, are these stocks buys down here? Is this just a short-term sell-off in these names, or is it something bigger? I think the start of the day is important today with markets all looking higher. But that's not the most important part of the day, Nicole. It's going to be where they finish the day. In a week like this, how they finish on Friday will be extremely important. Why? Well, let's face it. We've had a bunch of labor market data all showing a softening labor market. Pretty consistent theme. We've got a non-farm payroll and unemployment coming out next Wednesday. But we also get some retail sales. On Monday Tuesday we'll get CPI. On Friday, so we've got some data. Earnings really starting to drop off in terms of the quality of the names. We'll still get a fair amount, but not the high-profile names that we had the last 2 weeks. So I think the most important thing for traders going into Friday today is where we finish the day.
It's Friday, Friday.
Yeah, and I will say, I wonder if people might just take a breather and just say, I might wait this out till the weekend.
It's Friday, Friday. Everybody loves on Friday.
Wow, this is down 10% or 20% and scoop it up. I mean, they have to, but that's how money's made, right? And every dip that has happened and every big sell-off, I mean, we saw the NASDAQ down 2.5% through yesterday. It's been terrible. And someone bought something somewhere.
I'm shorting into next week here.
Bitcoin? I feel
it's
a little
Friday, Friday. Everybody loves on Friday.
It's come back a little bit for the crypto folks. They've had a heck of a time.
Yeah, exactly right. I mean, I see Bitcoin pre-market 67,140, up about 5.25%.
It's Friday, Friday.
Great start to the day. You see it in gold, also up a little over 1% to start the day. These are all green to start the day. But
it's Friday,
this
Friday.
Day is not over yet.
Loves on
and
Friday.
They've got to end there. I think, listen, if the 4 o'clock bell rings in New York and all these numbers hold for the day, it'll be a great end of the week. And the headlines over the weekend will be extremely positive, like buying dips and things like that. So I think that's important. But if this market doesn't hold these levels and we get weak going into the weekend, then the other story pops up. So I think today's a vital day heading into next week. I think this is going to be critical on how we finish the day. You've got the VIX starting the day on the downside, but still around 20, still elevated from its average level. So I think this is going to be a really interesting trading day. And what looks like right now, hey, listen, we could be down on the day. We could be up over 1% on the day. That's what could possibly play out here. I think there's a chance for a big move in either direction, Nicole.
Look, the VIX is still at 20. And so it just means people are staying nimble. They're on their toes. Jennifer Garner and the Once Upon a Farm team are here to ring the opening bell for her healthy foods company that she founded or co-founded. I'll have her ring the opening bell and the closing bell right away, Kevin. So this way we could end at these levels in jest. Okay, let's talk about sentiment. It's such a key part of the story.
We'll get some consumer sentiment about 10 o'clock Eastern time. This is the first look. Remember, the University of Michigan comes out twice with consumer sentiment, early in the week and then right before right early in the month, then right before the end of the month. So they're looking for something. The last reading was 56.4. They're looking for something around 55. The year ahead inflation expectations, it was 4%. But remember, I always say this about these sentiment numbers or these soft data numbers. These aren't hard data. These aren't real looks at the U.S. economy. It's just sentiment and it's people's opinions. And they skew, regionally, they skew political parties. So there's a lot of things that come in that discount some of the strength of these numbers. But the market will move off University of Michigan consumer sentiment. It always does. Not sure it should, but it always does, Nicole.
Great to see you, Kevin Hanks, live at the CBOE. I know you're staying nimble there, all the gang there. Thank you for all the updates
like no
live
cycle
from there.
right now, chopping. My computer is slow. Michigan consumer sentiment data. IWM coming in strong today. QQQ looks fucked.
Well, welcome back. It's time now for the Word on Wall Street. Top investors watching your money. Joining me now is Payne Capital Management President Ryan Payne. Also with us is John Lonsky this morning. Ryan, good to see you. Thank you for joining the conversation. We've got a market that is firmer once again, back in rally mode here, with the Dow Jones Industrial Average indicated to be open about 250 points at the start of trading this morning. The Nasdaq is up 150. That's 2/3 of 1%. The Dow up 0.5%, as is the S&P 500. Of course, it was a different story yesterday. All three major indices ended lower. The Dow tumbling nearly 600 points at 4 o'clock on Wall Street. Part of the issue was this continued deepening of a tech sell-off. Software leading the way. Amazon, meanwhile, sliding this morning. It's down 7.75% right now. It announced it's planning to spend about $200 billion this year on AI data centers and chips and infrastructure.
Man, these 681s are getting fucked already, though.
Amazon Web Services. Already you've got analysts downgrading the stock. Citigroup and Morgan Stanley cutting their target prices, not downgrading the rating, but
it's
cutting
crazy.
their target
VIX
prices on the stock.
Up.
Feeling concerns about profit pressure with all this spending on AI. Ryan, we've heard this story before. What do you say?
Yeah, well, first I'll thank the analyst for re-rating after the stock's went
VIX is
down.
getting crushed into this.
But I digress. It's the way it always is. Look, I think the bottom line is the hyperscalers are going to spend something like $600 billion this year. This is clearly eating into their cash flow. But I wonder here, is this the end of this trend or this trade? I suspect not. The earnings picture still looks very, very strong. You saw the Magnificent Seven so far. They've reported very strong earnings. Looks like the spending is going to continue.
There were a lot of zero DT puts expiring today. Yesterday closed.
But I do think, and I've said this a lot on your show, Maria, we are in the late innings of this trade. And you can see this with, you were just mentioning software stocks. Eventually, at some point when those valuations get too high, there's going to be some catalyst that's going to push these stocks down fast and furious, and no one's going to give you a warning. So
it's a $3 move. This move crazy.
Tech trade probably has another leg to go. But if you look at this year specifically, there's so many other places to put your money, just like last year, whether it's energy, materials, industrials, small caps, emerging markets, the list goes on. You don't really want to concentrate your money in the tech trade. And I've been preaching that on your show for like 2 years.
Yes, you have. And, Jensen Huang says that AI is changing every industry, and I'm sure that's true. But I keep asking the same question: when are we going to see the return on investment? I understand you just said $600 billion being spent by the hyperscalers, meaning the big tech names, and the rest of the corporate America is also spending. So have we seen an impact to margins? Have we seen an impact to growth and profitability?
What the fuck is this?
In any
Zero
industry
DT
yet?
fucking
So
hoping about
that's
the
all
mix.
I'm trying to understand. Have we seen the impact yet of all of this spending, or are we still waiting?
100% yes. I mean, if you look at the S&P 500, it's at a record profit margin right now. So every company that's not the hyperscalers or spending too much are benefiting from the fact that AI is becoming extremely productive for companies. So I think that's the trend.
And it's more than just AI efficiency killing jobs.
And I think we actually have another problem. We're going to have a labor shortage, right? With baby boomers retiring in droves, we're going to need AI.
Looks like the Bears are
really
here,
just to supplement the workers that we actually have. So I know, we've had this no fire, no hire. That's not going to last long, especially with 4% GDP growth. Eventually, the job hiring is going to actually follow that. And I think we're going to be in a perpetual labor shortage where we're going to need AI to augment the fact that we don't have enough workers.
All right, so you're still all in on it. You're just concerned a little about valuations and want to broaden out beyond just AI stocks in the portfolio is what I'm hearing here.
Yeah, I love diversification. And yes, I think we're in the late innings of AI, for the record.
John, I'd like to know what the story is on crypto. I mean, you look at Ethereum, Bitcoin, what a come down. Of course, they're bouncing this morning. Take a look. Bitcoin is bouncing after yesterday's sharp sell-off. It pulled it. Now, Bitcoin is down, by the way, 50% below its October peak when it was all the way up at, what, 127,000 or something. Same thing with Ethereum. You've got a sharp sell-off from the highs. Volatility across metals as well as broader risk sentiment is weakening. This is another group that actually outperformed stocks and had a big come down last couple of sessions. Gold is holding below 5,000 right now. Silver logging one of the steepest weekly declines in more than a decade, John. I mean, you've got to look at these metals in context because they had an incredible year in 2025 and even early on in 2026. What do you want to do here, John, when you look at crypto and metals?
Still bullish.
I'll let somebody else go ahead and buy Bitcoin.
Man, these candles are.
That's for sure. I mean,
crazy.
It wasn't that long ago.
I'll go range bound right now.
Some of the major figures in the crypto market were predicting a price of $150,000 for Bitcoin, but as you said, today it's less than $70,000. That's a big shock. And gold, well, gold is off, but gold is still higher by 70% from a year earlier. However, I want to add that the financial markets might welcome this decline in precious metals prices, gold and silver. Perhaps that's indicating in part that inflation expectations are moving lower, and that's going to be good news for interest rates.
Yeah, all good points. Great to see you guys. Thank you so much. Ryan Payne, we will see you soon.
Thanks, Maria.
John, you're with us all morning long. And, of course,
Milky candles.
Welcome back. A busy week for the markets. Let's get right to our panel. Matt Maley is the Chief Market Strategist at Miller Tabak. Barbara Duran is the Chief Investment Officer at BD8 Capital Partners. And Raj Patel is the Global Macro Strategist at Vanda Research. It's great to have you all here. Of course, I got to start with the markets. Obviously, it's been a topsy-turvy week. You got a VIX at 20 right now, which is actually off the highs of the week. But Matt Maley, I mean, you've seen a number of market cycles. How does this feel to you?
Well, one of the things that we're looking at right now is this big decline in Bitcoin and the forced selling that's gone with it. And experience tells me that when you see this kind of decline in Bitcoin, I should say not just Bitcoin, the entire crypto market, that market's just not liquid enough for people to raise enough money to meet their margin calls. So they have to sell other things. What do Bitcoin owners hold? They own tech stocks. And so I think that we've gotten a little bit of the baby thrown out with the bathwater on a near-term basis. And if Bitcoin and other cryptos settle down, these stocks should bounce back. The question is, will they be able to hold any kind of bounce? I mean, we have Amazon, their growth spending is bigger than their growth in revenues. You start to worry about how much more debt are they going to have? You know, what is their cash going to be, their free cash flow, et cetera. There could be some more revaluation at some point again once we see some sort of a soon.
Yeah, I mean, Barbara Duran, if you look at a chart of the IGV software ETF versus Bitcoin, they've basically been trading in lockstep. Just yesterday on this panel, Jeff Kilberg made the point that Bitcoin's basically being treated as a cash machine. The fact that we've seen such a downdraft, there's been speculation of some forced selling here. Does it feel flushed out?
Well, I think it's always hard to know when you've had a massive sell-off like this. We've seen this in all the risk-on assets, and that's all the big tech names. It's Bitcoin. We've had 7 days of selling, so there's a lot of fears. Okay, is there more to go? But typically, I think these kind of sell-offs, which are a big overreaction,
it is a huge price difference, like
everything, even the
680, 683, 686, like 600, 598, 603,
last January, where you had Nvidia down 17% in one day, and of course, what's happened since then is stock rebounded, and the same with I think the tariff uncertainty in April. This is not 08. This is not a systemic crisis. There's no credit issues, maybe somewhere out there. But I think this will prove to be quite a buying opportunity. So the question whether you buy today or tomorrow, whenever, but these stocks are on sale in a big way.
Viraj, want to get your thoughts on this. I mean, what was one of the biggest stories, one of the big trends last year, that retail investors were buoying the market? Is that what we're seeing now? Do they see buying opportunities?
Yeah, I think retail effectively epitomizes current market sentiment. So what we're seeing in our data is very much a retail investor that's probably selective and opportunistic, right? So a good example is we're seeing weekly retail buying of single stocks running around sort of the 54th percentile, somewhat pretty standard or average since COVID, compared to September and October last year, where that was in the 100th percentile, right? So I think it's very selective, but it's not an investor base that's completely out of the market right now. A good example, for example, this week on the back of sort of Google earnings, we saw the biggest day of retail buying in Google, in Alphabet, since pretty much May last year. So, selective buying, coming in, buying this dip, kind of epitomizing what Barbara was saying there, where I think retail effectively seeing value in some of the sell-off this week.
Yeah. Okay, speaking of hyperscalers, Barb, Amazon sound like 7-8% right now, pre-market. Yeah, operating income Q1 expected a little bit softer than expected, and certainly they're spending a lot here, but otherwise the numbers are pretty strong.
Yeah, they are. And certainly you have to remember, they really are a conglomerate. But the key thing that people watch here is AWS. And I think they're down. It's an AI play. We're seeing all this last week as a question of who's going to make money, how fast can it be? And of course, they have upped their CapEx spending, which I see as a positive, where there's criticism for whether it's Meta or Alphabet or this is spending because the demand is real and they see what they have to do to build out their servers, their data warehouses, centers, in order to maximize this demand. So people have to adjust. Margins will be dinged a little bit. Earnings may come in a little bit. This is really to set up for the future and in the not so distant future. So I think there's a buying opportunity when these kinds of names get hit for these kinds of reasons.
Yeah, we were talking so much, Matt, about software, but some of the action we've seen in semis, especially when you think about Amazon, which has its own product that seems to be gaining traction, or Alphabet as well with their CPUs. What we're seeing in that part of the market and how that's factoring into the broader S&P moves now.
Yeah, that's so important, Morgan, because what we've been seeing for literally a month, really more than a month now, is that there's been some rotation within the tech sector, and but one of the areas that has been leading, of course, has still been the chip stocks. They're still making money hand over fist. The question is, will it ever broaden out? That's what people are worried about. The thing is, more recently, we have seen a weakness in the semiconductor stocks. So in other words, the entire tech sector has been getting hit, not just the software stocks, not just some of the Mag 7 stocks. They all have this week. We'll see if that continues, because if it does, it has no choice but to knock down the rest of the market because they're so highly weighted. I mean, 62% of the NASDAQ 100 is technology. So if the whole group starts going down and the indexes start going down, I worry that the retail investor, who is so important right now, is not going to rotate into other groups. They're going to rotate into cash because of all this talk of bubbles that we've been hearing for six months or more. So it's definitely going to be important to watch those let's face it, the chip stocks have been the most important leadership group for decades. Keep a close eye on that going forward.
And this is bullish fucking control with the VIX dying too. VIX dying too. And this cycle fucking coming in crazy up too. $10.35 HOD testing. It's fucking crazy how much we're moving right now. $6 up. The market is painting all sorts of fucking pictures now. Monday, Tuesday, Wednesday, Thursday, trapping. It's doing counter rally. Something for now. 10:35.
What we're seeing is it's an interesting phenomenon for sure. There's been a massive, really rebasement. You're seeing leverage being flushed out of the system, really at levels that we haven't seen before. You're also seeing the fact that if you look at really any order book across the world, you're not necessarily seeing a marginal net buyer here. Everything is pointing towards a net seller. Whether you're an institutional hedge fund, pension fund, really a lot of crypto funds as well, there really isn't a significant amount of dry powder to stand by the sidelines and absorb some of the supply that's hitting the market right now. I would say on the flip side, we do see a healthy level of reset as well. There's not a significant amount of additional leverage from here that we see that needs to really get flushed out.
And that means essentially the selling is going to stop at some point, given that the leverage has almost been fully sort of flushed out of the market. Is that your view?
Well, if you look at what's happened over the last year or so,
right now.
Especially with a tremendous amount of institutional adoption, people have been very, very excited about what's happened from a regulatory perspective, particularly in America with things like the Genius Act and the U.S. taking a stronger foothold with respect to paving the way for a lot of dollar-denominated type of overall crypto adoption. That led to a tremendous amount of institutional momentum. So this was actually supposed to be a big moment for Bitcoin that was supposed to really continue for some time. Monetary policy easing overall, continued earnings growth across a variety of different sectors. But what we've seen is, in addition to the underlying leverage flush that I've mentioned, a number of other tech sentiment fears, whether that's AI, whether that's potential monetary policy being stickier and being higher longer, has led to a lot of the newer money that's come into the market leaving. So while we're seeing the leverage flush out, we aren't necessarily certain who that incremental net buyer will be tomorrow right now, especially with some of the near-term risk components in place. So while near-term we are, still,
Nvidia's
I would
at
say
182.
cautious
Is it
with
really?
respect to the price of crypto overall, long-term we are still very, bullish on the asset class overall.
Holy shit.
Anthony, it's Arjun here. I've been covering
Wow,
crypto
I
for
literally
more
thought
than
they
a
were going to
decade
trap
at this
Nvidia
point,
at some
and
point,
we've
but
seen
like,
these
oh
huge
my god.
cycles before. But I'm told this time it was supposed to be different, and I just wanted to kind of pick up on a couple of those points that people have been saying over the past few months. One was this narrative that actually institutional buyers would be very key here to support this market. They're long-term holders. They're not going to panic sell in these moments of drawdown. One of the interesting stats I saw this week actually was the ETF turned net sellers so far in 2026. So are we seeing the institutions now starting to dump crypto?
In one day.
Yeah, that's certainly an interesting point,
In
right?
one
And
fucking
when you think
day,
about
folks.
the kind of last
171,
comment,
182.
mentioned, right? The drawdown isn't totally about institutions changing their mind on crypto. It's really about who's actually setting the price at the margin.
Oh my god.
A lot of these ETFs in general, they're not purely institutional players. They're wrappers, right? And the flow reflects end investor behavior, not necessarily BlackRock or Fidelities of the world suddenly turning bearish. And so I think the ETF tape really tells you a lot about liquidity, not belief or conviction. And the convexity of that liquidity has been driven recently by a lot of those other variables tied to, again, monetary policy and certain broader secular and sector fears that have really seemed to loom the markets overall in recent days.
One of the other things, Anthony, I've said that probably won't happen this time is that we may not see the 70-80% drawdowns that we may have got in previous cycles. Bitcoin, I think, is around 45% off its all-time high, but there are some tokens, XRP, Solana, that already hit that sort of 70%, 60% mark as well. Are you expecting Bitcoin to be hitting those prior cycle lows?
Well,
come on, bro. I have some better questions now. You can do better than that.
Time now for Options Corner. Joining us to take a deeper look at this chart is Rick Duquette, lead market technician. All right, Rick, so take us through this chart for IGV and what trends you notice.
Yes, certainly a very difficult time for this sector. The chart is obviously illustrates the point you're making. Heavy pressure, IGV down roughly about 24% coincidentally during the same year period as well. And when we look at some of the specific companies in IGV, the top holdings here, just kind of look at the trajectory starting, from the past 6 months or so ago. Just a very difficult time across the board for all these companies. Even the mighty Palantir and AppLove and the outsized gainers are starting to retreat somewhat here. When we look at IGV specifically, we can see that we're coming up to our 52-week lows from the tariff news shock event back in April. 76.68 was that absolute low point there. Around 77 is where our green line is, just to give a general boundary. To the upside, there hasn't been a whole lot to slow our descent here. The last place of interest that I saw was here. We made an old low, and then we had a gap where that was our breakdown point, roughly near 94. So if we were to consider our moving averages that we follow, we can see that for a while things were kind of trending sideways as we traveled in this falling wedge type shape here. But now all the moving averages have crossed below their slower counterparts. The faster ones are outpacing the slower. The closest one at this point is our dark blue 5-day weekly EMA near about 85, lining up with our short-term steep trend line pointing downward in white there. Notice RSI deeply oversold. RSI only goes from 0 to 100. So a reading of 14.8 is really quite low. It suggests heavy momentum toward the downside here in this name. Look for the crossover back above 30 for the bullish signal once again. When we look at volume, the heavy trading areas that we have identified, we're below the kind of the last stronghold here. This area near 81 to 85 has been broken with yesterday's close. So now we're in more relative relatively uncharted territory in this shorter term time frame. Notice as well, very heavy volume recently, suggesting high conviction on the part of traders and a lot of activity at these low levels. Finally, to think about the expected move here next February monthly expiration, about 7.8% during the next 14 days here. So something to consider that could take us below that 52-week low that we established.
Shit's moving
A quick
so
glance
much.
too at our 5-year chart shows we are on the verge of crossing below some very
We're like showing
significant downside
690
support
again.
near the 80 level roughly.
And now the market is
All
so
right, thank you,
confused.
Rick. That's Rick
Who
Duquette,
remembers
our lead
that lady
market tech-
talking about 670 fucking sick? Or she said 575 on QQQ on national TV, and now we coming in with this shit after the fucking after hours that they showed. Right? Imagine the fucking goddamn amount of thinking they're making people do right now. It's fucking nuts, dude. This shit is nuts. Last 3 days was nuts. Fuck today's nuts. Whatever about to happen, nuts. This fucking weekend about to be nuts. Next week about to be nuts. Like, it's everything's about to be nuts. Fucking crazy. Just can't believe they're doing this shit.
S&P Tech, the worst sector of the week. S&P software down 11% in 4 days. Wisdom Tree's cloud ETF down more than 10%. For more on this this group, this whole arena, let's bring in John Belton, portfolio manager for growth equities at Gabelli Funds, and good to see you.
Good to see you, Joe.
They all went up, so I guess they can all come down indiscriminately. But you make one point that I thought was pretty interesting. So if AI eats software, and revenue goes down for all the software companies, and they're less important. And then you simultaneously have the worry that AI
Fix is now down minus 14% for the day. Like, this shit just goes up
is
and
not
down,
as much
like,
of a
every day.
game changer as we all assume. And that's a worry too, adding to the sell-off. Both can't be true. It either puts software out of business and is a dominant force and brings great returns, or it doesn't, and then software shouldn't be going down. They both shouldn't be going down, but it's not surprising in a market like this.
Yeah, it's definitely an interesting, irony in the market right now. So there's all these fears about AI being a bubble and these AI investments not generating returns. But at the same time, yeah, AI is clearly generating returns in certain areas today. So those areas would be digital advertising, number one. I'd say digital commerce goes along with that. Cloud computing, number two. And then I think software, agentic software, is clearly becoming number three. And so I think you can't have it both ways. AI is either a bubble or AI is eating software and other industries. I think it's a little crazy to say both.
The market would tell you, yes, I can have it both ways, because it has had it both ways, has it not?
Right. Well,
but they're both, I mean, they're so extended on across the board, or were, not as much now.
Right. I think case by case, there's certainly examples of stocks
IWM up
overextended
2.6%
from a
today.
valuation standpoint that have been coming back down to earth even before this last month. I think we've been in, a couple months of market rotation out of winners into laggards.
Which ones do you consider overvalued, and which ones do you think, hey, they've still got a relatively low PE? Especially if you compare them to like a Walmart that has a 44 PE at this point. How do you figure who's been overextended and who actually has earned this and is going to continue to grow into it?
I do think a lot of the software companies, if we rewind back 6, 12, especially 18 months ago, hindsight's always 20/20, but we're probably overvalued. Overall, not all, but many were overvalued relative to fundamentals that were starting to decelerate, and there was disruption risk that was starting to percolate.
Accelerating.
I think a lot of, on the flip side, a lot of the large tech platforms, the ones that are benefiting from AI and see less obvious AI disruption risk, are trading at pretty reasonable valuation multiples today. Now, valuation's not an investment thesis in and of itself, so those multiples can always derate further or start to re-rate. That's always going to be hard to call, but I feel pretty comfortable with where the large tech companies are trading currently.
So they all went up. They all came down. If there is a rebound, do you expect it to be more discriminate in terms of looking individually on a case-by-case basis at this point, or do they all go back up?
Yeah,
or do they not? They all continue to go down.
I think it's going to be case by case, and I think different businesses face different levels of disruption, and I think different stocks have become relatively more or less dislocated versus fundamentals. So yeah, I think when I look at things today, what's happened over the last week or so, it's been, indiscriminate selling, treating everything the same, treating the most obvious AI disruption case right alongside with the much more insulated business models. And I think from here, it could take some time to digest. The longer this sell-off continues, the longer it can take to pick back up the pieces. But I do think there's going to be pretty interesting opportunities on the other side of this.
What the fuck is today, man? What is this fucking mega fucking ultra fucking candles up? And what the fuck is this one mega candle? All right.
Well, I mean, just take a couple of the names that have reported this week. I think
this
Google and Amazon both reported this week, both sort of earnings that the market has, for lack of a better term, puked on numbers that were pretty strong alongside really aggressive investment CapEx outlooks, and I think these are just two companies that are.
What the fuck?
That's what we're talking about right there.
That's a short squeeze if I've ever seen it in
really
my
didn't look
life.
like
6.4% up on
a
Nvidia.
day of reckoning or coming back to earth on I mean, it
so
does look
crazy,
more
man.
so on maybe Amazon, but certainly
Life is so crazy, man.
Well, yeah, Amazon now. I don't ever remember Amazon
Third in
trading
danger
at
now.
this
No
multiple. You brought up
confirmation
Walmart
rejection,
earlier.
but what
I don't
the
want
fuck,
Walmart
man?
to be
This is
catching
fucking
strays here,
nuts.
but Amazon's, I think, over 20 turn PE discount to Walmart now, which is it's just interesting. I don't think that's the only reason to buy Amazon, but I think that extends your upside case if and I think when they start to get fundamentals, going back in the right direction.
Would you just in general think there's something to
This shit is crazy.
the concern about software companies?
I do think so, and
bearish.
I think
This is
if you've played around with or
bearish,
checked out this Claude Code tool, that
bearish, 3/3 cycle.
In our spare time.
As much as I love writing my own code, if I could, spend less time, on a high performance Pascal for my Commodore computer. No, I don't. So it really writes code.
Rick Sherlin compared this yesterday to a forest fire that kind of burns through software every 10 to 15 years. Is that what you think this is? Like,
well,
laying waste to allow the new stuff to come in?
Yeah, I think so. Software. There's several reasons why these software businesses have been so strong. I don't think that the code itself has ever been the real secret sauce in software. I think it's been identifying a workflow, creating code against that, and then building like a go-to-market organization commoditizes the software writing piece of it. But to answer your question, I do think software is in a moment where they have to figure out
this shit's a
how do we coexist with
$7
this
fucking
new
stairway.
technology?
Like
How do
this
we
is
use
a
it
$7
to
move up on
improve
SPY
our products, and how do we pivot
I
our
don't
business model
I don't
to
even know what the
survive?
fuck they're doing.
Because
They
it's
just
definitely
created
a
so many
moment
fucking
that
clothes,
doesn't
and
come
there's
around
so many
often where
fucking
there's
puts
an
down there. They just
existential
go
risk
like,
now
what
for the
the
space.
fuck is this shit? This is fucking crazy. This is fucking actually crazy. I mean, I'm guessing there's some sort of range locked box here they're testing right now, but this is just sick. No matter what happens right now. Man, they cooked my contract like fucking 40%. My shit expiring next fucking Tuesday. I don't even know how. Back a little bit, like what the fuck? This is sick. Man, what the shit? Market moving so fucking much right now. It's like the fucking price on SPY and QQQ. Literally, look at that fucking 602 from 606, 607. We were at from fucking 598. Like, this is what I mean by what that lady is saying. It's terrifying the shit out of me. Like, That lady on national television yesterday said fucking 575 QQQ. She's fucking doing. Like, what the fuck are we talking about 575, bro? Like, that's the most terrifying shit I've ever heard fucking going into next week. But she's saying that on national fucking television, and the market is moving fucking $5, $10, $15, like on fucking nothing. Heartbeat. Fucking just whoop. And everyone's like, oh, what happened? Is it news now? Oh, what happened? Oh shit. Oh fuck, what happened in the news now? And like, it's fucking literally fucking, the thing is moving crazy. There's so much volatility right now. The thing is moving actually fucking crazy, dude. Oh my god, I can't even fucking. It's either this shit is fucking making Vegeta fucking Goku, or this shit is either fucking just
the jobs report because of a short government shutdown. It looks like we could have another one, partial shutdown, at the end of next week. What do you make of this?
The bears are trying in a 3/3 right now.
This is muddy data
near
picture
VWAP.
where
This
we
is
don't
3/3
get the
bear
things we
cycle
need
happening.
in time.
This is 3/3 cycle.
Well, so first of all, it hasn't been jobs day in a number of months anyway, because we're not getting any of those. So I think the last 3 months we've had negative.
The bears are deciding whether to break the VWAP or not.
We still had negative.
VWAP breaking, VWAP breaking,
Listen,
VWAP breaking.
It's a little trickier when you
VWAP breaking, VWAP breaking, VWAP breaking. Time
published
is
reports. The markets pivot off it. By the way, the volatility markets, you
it's
strike
5 minutes
a lot of options
5
in
minute
and
rejected
around
like fucking nothing
those
from the
dates.
HOD.
So it does create a little bit of trickiness.
This shit is
that
sick.
being said, I mean, particularly for jobs, and we've talked about it a number of months on your show.
My God, look at
You
the
look
MACD,
at what we got yesterday. Look at the jobs report. Look at the Challenger job counts. You look at the claims data. You look at the ISM services in terms of jobs. Like, there's no ambiguity around where we are in the jobs market. We're having a really tough time. We're watching productivity explode higher in terms of growth being really good, but a job market that's really tricky.
That dichotomy, Rick, is the most fascinating. Well, there's a lot of interesting stuff going on, but it's one of the most fascinating things about this economy, because it's difficult for anyone to say, even with jobs looking very challenging, that we're heading anywhere near a recession. As long
Look at that fucking
as the
pullback,
Mag 7 is spending what, like 2.1% of GDP on capex, as long as a government's running a 6% plus deficit, is this economy going to be okay? Even if the jobs market starts to have some cracks in it.
Bearish cycle is here. Bearish, bearish, bearish. 2/3 going into 3/3. Bearish, bearish, bearish. Bears are in control. Bears are deciding whether to push lower past VWAP or not in a bullish day. God candle coming at 10:55 spike in the 3/3. That is such a middle finger from the market. That is such a middle finger from the market. Alright, reject it from 10:50 to 10:55, and 10:55 pounds. The market deciding what to do. That could turn bloody now. Fuck, this is actually scary though. How the fuck does anyone know above 690 or below 684 right now? Days bullish, turning bearish, mixed still bullish, scary as fuck. Cycle confirmations are building. There's no cycle confirmation long or short or downwards anymore. Market is just building with everything involved almost. Is the vibe I'm getting. Intraday, into tomorrow, into Monday, I mean. What the fuck? What the fuck? The MACD freezing too. MACD freezing too, coming downwards right now. It's 12. 10.55 bouncing to 12. 12. Whether this is the Bulls or the Bears in control, they're deciding what the fuck to do into 12:05. So fucking life or death cycles happening. And I'm in fucking Tuesday. It's far as shit for me and it's moving like fucking crazy. Maybe it's bull leaning today, but it's moving my shit crazy. I don't like it. If they go higher, VIX gets crushed and it goes even worse. If they reject, it barely comes back. Like this is almost trappy on all front because of the VIX being like this, and this shit sucks. Maybe if they go lower, the VIX comes up and I'm saved. I don't know. But I'm into fucking next week right now, and this bitch is moving like fucking 0 DTE. Like that's the fucking vibe, and it's fucking nuts. It feels like 1 DTE, like it was 2 days ago. It's moving fucking crazy. I just can't believe it's moving crazy against me, using theta and VIX and everything. And everything. And all the news coming out.
Welcome to Morning Brief. I'm Julie Hyman. Let's get to the 3 things you need to know today. First up, stocks pointing to gains to close out a volatile week. Wall Street seeing the worst sell-off in months as AI concerns fueled a rotation out of tech. The State Street Technology ETF on track for its worst week since April. If you look at one ETF that tracks software, IGV is having its worst week since 2008. Plus, Amazon is sinking after announcing it plans to spend $200 billion on its AI build-out this year. CEO Andy Jassy says the money would go toward the company's Amazon Web Services cloud unit, calling it a, quote, extraordinarily unusual opportunity. And Bitcoin is off its lows after briefly falling below $61,000. Still, the cryptocurrency is hovering below that new $70,000 level. It is down nearly 50% since its peak in October. Let's get a check-in on stock futures here. We are seeing a bounce this morning. Will that bounce last? That remains to be seen. But futures across the board are up by about 0.5% for each of the major averages. But I want to get right to it. Let's dive into one of the biggest themes of the trading week, with nearly $1 trillion in market value wiped out by that software sell-off. But of course, it hasn't been limited to software. But take a look at some of the biggest names in the sector. ServiceNow, Salesforce, Microsoft, all of them coming under serious pressure this week as fears over AI disruption has weighed on investors. Joining me now is Dave Mazza, CEO of Roundhill Investments. They have a number of ETFs that include a lot of these names and other buzzy names. Dave, it's great to have you here to kind of like digest this crazy week that we have seen. There have been some precipitating factors, right? We had Anthropic rolling out some new products. We had OpenAI rolling out some new products, which rekindled perhaps these concerns that AI is going to eat software.
It's really showing that it ain't nothing bearish right now. The market is really showing that ain't nothing really fucking winning except a little bit fucking up. But I mean,
what are you thinking about? What's top of mind for you?
This shit is not good.
If you look at the broader markets, I mean, we're really not that far from all-time highs, but it feels much worse because, to your point, there's been a lot of damage under the surface, particularly in what we'll call high beta momentum names. We've seen a significant reversal in their performance. So the best performing stocks over the last week, or the best performing stocks over the last year have some of been the worst performing in the last week. And those that were out of favor have now come back very aggressively. And there's a few factors.
I hate these damn little spikes. Like,
if we look at the sort of cohort,
it's a fucking play with the emotion to the max.
Many people have loved these names. And when we see sort of the impact that
when it happens so fucking fast, it's like
that starts leading through to the broader market, causing a lot of turbulence under the surface. So I think we're at a period for
now they're spiking up. Fuck, I wasn't even talking about that spike up. I was talking about the spike down.
There's a lot of technical factors at play when you have leveraged ETFs, zero-dated options, all in the same trades. The second that becomes to crack, the pain can kind of exuberate very, very quickly.
Yeah, and that's definitely what we've seen happen. I do want to point out as well, even that IGV ETF, which is one that we're watching really closely, which is sort of software plus, right? That is down about 12% this week, the worst since 2008. But the sell-off didn't start this week, as you well know.
This shit is a terrible
IGV
chop.
actually hit a record back in late September, and since then has fallen by more than 30%. And I wonder, I think about sort of Liberation Day.
Oh
there
my
was a big
God.
decline in software stocks and everything at that point. But the sort of key there was the unknown, right? What is tariff policy going to look like going forward? And it seems like the unknown here, nobody really knows which businesses are going to be disrupted on what timeline
These cycles are
and
actually
by how much.
humongous.
So if you don't know that, can you come in, can you step in and buy any of these names with any confidence?
Yeah, look, on one hand, market corrections are actually quite normal. They're healthy. We need them actually for the market to be on strong footing to continue moving forward and grinding higher. What's a little bit scarier this time around is exactly to your point. Around last year, if we recall, in February, we had the DeepSeek news. Tech AI stocks fell really sharply, thinking there was no longer going to be demand for NVIDIA chips.
This is crazy. Maybe they do want to clear the divergence at the roof now, but bro, this is fucking nuts. What the fuck? We're moving $3 every fucking 10 minutes.
For the market to recover very quickly. So I think investors are starting to question, is this actually more of a DeepSeek Liberation Day moment, or is this more like 2022, of course, when we had Meta's concerns really bringing down the broader tech sector? What's interesting this time around, though, even if we look at Amazon's results, of course they were mixed, not really a clean beat, but AWS came in better than expected. These companies are generating, particularly the Magnificent Seven and mega cap tech, unbelievable amounts of revenue, growing and accelerating that revenue at strong paces, which just simply by the law of big numbers is sometimes hard to fathom. But the real concern is, what does the future look like? We know that Amazon guided to 200 billion of GDP. That's roughly the GDP of Greece. If we look at all the hyperscalers, they're now projected to do over 600 billion in GDP. That's the GDP of Sweden or the GDP of Massachusetts. So the numbers are massive, and I think investors are now kind of really being more discerning of saying, well, hold on, I thought we were going to start seeing return on investment in 2026. Now you're telling me there's more spending. So people are really pulling back before they begin to say, how much do I want to value a company, even if it's growing, knowing that they're moving from a capital light industry to maybe more capital intensive industry.
And Dave, I wanted to play for you some of the commentary that we've been getting throughout the week, kind of looking at what investors should do now, how they should be reacting, and then you and I can chat about it. So here's what a few folks had to say.
We actually think that software companies are overly maligned right now. They do provide very valuable services to their customers. They're still very good businesses, growing fast with good margins that can scale well and are hard to switch out of.
What we've been telling people even coming into the year is like, look, let's start to diversify away from some of this AI trade. And what we watch is leading indicators of the economy.
I'm adding into next week here.
We watch
Tuesday
where the Fed
again.
is ultimately likely to go. And all of that suggested
I'm like
to
fucking
us
tripling
a
down
broadening of the
almost.
market and a weaker dollar.
As we think about investors rotating into what I would call old economy sectors and stocks, whether that is transports, regional banks, chemicals, oil and gas. And I think there is a good reason for that. And this week's rise in PMI, looking at manufacturing activity, expanded at the fastest pace in over 3 years. So there is hope that we're seeing a turn in the industrial cycle after a long period of stagnation.
So obviously, Dave, a lot of different opinions in there about what to do now. I mean, the other thing that traditionally people would have done now was to go into safe havens, or what they perceive as safe havens. But if you look at the traditional havens, obviously gold and silver have been incredibly volatile. Bitcoin, which was seen by some as a store of value,
It's almost a
has not been a very good
0.5
store of
fib
value.
from
So
the drop.
What do people do now?
696
Yeah, I mean, even
677, and we're at 687 right now.
And sort of some of the
And
confusion, I think,
687 too now.
settled into markets.
This is
at least for the
wild.
time being. And where I think investors are rightfully so looking for other opportunities, right? Most people have identified the AI trade. From my perspective, whether we're talking about retail investors or institutional investors, not a lot of folks have been looking at staples and energy, which are the two best performing sectors year to date. Interesting pairing though, because of course staples more of a traditional defensive sector, energy less so, much more cyclical, because at the same time, if you look at the economic data, as one of those other guests said in the clip, it actually has been improving, even though it certainly does not feel that way. Then you have the challenger job cuts data really questioning people about sort of the health of the economy. So I think investors really, especially with sort of some of those technical factors that I mentioned early, pull back pretty hard. I think net, of course, because of metals, particularly gold and silver, have become a bit of the momentum trade, are not providing that store of value really in the last couple of weeks. But over time, I do think investors do want to have a more diversified, broader portfolio. Those are areas which are traditionally uncorrelated to stocks and can be very valuable for investors' portfolio. And then at the same time, I think a lot of folks don't continue not to recognize this. Non-U.S. investments have done particularly well over the last year. And maybe if we look going forward, there could be further opportunities there too. So there's still areas of the market that remain undervalued.
I should have left my dust yesterday. Fuck. I got so fucking greedy too.
But because everyone has been so focused on sort of AI disruption and some of the adjacent themes that can come from that, I think investors have maybe over allocated to those areas. And what we're seeing on one hand is a bit of a rational pullback from that, a reassessment, particularly to your earlier point that it's really difficult to ascertain exactly what impact is Claude and other AI sort of models going to come out to really disrupt business models going forward.
Dave, great to see you. Thanks a lot for being here.
Thank you.
And as we were talking about, of course, one vital cog in big tech is Amazon. Those shares are
Today's a very, very dangerous day. This weekend's a very, very, very dangerous weekend.
The revenue outlook from Amazon fell below Wall Street expectations. And Amazon's planning to spend $200 billion in CapEx this year. Rohit Kulkarni is with me. He's a senior research analyst at Roth Capital Partners. I mean, I'm getting tired of saying the CapEx number was higher than we expected, Rohit. Like you guys all on the street, I guess do you just have to raise all your CapEx forecasts at least a quarter or even a half, right, going forward? Is that what needs to happen?
Yeah, I think this entire cycle of surprises of, okay, CapEx is higher than expected has been going on for far too long. As in, I think the companies also are putting the next kind of threshold slightly ahead of what the street was expecting. So that environment of negative surprises, and for a company like Amazon that has just far too many surfaces of risk, be it commerce, cloud, ads, and so many other parts of the business, that creates a series of yellow flags, if you will. I think, but you're spot on, Julie. I think we all sell-side analysts should just decide that put the CapEx number so high, so next time all we need to do is
they're doing zero DT, but it's so dirty though. Holy fuck!
I think, what Amazon is doing
That's fucking nasty.
And we like it.
Jesus
we think
Christ, man.
you just need to be patient to appreciate this Gen AI winner, in my opinion.
And in the case of Amazon, ROI is like the mantra right now, return on investment. So in the case of Amazon, walk me through what that looks like.
Return on investment should ideally show up in all three parts of the business. Right now, the return on investment is showing up in the cloud AWS side, where last 3 quarters, growth rate has gone from mid-teens to almost mid-20%. And we see the next couple of quarters that mid-20% growth rate to probably go even higher, given what CapEx has done. So that checks the box very well. That's in line with what Google has demonstrated recently. So we like that. But remember, Amazon is one of the world's largest retailers, one of the world's largest ad companies and media companies. So I think for that to demonstrate some accelerating growth or some direct linear ROI probably takes more time and more money. And that's where this $200 billion CapEx number comes in, that it's a much bigger business, much more diversified business, and hence more money and more time is required. So to get to your question directly, Julie, I think we need e-commerce growth to go solid double digits. It's been between 8 and 11% over the last year and a half.
HOD divergence cleared on SPY and QQQ.
Demonstrating ROI for Amazon, I think we need e-commerce and ads both to grow solid double digits.
Well, what does AI do for the e-commerce side really at this point, Rohit? And how much can it do if consumers, particularly lower end consumers, are challenged?
I think the way we see AI help large companies like Amazon in the e-commerce side is, again, you may or may not have used their AI chatbot called as Rufus. There is that that can help people find the product that they're looking for a lot quicker than what otherwise you would have had to search through, sort through, filter through a whole bunch of search results. So that conversion from a discovery to actually finding to checking out the product, that entire funnel that Amazon has over the last 10 years very fine-tuned to a normal checkout flow, AI can make it a lot faster. So again, I believe we are in a very early inning with that manifesting in Amazon's numbers, but the way it would manifest is more units sold. So for example, in Q4, the number of units sold were accelerated a slight bit. Again, they sell millions of units every day, and so that acceleration is commendable, but we need more. So I think those results, those kinds of tidbits in the next couple of quarters will give people confidence that, hey, you're spending on AI and it's showing in places that actually matter, like commerce and ads.
Rohit, I'll leave it there. Thank you so much for joining us. Really appreciate it.
Thank you.
Coming up on Morning Brief, we'll bring you today's top trending tickers and talk about recent action in the U.S. dollar. We'll be right back. Now time for some of today's trending tickers. We are watching Strategy, Stellantis, and Reddit. And markets and data editor Jared Bluegree is joining me now. Let's talk about Strategy. Stock is rebounding this morning alongside Bitcoin, and the company's reporting results last night, posting a $12.4 billion loss driven by declines in Bitcoin at the end of the year. Executive Chairman Michael Saylor appeared unshaken in the wake of this drawdown on the conference call. He highlighted President Trump's support of crypto as the foundation for gains ahead. That has not worked out so far, obviously.
No, I mean, one of the questions I've been asking people on the podcast and these studios is, in 2025, we had one of the most crypto-friendly regulatory environments ever, and we made new highs in the beginning of the year, but then it petered out, and I'm just wondering what the next catalyst
really
is.
Showing
we were
690
yesterday, Julian, I think, has to be another business use. But let's get back to the main point, because I've got some comments here from the Strategy earnings where it posted a loss of $42.93 in EPS. But here's benchmark with a price target of $705. That is high. Strategy posted yesterday after the market close, landed on a day when markets were in no mood to entertain nuance. Bitcoin was sliding hard, risk assets were buckling, and the company's share price fell 17%, dropping to its lowest level in roughly 18 months. And here's another one, Cantor Fitzgerald. While the Q4 print gave us another look at the company's financials, investors are understandably more focused on Bitcoin price dynamics and Strategy's ability to manage a crypto winter. There's that term, crypto winter, which, I mean, it's hard to deny that we're in that. Crypto winter means you got to find a bottom sometime, but that usually takes some time.
If you're leveraged on the way up.
Divergence at the roof cleared.
Well, that brings me to a chart here. Let's go to the Wi-Fi Interactive. We can see right now Strategy is up $7 or 7.5%, up to 115. But I want to show you Strategy versus Bitcoin, and this is something I've been showing for a while. This is a one-year look, and purple is the iShares Bitcoin ETF as a proxy. Strategy is in cyan. You can see Strategy is down 68%, and where they diverged was really in the middle of last year, August, September, and you can see Strategy, they say it's a Bitcoin proxy, but it's also kind of like a high beta play. It went lower than Bitcoin in the April sell-off and went higher on the rebound, but they have very much diverged. Now this year, it was looking a little encouraging because Strategy was once again outperforming Bitcoin until about 5 days ago. And I'm just going to go to a Strategy chart here.
IWM up 2.85%.
Down 25%. And that hurts.
That's crazy.
So, there you go.
It does. We'll see if it'll continue to hurt even as the stock is bouncing in pre-market this morning. We'll see how long that lasts. Let's talk Stellantis too.
Short squeeze all these last couple of days, but like that's incredible.
Write-down as it scales back.
Never before seen that in my life.
And before we kind of get into the fundamentals
how they did this.
I just wanted to pause for a moment.
You're gonna just fucking
and just
slide
talk
for
about
the
it. We've talked about this before. The moment that we are in, that a company like Stellantis is down 25% after earnings.
They're big.
But this is now the norm, right? That we see these enormous swings after very large companies that used to be very staid. Maybe you would get a single-digit drawdown after the earnings, because the options activity and the retail activity has really supercharged these kinds of reactions in the market.
Yes, I think investors are conditioned to a much faster-paced market, and you can criticize the company, well, they should have guided or whatever, but to your point, a lot of stocks are, in fact, the entire market is kind of acting like this.
Yeah.
And I would point out, to the detriment of investors, the last few sell-offs that we've had, especially in April of last year, it was so quick to get back to record highs here in the major indices that I think investors are a little bit inured about the downside here. Oh, we'll just get back to break even in a few days or weeks, but that's not typically how the market works. So you got to remember 2022 and not necessarily the pandemic, because that was another fast rebound. And I don't think it's going to be long as the tech crash bubble. That took years and years to play out. But we definitely have a much faster market. To your point about, let's get back to some of the earnings here, though.
Yeah.
UBS, which has a buy rating on it, said this should be the clearing event we've been waiting for. However, Auto, which I don't have a price target, but they do rate the stock neutral, they have a different outlook. It's hard to call today's announcement a clearing event, yet given the uncertainty still surrounding the execution in the coming quarters. So clearing just means that you have a reset and investors can finally say, okay, we're starting over here, but that's a little bit muddied now. We got different opinions on that.
Yes, interesting. That's what makes a market. All right, let's talk Reddit. That stock is jumping on the back of earnings, which beat analyst expectations on the top and bottom lines. The platform's first quarter guidance also coming in strong. It announced $1 billion share buyback also, and those shares up 6.5%.
Yes, so I'll give you a couple of analyst reports on this as well. Here's Bloomberg Intelligence, which doesn't really, they're not quite an analyst because they don't rate stocks, but Reddit's first quarter outlook indicates top line growth is likely to remain above 50%, supported by steady engagement and continued advertising momentum on its platform. But there are concerns about the US growth in terms of users that are logged in, and that's one particular metric. So here's Truist Securities. The results and outlook show solid momentum across monetization and user growth. And then RBC, Reddit's fourth quarter featured a big beat on top and bottom lines and solid guide for Q1, offset by further deceleration. That's what I was looking for in US logged in DAUs, that's daily active users. That grew 5% versus 7.4% last quarter. And that reinforces the LLM bear case. So what does that mean? Well, so the growth is down a little bit. It's still growing, but AI is kind of taken over everything, and there are concerns that it's eating into users staying online longer. And so that's the concern with Reddit. But as you said, it's up in the pre-market here, 6.5%.
Thanks, Jared. Appreciate it. All right, let's talk about the dollar. It's fallen about 9% in the last year as investors' risk hedging strategies shift away from the U.S. Yahoo Finance's Jake Conley joins me now with more on what the market is showing. Two buzzwords that we've been hearing more about: de-dollarization and the debasement trade are like the two things that people are talking about. So how is this all happening in the market?
Right. You go back to last April, Trump's Liberation Day announcement with all those tariffs that came into play. The dollar dropped several percent right after that, has remained depressed and kind of flatlining over the past year, still down 9% from the past year. So it's a sizable drop. While that's been happening, you've seen a lot of other currencies picking up in its place. Not only the strong ones like
they
Swiss
killed the
franc
fucking
or the
putsman,
euro, but also some of these more risk-on emerging markets currencies. South African rand, Brazilian real, Mexican peso are all doing really well against the dollar. Is it debasement? It's probably too early to call it that. Analysts at Bank of
even
America
my next
saying
expiring.
if it was going to be a full debasement trade, you'd see everything in the U.S. doing poorly. The dollar would be down. Also, the stock market would be down. You'd see risk in the credit markets. With the exception of the last couple of days, with the software sell-off, stock markets are actually doing pretty well right now.
18.5, if you can fucking believe it or not. Literally VIX crush.
It's probably too early to call it debasement, but it's certainly early enough to say that investors are starting to think about risk differently.
And what the difference is, just for people who are
They
watching,
like completely crushed the VIX.
Is if the dollar is the world's reserve
From the
currency,
top
that's
to the
word
bottom.
people use a lot when they're describing the U.S. dollar.
Or we gapped up
It would be
right
a
here.
more fundamental shift away from that would indicate debasement,
Fucking
right?
crazy
if,
with this bitch.
If global central banks, which yes have been adding to their gold positions. But if they had been
Now,
getting rid
the
of
one day is
dollar
coming in
assets
like this.
in a more dramatic fashion, to your point, across the board, that would be a signal more of a broad-based debasement.
Exactly. You'd see some of those really broad movements out of central banks globally. But I think the difference here, Julie, is where the risk is coming from. Years past, risk emanated from outside of the U.S., and the U.S. was able to act as a stabilizer. It was kind of this global safety haven. The dollar was seen as a safe haven asset. In the last year or two, you've seen that picture change for investors. More and more geopolitical risk is coming from inside the U.S. You see the tariff threats, Trump's moves on Greenland, on Venezuela. All of that is now saying to investors, what used to be a safe haven is now where a lot of this risk is coming from.
Right.
And now that you have Kevin Warsh being nominated for the Fed chair, if the Fed were to start cutting rates, as Trump
And
has
I'm in at the
asked for,
top,
it's
but
not
like this
clear if
shit
they're going
feels
to, that's a
crazy
good
because it's
decision.
like
But
bringing
if
it
they
lower
were
and
to,
lower.
that's going to bring down the yield and bring down some of that premium that investors would usually get from a dollar and usually expect from it.
Right. The call is coming from inside the house.
Exactly.
Thanks, Jake. Appreciate it.
Thanks, Julie.
Coming up on Yahoo Finance is opening bid. Executive editor Brian Sazi is joining us to let us know what to expect from opening bid today. Tell me.
Hello, Julie. Well, first up, we got Roblox CEO Dave Baszucki coming out right at the top of the show. The Kevin Hart's going to come on later and talk about his on-fire tequila brand. But, Julie, I just want to get my show done because I want to see you salsa dance on Bad Bunny. I've been hearing like little murmurs throughout the newsroom.
I don't know if we'll be playing Bad Bunny because of fair use rules, but that's a whole nother
But I want to
topic.
see you dance, Julie. I need to see it.
You can see me dance.
Warning, yet the stock has gotten obliterated. Another moment has been tech earnings, where behemoths like Amazon have reminded the world the insane amounts of money they will spend to rule the AI world. Amazon said last night on its earnings call it will spend $200 billion on CapEx this year. That's way more than analyst estimates for about $120 billion. Here's Amazon CEO Andy Jassy justifying this whopper of a number.
When you're growing 24% year over year with an annualized revenue run rate of $142 billion, you're growing a lot. And what we're continuing to see is as fast as we install this capacity, this AI capacity, we are monetizing it.
Another moment has been the rout in Bitcoin that is causing massive wealth destruction to the industry's richest players and a host of companies that have pushed hard into crypto. Bitcoin prices are at a 15-month low. And
I mean, the market just pushed up 100 points technically.
Cardano
pre-market
founder
counting.
Charles Hoskinson seems unfazed by losing $3 billion in paper wealth
We
amidst
just
the
moved
bloodletting.
100 points.
I've lost more money
From
than
the
anyone
real
listening
bottom,
to
6,
this.
7, 8,
Over
3,
$3 billion now.
6, 8, 90.
It'd have been real
9.
easy to cash out. Just walk away.
110
Do you think I
points.
honestly care?
And we
if
did
I
a
lose it
200
all?
points
Do you think
from
I'm doing this
7,000 to
for money?
6,800, right? So
You're pretty mistaken
this
if
is
you do.
somewhere to 0.5 fib too.
I think he does care. Just going to leave it there. I'll leave you with this thought, though, before I get to our big guest for today's show. In Roblox, CEO Dave Baszucki and actor, comedian, entrepreneur Kevin Hart. If you are missing these key moments in markets, do a better job. It's great to invest for the long term, but in order to get to the long term, you have to endure the short terms. Don't forget about that one. All right, if you are a company doing something software related, it has been a tough week, as I just mentioned. Quick moving AI developments out of Google and Anthropic has caused a major reset in software stock valuations. The fear here, the very business models of software companies, both large and small, are under full-on attack. Whether this proves true is anyone's guess. It's not like big software companies aren't involved in AI. That said, I am finding it refreshing right now when positive fundamental developments in a software company get treated as such.
It ate
Entertainment
every
player
single
Roblox.
bear in the
Company
last
beat
4 days. It
analyst
spiked down,
estimates for
spiked down,
bookings,
spiked down. It
users,
just went up
and
fucking
on the bottom
nuclear
line,
Elon
for this
rocket.
year, Roblox sees sales up 23% to 29%. Bookings are seen up 22% to 26%. The
Pretty
stock
crazy.
is up on all of
Woke
this.
is God.
Good to see it.
I
Roblox
also
founder and
expect
CEO
the
Dave
market to
Baszucki
pull
is
back
here
a
with
little
me.
bit, but I
Dave,
don't know about
also
a
good
dump.
to see
There was
you.
a lot
Every
of
single analyst
puts
note
yesterday,
I've seen
right?
this morning, Dave, they are all.
Does anybody in our WhatsApp group remember the picture we sent in the group chat yesterday, right? Let's go see real quick the picture that we sent in the group chat yesterday, right? Why is my WhatsApp group not catching on? Man, the WhatsApp group saw the amount of 0DTs that were expiring today. We're discussing. There it is. All the Nvidia puts getting fucked. We saw it at 8:52 in the morning, right? Right. Let's zoom up. I don't know why it's not zooming up. Okay, well, I will forward it so we could see it. There we go. That's the amount of 0DT SPX calls and puts, right, that we sent at 6:52 in the morning today. Because why? I woke up at 6 in the morning today. And what is the second picture? The second picture is the put and call ratio of SPX. Right? This is SPX, 0DT puts and calls. This is SPY, 0DT puts and calls. Right at 6:53 in the morning. Imagine what happened to fucking all of them. Imagine what happened to all the Nvidia puts that were cooking below 180 on setup, and they fucking cooked it indeed. Alright, look at this shit. Nvidia trend line held below 180, and in one day it's at 182. And people are like, "Oh, what the hell happened? 182 now Nvidia. Oh, now it's different. Oh, it's literally just set up." Market's still popping. Maybe this shit doesn't stay, or maybe this shit does stay up all day like this today, but until IWM pulls back, maybe there's no hope of a pullback intraday. There is a gap down below, but that shit does not have to fill tomorrow or Monday or Tuesday or anything like that. We can pull back a little bit and then end up somewhere a little bit lower and then be like, oh, now we're showing the gap. That's true, but
Everyone, it is Thursday, February 5th, and I'm Deirdre Bosa with another Tech Check live stream. You might remember if you tuned in a few weeks ago, we sat down with the Replit CEO, Amjad Masad, and talked about this AI coding revolution. How people like me and producer Jasmine with zero technical background are suddenly building and shipping real apps. I'm not saying they're any good, at least mine anyways, but do. That's
models can use tools.
Topic fighting OpenAI shots Kimmy to do.
We take a bench.
What's wrong with my computer today? It's like fucking slow as shit, frozen and everything. It's a VIX crush. Going straight down out. VIX crush. One way to fucking do it. drain every single put out there in the world, and that's crazy.
Right, let's get to Kevin Green now, who joins me, senior markets correspondent, because we've got some data to get you across. Very important in light of some of these kitchen table issues here. We've got a UMISH survey of consumers. Mine's telling me to refresh my browser, so I don't know if your internet's better than mine, KG, but what are you seeing there?
Yeah, so we have consumer sentiment data that came out actually better than the street's expectations. We do see the February print. This is the preliminary print coming in at 57.3. Street was looking for 55 even, and that's actually an improvement from what we saw for last month at 56.4. When you're looking at the one-year inflation expectations, I think this is the big headline mover here, Sam. That actually came in at 3.5%.
We're actually at 688. We're going slowly and slowly higher to 690. So
for inflation, at least for the next year, and even if you're looking at the 5-year inflation expectations, that came in at 3.4%. Previously, it was at 3.3%. Consumer
reject certain people. Half the people thinking 690 coming. Half the people thinking fucking this shit. Oh my lord.
54.9. That's better than last month's print as well. So a lot better print when it comes to consumer sentiment just in general. Obviously, these have been kind of trailing to the downside here. Not only when you're looking at the University of Michigan data set, but also when you are considering the Conference Board data set that also has been kind of moving to the downside near COVID lows. So a big improvement from what we saw for last month. Maybe that's enough to kind of turn some of these sectors around.
Yeah, I was going to say, I think you hit the nail on the head there, because it seemed like a case of the tale of two consumer sentiment surveys, because we did actually have the Conference Board coming out with the lowest level in some 12 years, which was in stark contrast to what we've heard from UMISH about people feeling somewhat a little bit better about
crazy shit yesterday. She said that crazy ass shit.
Not that they were at 606. Obviously, we've got a lot of data next week with respect to jobs and inflation, but let's just get your thoughts on the market. Obviously, we're stabilizing. We've seen a nice bounce back, particularly for some of these chip stocks. Climbing out of this route, we've seen this 3-day tech slide and off here. Even some of the softwares are catching a bit this morning. Just talk us through what you're seeing there.
Yeah, I mean, you're seeing around 82% of the stocks in the S&P 500 in the green so far. And actually, if you're looking at the Mag 7, what's really dragging that up at this point is Apple as well as NVIDIA. NVIDIA has been up over 5% in the session. But the Mags ETF, last time that I checked, was still actually negative on today's session. It's still down about 0.8%. So you are maybe still seeing some issues or some pressure when it comes to some of these names, especially if you're looking at Microsoft. Not that really great of a price action for this morning. But the broadening out trade is kind of back into effect. We did see that kind of losing a little bit of momentum yesterday. Consumer staples moving to the upside fairly aggressively here. You also have other sectors like some parts of consumer discretionary that's actually doing pretty well. So we just have to be able to hold these levels. Volatility is still relatively elevated. We have a 19 VIX, and you are still seeing very low liquidity within the market as well. So wide price, aggressive price swings both to the upside and downside can occur. I think it's going to be a win for the bulls if they are able to recover the 69.30 level on the S&P 500 this week, close above that. I think you get a little bit more confidence that maybe we're going to be able to hold. For now, technically speaking, hit the 100-day moving average for the S&P 500. Not surprising that we do see a bounce that next day. I think the follow-through next week is going to be critical for this market.
Okay, so the VIX has backed off for us this morning. Amazon, though, KG, I mean, while we are seeing chips rebounding, Amazon's down 9%. As you and I were discussing when we broke these numbers yesterday, the quarter didn't look good. $200 billion in spending this year. I mean, the market's still not convinced. So that takes us to a total now of $650 billion from Microsoft, Meta, Amazon, and Alphabet. But as we've seen, some have been punished, some have been rewarded, but the market is looking for that justification. They want to see if they can back it up.
I'm going to go get a cup of Coke.
On the moves we're seeing today, and particularly
Coca-Cola bootleg version.
Some of the Broadcoms, the AMDs, which are gaining off the back of this on the expectation they'll be beneficiaries of all this money.
Yeah. I would say that the market is a little bit concerned when it comes to the CapEx spend, and even the companies that were initially rewarded, like Meta, I think that's the reaction that you're talking about, actually has reversed all of those gains and then some since that earnings announcement. So the CapEx spend is ramping up. For Amazon, their guidance moving forward, you are still seeing maybe revenue coming in slightly lower than the street's expectations when it comes to guidance, maybe a little bit of a deceleration, kind of trend to what their commentary was laid out within that earnings release, as well as the conference call here. here, and it might be a little bit of concern. I mean, some of these companies are going to get fairly close to not having positive free cash flow if this rate of change for CapEx spend does continue. That also then means that probably multiples do come in here a tad bit. So a concern for this market, kind of talked about it this morning in Morning Movers. Sam, this is more like a kind of a rolling correction that we are seeing in this market. A lot of the froth is being taken out. Software already has seen a correction. Microsoft is already seeing a massive correction as well. And so a lot of these multiples are taken out. But the fact that we have a broadening out of this market is also giving us a little bit more confidence that we can actually remain at these current levels, at least right now. If we do see a sell everything type of an event, that's where I think it gets really aggressive for the S&P 500 for a pullback here. But CapEx, definitely going to be on the radar for the next couple of quarters.
There have been moments in history, KG, when you have actually said that soybeans are the biggest story than Nvidia, and you're actually watching that commodity in the market today. We've had some official commentary coming out from the Trump administration around, obviously, the desire for China to buy more. But what are you watching?
The viewers love soybeans, Tim. That's why I keep bringing it up. Yeah, we are seeing this continuing to move to the upside here, trading up 1% today. There's this optimism that we will see China potentially ramping up their purchases of U.S. produced soybeans over this season. Now, we have not gotten that confirmed by China. You could make the case that some of the USDA data that we've seen week over week, some of these unknown destinations when it comes to purchases are probably China purchases. So that's a little bit more of an optimistic take for the market. You get concerned if you are a farmer, though, that these prices move so aggressively that it prices you out of competition once again, and we have seen that. But right now, it's in a bullish phase. Let's see if it's able to hit that $11.40 level and try to remain.
All right, guys, let's do a fucking poll. It's time. All right, the poll is 690 today, or this bitch is about to crash. In your personal opinion, based on candles alone, nothing else. All right. All right. It's this fucking stupid at this point. All right, it's a stupid ass opinion poll anyway. But at this point, the VIX is literally down 17% today, minus 17% after going 11. This shit's fucking retarded. So yeah, 18 it's at. Who knows? Alrighty. I guess it's 8 to 8. It's fucking mixed. Slightly leaning 690, I guess. By a margin. We have 1, 2, 8 people says 690. We have 1, 2, we have 9 people that says drop. Alright, the poll answer actually is 690 skyrocket nuke or drop rocket crash bandit, whatever the fucking goddamn mobile app name is, but it's so fucking retarded this shit is.
Countdown is on and the bets are flowing in. CNBC's Contessa Brewer joins us right now with more on this. And Contessa, here we go.
Here we go. Yeah, the sportsbooks are gearing up for their biggest single money-making event of the year, Becky. If you look only at the handle, the amount wagered on legal licensed sportsbooks in the United States, the industry is looking to set another new record on this Super Bowl, $1.7 billion. FanDuel is the nation's market leader, and I asked CEO Amy Howe about whether her prediction platform is a game changer, especially in states like California, where sports betting isn't legal.
The prediction offer, that product is a great complementary offering to what we already have, right? We have a daily fantasy sports product that you can access in California. But it gives us a nice offering. But it's never going to be a replacement for what we have in the legalized sports betting state, right? I mean, think about 700 markets, a live assortment. You know, in our legal states, you can bet drive by drive. You can do the social betting. So no, we're not terribly concerned that there's going to be a big cannibalization in the states that are legal. At the end of the day, you know, the North Star is still to legalize and safely open up California and Texas and all these other states.
The NFL told me it's willing just to sit back, wait, watch on prediction markets, still very concerned about the potential impact on the integrity of the game. And really, you know, the caution is understandable after those high-profile betting scandals in the MLB and NBA. I asked Amy whether she's concerned that cheating and insider trading could prompt a regulatory crackdown across gambling.
The skeptics are always going to use this as an opportunity to say this is why you shouldn't legalize sports betting, but this is exactly why you should be legalizing, right? There's a $675 billion black market where this activity happens every single day, but it's never caught, right? In the example of, you know, take Terry Rozier in the NBA, we caught that nefarious behavior 5 hours before the game tipped, and we shut them down. We worked beautifully across the ecosystem with the leagues, the teams, our other competitors who are in the market, and it works, right? This is exactly why you want to legalize it, and we're taking a lot of behavior that has been underground and bringing it into the light of day.
And I think that point is interesting. What you're seeing across gambling, Becky, is this.
I said after yesterday's moves up and down, this is one fucking terrible way to go up.
Profits. We saw it in the UK when there was a backlash over problem gambling, where they were limiting deposits or cutting the kinds of offers that could go out to gamblers, and it really hurt the bottom line.
You know, Contessa, there's been a pretty big backlash against some of the prediction markets at this point. So several former governors have come out, namely Chris Christie from New Jersey, who said they absolutely have to be regulated, that they're basically illegal gambling that doesn't do any of the things that legal gambling does for the states, including bringing in revenue for them, making sure they're not marketing to kids and other issues.
We're just up $8 like that.
Scenario here. Kalshi has said that they'd
We're
like
just
to be
up
regulated.
$6.60 like that with no cycle today.
Well, and Kalshi actually
IWM is up 3.11%. There's no fucking joke. This shit's just up.
That is specifically
literally
looking at
up
insider trading, and that they plan to
$8,
publish reports
so
detailing
the
problems that they're seeing erupt.
I've never seen this before on IWM in my life.
Going to be a level of transparency.
I've never, ever. I mean, I guess this was like set up though, like down, right? Created a 3/3. It was playing weird sus that day, and then it made a new 3/3, and then I guess created a new 3/3, and then trapped the 3/3. But like, holy fuck, that's such a crazy counter rally.
That they are for the partners that we've
crazy counter
hook up
rally
with in gambling. Could they be there? Yes. We're comfortable taking a
That's the only fucking thing I can think right now. IWM going down yesterday, lower than that little sus-ass point from 2 days ago when there was like 90 or 80 people watching at the close, right? Barely any people watching on IWM. When IWM, I was like, oh, it's going down 2% or some shit. That was yesterday. And the day before that, there was even more or less people watching IWM that day into close. They're doing the fucking 3/3, and that's the only thing that's fucking actually doing like, oh, continuous. But like, IWM up 2.7% at fucking open, and it's at 3.1% now. Like, this shit is fucking nuts.
Platform that pays nothing. Well, that really helps invest that money in marketing rather than to pay.
SPY is now at 1.5%. It's no joke. QQQ is at 1.6%. No joke.
Christie is a consultant
You know what's
for
crazy?
the American Gaming Association.
I put a cheddar cheese hot dog in the oven, and I'm about to go eat that hot dog in 10 minutes. And by the time I'm back with the hot dog, SPY better be at 685 or I'm
By the way, who are you picking?
All right.
Are you
That's
making
my
a pick for
sad
the
story.
Super Bowl?
Well, yeah, I'm wearing
My
I'm
Monday
wearing green
puts
now,
are
so I
getting
think I'm
fucked
gonna go
into
with the Seahawks. It's
right
a little
now.
not the right
Friday.
green, but I don't really
Not
have
Monday.
a dog
My
in
Tuesday
this fight,
puts
so
are
to
getting
speak.
fucked
I'm
so
here
hard
and
into
it's
right
fun
now.
to be in the hoopla, but this is one where I don't really have a vested interest. You know who my team is? It's the Packers. When I lived in Wisconsin, it was like you join the Packers cult or
It's
you
the
die.
0.5 fib from the move down, but I mean,
you know
this
who
is
else
nuts.
said they don't have a dog in the fight, Contessa? Tom Brady.
Who did? Joe?
No, Tom Brady. And people are really, some of his former teammates are like, you know.
Wait a
bullish.
second, you were with us.
What about his fans?
In a really bullish day, it would just go bullish and chop, 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 pull back a little bit, or stay and then
he
go
says, look,
bullish.
he's,
But
you know, he's an announcer now, and
he's chopping
but
one,
you know,
two,
if it were me,
3 days.
If you're a Patriot,
4 days almost.
Journalist per se.
No, I know, but if you're the
1, 2,
announcer,
3 days.
you can't.
Yeah, but the other guys are able to do it in a better way.
6,900 is somewhere here.
Totally demoralized.
Right, reject would be somewhere here.
From when you were a Patriot, you won all those Super Bowls. Come on.
Obviously, I have a long and loving relationship with the Patriots. Franchise, I'll always be rooting for them, but I'm very excited
Why
about
obvious?
what I see. No, I'm just, if I were
yeah. Because
I'm gonna go get my bratwurst.
Right, but he could have said, obviously.
I'm picking them. The only The Super Bowl, we know this is more than a game. For many viewers, it's about the commercials that are costing up to $10 million for 30 seconds. This year, there will be a face-off between two AI names, OpenAI and Anthropic. Joining us now, Marcus Collins, marketing professor at the University of Michigan's Ross School of Business and author of For the Culture. We've come a long way, Marcus, come a long way. Used to be Coke and Pepsi, didn't it? To be Coke and Pepsi. Now it's, isn't that incredible? Now it's AI at each other's throats.
I mean, I'm here for the battle. I mean, I love the cola wars, but the AI wars feel just a little bit more timely. So I'm here for it.
Yep, but we've seen it before. So is this the only instance this year that you think of a direct sort of engagement with a rival? I guess Lyft and Uber could do it, right? Or
I think you got Lyft and Uber. You've got the food carrier services, Grubhub with Uber Eats. You also have Coke and Pepsi. I'm back at it again. Pepsi taking some jabs using Coca-Cola's polar bear. I mean, when you're on a big stage, this is the time to do it. And if you are a market challenger, your job is to challenge the market leader. And what better time to take a swing at the big giant than on the giant stage?
Well, the more things change, I guess, the more they stay the same. There's so many ways to advertise now, and legacy advertising. You think that it's all digital, or there's so many different ways, but nothing like this for eyeballs. And we talk about. I always need to know if it's 100 million eyeballs. Is that 50 million people or 200 million eyeballs? Which is how do we do it, Marcus?
I tell you, don't count the eyeballs. Don't count the eyeballs.
Takes a while.
Eyeballs are empty. Just because people can see it, don't mean that they did see it. What you really want to focus on is what sticks, what feels relevant for people. What do people walk away with feeling like they were talking to me? And when you do that, those people go share with people who are just like them. And the best advertising, not just in the Super Bowl, but the best advertising feels culturally relevant like that. It feels like it's in the group chat. Like they know all the anxieties, all the insecurities, all the questions that people have about the brand, the category, the product more broadly. When you feel like you're known, that you're seen, that people get me, those brands, they feel much, much more closer to us. And we're far more likely to talk about them and share them.
Would there ever be a reason to run an ad twice? I mean, once it's run, then it's off to the social.
Yo, this VIX crush is fucking brutal.
If it's popular, right? Everyone will see it.
It's the damn VIX dying until the VIX comes back. It's at 18 right now.
That's true.
VIX
However,
crush.
if you can have some, the multiplicity effect that comes from redundancy, not a bad deal. I mean, if you're going to hit twice, what better time to do it than right there?
Have you? How many of them have you seen or gotten wind of at this point, Marcus?
I've seen quite a few. Like this is the new trend, of course, that you air them beforehand, you air them on air, and then you air them afterwards, right? You take full advantage of the opportunity. So I've seen quite a few, but 5, maybe 6 really, really stuck the landing for me that I'm really excited about seeing on the big screen this year.
Can you tell us, or would you have to kill us if you told us? Should we just wait? Should we just wait and decide on our own?
I mean, you mentioned the Anthropic ad, I think is really, really well done. I mean, what a time to take a shot in the eye to the competitors, right? AI is being underwritten by advertising because we're still curious about AI's ability to function as a product service on its own. Really good time to do that. I thought the Comcast spot with Jurassic Park was really spot on. We know nostalgia plays a large role when it comes to on-air advertising for Super Bowl, but Jurassic Park is an old property that still is current today. So it's the perfect kind of nostalgia that the old school audiences get and the new school audiences understand as well. I love the Alexa spot, truly. Right.
My initial push from earlier is down like 50% now.
About AI, that AI is going to kill us, done in a humorous way. That when you see it on screen,
shit's actually nuts, though.
These guys are listening to us. They understand it.
We're at 6,900. All right, 7,000
exactly.
minus
Levi's has a
200, 7,800 plus 100, 7,900.
It's
like we're in fucking high
Levi's
school.
Tell. On their home turf, by the way,
days we move in 300 points.
In San Francisco.
200 down, 100 up, and now
was really well done
fucking
too. Right?
Crazy.
Oh, Levi's Stadium, I think. Isn't it, Mark? I think it's Levi's Stadium, even.
That's right. What better time to be in the Super Bowl than right now if you're Levi's? And then the Grubhub spot I thought was really well done as well, because here's a brand that lives in a category that only talks about the different kind of offerings that it has, but no one talks about the real pain point, which is the fees. And Grubhub's like, we're going to eat the fees. And it's done in a very, very, very tasteful way. Pardon the pun.
I'm really sorry, folks. I had to get my
Kenny
hot dog.
Polcari with me now. Big tech has been demolished. Are you adding to your tech holdings now on this dip, or are you rotating out of tech?
No. So listen, I think it's very specific, right? You have to look not tech broadly. You have to look at the names that have gotten really arbitrarily beaten up, really solid names that are really taking it on the chin. I would be happy to add to those, right? But I'm also adding to, quite honestly, the big boring names, which are kind of consumer staples, healthcare, basic materials, for sure, because that's where the opportunity is. Just look what the best performing sectors are this year. Industrials, basic materials.
No matter what happens, I hope you guys are eating good right now. Take care of yourselves. Eat some.
I think at the moment, because tech has gotten
some
so
oysters.
beaten up, there are absolutely
eat some pizza, eat some pasta, whatever you do.
Good tech that have gotten,
eat your baseball hot dogs, right?
Give me the name where there's
yourselves,
a big
drink a
opportunity
lot.
in big tech and you're going to buy it. What's the name?
Okay, so Amazon is the first one. The fact that it was down 11% last night after they announced is crazy to me. It was trading at $198. That's nuts to me. So Amazon is on my list. Now, it's not that bad today. It's kind of recovered today because I think the
bearish.
The fact that, Amazon is down 8% here, to me,
bearish. I'm eating a hot dog.
Bitcoin. You know, it touched just 60,000 earlier this morning. Okay, it's back to, what is it now? Back to 67,000. Now, does that selling, it's now worth half the price of its high late last year. All that selling, all that money that came out of Bitcoin, has it affected the stock market?
Well, I think it has certainly affected the stock market because I think it's raised some amount of anxiety, right? And people seeing the wealth that they have in Bitcoin, whether it's big or small, whatever, get wiped away as quickly as it did. It always causes people to go, oh my God, and get nervous, and they start selling things that they shouldn't sell because they want their cash in their bank because it makes them feel better. So yes, I think that has happened, and I don't think the disaster in Bitcoin is over yet. I think most of it is, but I wouldn't be surprised if we saw Bitcoin trade down into the high 50s.
Whoa, that would be a headline, wouldn't it? Kenny Polcari, you have a great weekend, and we'll see you again next week.
You as well.
Okay.
Oh my God, I just ate that shit like Joey Chestnut.
Great question, because we've only heard about the Walsh nomination just a week ago, and the market's been extremely volatile.
I just gobbled
I
that
think
shit
there was
like
some
Joey
knee-jerk
Chestnut.
reaction. I mean, he's highly qualified, but it is a committee. He's been very critical about Fed policy for the last 15 years.
Man, I wish
He's
I
gonna
had some
have to
Buffalo
build
Wild
consensus.
Buffalo wings and
So,
barbecue ribs
did
for
we
Super Bowl.
change portfolio positioning because of Walsh? No. We are going to watch
Send
the
them my
data.
way.
Walsh affected market. I mean,
I
the
think the
fact
market-
is, it's a world turned upside down for a lot of people.
Right. I think the market, at least on Friday, looked at the front end and said, oh, Walsh might be more open to cutting rates because he's in the supply side, pickup in productivity. The long end got a little nervous. And that I would strongly push back against. I know he's been critical of the balance sheet expansion and QE by the Fed, but a lot of that QE is to provide reserves to the banking system. And the Fed understands it. I think if Walsh comes in, he's going to look at the analysis and actually not be able to cut the balance sheet. I don't think he has votes on the committee. So if the market got nervous about the unwind of the Fed balance sheet, I think that we can fade. There are other issues this week. Is the AI capex too much, which last year everyone wanted AI capex, and now they're saying this might be too much of a good thing. And then is there displacement in the software sector? So I think the fears have
Hot
morphed.
dogs? Nah.
We've dealt with a lot
Bratwurst.
this year.
And just in the equity markets,
German
concern about
meat
the CapEx, as you
engineering,
mentioned, we
baby.
had
Whew.
Rob Schiffman in yesterday.
Now my stomach
who covers the
feels
TMT
good. I ate
space
two.
From a credit perspective for Bloomberg
big-ass
Intelligence.
bratwurst
He says the bond
covered
market's fine
with
with this CapEx.
mustard and
The
ketchup.
bond market's taken all the paper that's coming out, that spreads remain
life is
tight on
good.
all these deals. So the bond market's saying we're okay with this
Do me good, market.
CapEx,
Come
but
on,
the equity
man.
market's not so
This
sure.
shit is crazy.
Right. So
Do me
I
good.
think a lot will depend
Pull
off
back
at
a little bit, goddammit.
650
Come on
billion,
now.
how
All
much
right,
is
somewhere here.
financed in the bond
Figure out.
market. We saw this with Oracle.
Yep.
They actually came in with much lower than that 50 billion number, and the books were very well subscribed. But I'm glad you talk about, because credit spreads are looking at fundamentals. The fundamentals of the companies that are doing the AI capex are very
RWM needs
solid.
to slow
All
down.
the software companies, which were all the news this week, you look at the high level of subscriptions, high margins. But I think the
RWM does
question
not
is
slow
how
down. This thing
much
is
of
not fucking
displacement
pulling
or
back
versus
at all.
disruption is going to happen with AI.
RWM
What
needs
are
to
their
fucking
earnings?
calm down.
But I
It needs
think
to
we
calm
look at
down now.
fundamentals
This
of
thing is at
earnings, of leverage
3.2%.
ratio, and I think that's why these spreads are where they are.
If
And I
not,
think
this pullback
yesterday
is
showed
done.
you that fixed
GG's.
income does provide you that
Just started
ballast
to.
to portfolios. And
Yeah.
that's why
It's the
you saw
saddest shit
rates
ever.
fall. And so actually, if I want to be somewhere which is safer, maybe the bonds of those companies might be the safe place.
Oh, listen to her selling bonds. She's,
Talking the
she's
book.
taking a Kool-Aid from
Talking
Bob
the
Michael.
book.
There's no question about it. Priam Israel, JP Morgan with
What
us. A
is
great
this
lineup
cycle
this
today?
morning. We welcome all of you. 99.1
RWM
FM.
just so strong.
Snack-bound Nathan Hager getting ready for the
3.25% is
Super Bowl.
fucking
Good morning,
OD.
99 FM. If you can focus this morning, and Bloomberg 11.30.
It went down 2%
New York,
yesterday.
Across the nation, major shout out.
Now it's up
Sirius
3%.
XM channel
That's OD
121
as fuck.
across Canada
That's
and across
OD
all
as
of
fuck.
America. We really appreciate your
Oh my
support
God, I can't believe
this
it.
morning. Let's get back
Like,
to
what is
full
moving
faith and credit
IWM
pre-Israel
overnight like that?
Right now. First
That's
thing I did
OD.
this morning, I walked in because you told me one day, hey, stupid, look at the 5 years
Everybody
compared
going
to
to sleep
the
thinking
30-year
it's
bond.
bearish, including
It's
IWM
buttressed
too,
up
and then it
against
fucking just opens up
resistance.
3%,
Translated in the
2.7%
question,
up. Like,
what happens if these spreads break out to new steepness? What does that signal?
The spreads, the credit spreads or the curve?
The curve, excuse me.
So if the curve does steepen, that's
See, I just got
a
a
sign.
C- with pre there.
No, there's a lot of spreads we spend all day looking at. If the yield curve steepens a lot, I think you should pay attention to that because that's telling you that the economy might be slower or weaker. We may be transitioning from a low fire, low higher to a high fire, low higher. And I think without payrolls, it's really hard. But we did see some data this week that made the market a little nervous about the job market. I mean, we know there's low hiring. If the firing starts to pick up, then the Fed is cutting a lot more than what is priced in. We're currently only pricing in 2 rate cuts this year. So that front end, if the curve steepens because the front end rates fall, that's a sign that the job market is much weaker. The Fed will absolutely respond, but I would get more nervous about the economy.
Paul, that's what we're doing. We're just sitting around waiting for the labor economy to decide what to do.
Yeah, and I don't know. I mean, there are some concerns out there, but boy, the headline numbers still look pretty decent here. In the fixed income space here, I see a lot of green on my screen here on year-to-date performance here, following up a strong 2025. Where is value in the credits? I mean, how much credit risk are you taking versus just sitting on a 2-year or 10-year treasury bill?
Shawty said, I'm about to go get a cig. You're an addict, you're an addict, you're an addict. I'm publicly shaming Shawnee too. I got publicly shamed by Chad the other day for smoking a cig. You're an addict. No, I'm kidding. I'm just kidding, folks. All things are entertainment.
Diversified, high quality. We haven't really gone down to the triple C part of the market. Spreads are so tight that they're not giving you cushion for if things get worse. But I think, whether it's investment grade.
That's how stressful the market is. I won't lie. Man, though, today, I ain't gonna lie, my entry being too early with data might be just a fucking piglet. Alright, I'm trying to get a little bit of money back now, but this shit is actually turning into a piglet moment now for me. Based on what setup and what thing am I bearish on into next Tuesday? That's a fucking good question, right? The SPX gap below, I could say, but like right now, everything's showing so north that like even that is making me think like, oh, you're fucking hoping on that and you're fucking trapped. So, you're just like this. I don't know, dude. Maybe some crazy ass news comes out over the weekend with the president or something. There's a presidential executive order being signed today at 3 p.m. behind doors. It's like not being streamed, so something happened today.
With about 5 minutes to go, Amazon's fourth quarter earnings is coming out. There's a lot of eyes on this one. So analysts are calling for earnings of $1.97 per share, revenue $211.33 billion. Wall Street is going to have a very close eye on revenue growth for Amazon Web Services. They always focus on AWS. That is the cloud business of Amazon. I want to bring in Palumbo Wealth Management CEO and CIO, Phil Palumbo. So let's talk about this because Amazon Web Services has been such a strong component of their earnings year after year, but they also, on the other hand, are probably going to talk about tariff pressure.
Yeah, so tariff pressure, I think, is actually going to fall to the wayside this year. So last year, Amazon was up only 6%, S&P was up 18%. And this year, going into this year, we favor Amazon because we think tariffs fall by the wayside, which will help the e-commerce business. And the big focus with their earnings is going to be their AWS, like you said. We're looking for 21% or more. That's important in terms of growth. And then the ad spending is going to also be really important. And of course, CapEx is the biggest focal point of every earnings that we're seeing today.
Is that a worry about Amazon? Because they've
got a little heat from that, from not for a lack of capex spending. Are they going to try and catch up, and is that going to worry the street?
They will have to stay in the race together. So I believe their numbers are going to be just as aggressive as we saw with Google, which they're doubling their capex. We saw it with Meta. So we're going to see same thing with Amazon. They have to spend to stay in the race. That's really, really important.
Okay, what are the things? You've got positive and negatives in your research. I want to start with the positive. You say AI integration boosts output per worker. That historically correlates with long-term GDP growth. Companies are pledging to invest in the United States, and we're seeing that under the Trump administration. But a negative for you is the jobs picture, and that really set the market off on a bad, foot this morning.
Right.
So how do you balance those two things?
So it's going to be tough in the beginning. Just like any other major revolution I've ever seen in this country, you always have old jobs fall by the wayside, new jobs come to fruition. For example, the phone that we all use, there are apps in there that we use, and that created an entire multi-billion-dollar economy. So with AI, we're going to see that. We're going to see jobs fall to the wayside, but we're going to see new jobs that are going to develop.
I was looking at some data, though, from Microsoft. It was published on Axios, and if you looked at the jobs that were going to be lost under AI and the AI economy, it was all white-collar jobs, and things like authors, writers, marketing people. But then on the other side of those jobs created, it was all manufacturing, blue-collar jobs. Is that kind of what you predict is going to happen?
100%. I think those white-collar jobs, those that will be lost, I think they'll have the opportunity to be entrepreneurial, and I think you'll see one of the biggest entrepreneurial moves you've ever seen in this country, and I think you'll actually see more multimillionaires in this country's ever seen going forward, because AI allows you to put into AI what you're looking to do in terms of establishing a business, build conviction, and execute. And that's what I think we're going to see longer term, which I think a lot of people are missing.
Yeah. Well, obviously, that is the juxtaposition that you're making between jobs and the AI economy. Thank you so much for being with me today. I really appreciate it. Yeah, good to see you.
This shit is sad. IWM is up 3.4%. VIX is down 0.5% lower. 17.5% now. 17.96. It's down 17.5% VIX. 690 is fucking showing $1.30. Man, this lady really came on national television and said 595 QQQ or 575 QQQ, and the market's at 610 a day after. That is the biggest trap I've ever seen on IWM, bro. 3.42%. Like, this shit must be at 1,400% or some bullshit on 0DTE. Like, what the fuck? Actually kind of sick. IWM probably fucking just complete green. Never before seen, but I mean, this is the 0.5 fib too. Can't even fucking deny it. Can't even fucking deny that this is a 1/3, 2/3, 3/3 from literally pre-market low. I mean, I don't know if this shit makes sense, but like, they're making it make sense somehow with the 3/3 trapped on IWM. Like 1, 2, 3, and it looked like IWM was gonna go lower, and people on looking at IWM was like, "What the fuck is going on?" And like, this is really gonna go lower, and like, it really just fucking trapped. That's the fucking craziest fucking shit. They used the entire week's move on IWM to trap Friday. End of the fucking week. End of the week.
And welcome back to Morning Trade Live. It's time now for the big picture. So let's welcome in the team from Charles Schwab. Cooper Howard, Director of Fixed Income Research and Strategy, Schwab Center for Financial Research, and Mike
snap
Townsend,
election bullshit
Managing
coming
Director,
in now.
Legislative and Regulatory Affairs over at Charles
Supposed to be
Schwab.
last
Happy
week.
Friday to you, gentlemen. Cooper, I
HOD
do want
on
to start with
QQQ,
you,
IWM, and
just
SPY.
because obviously we did
SPY
get a
is
lot of
leading.
information. We didn't get the jobs
Because
report
of
today, but
IWM
that's okay
leading
because
QQQ
we did get the
higher.
ISM and we did get a lot of updates as far as the labour market, and we have very much after really seeing this sticky 10-year actually moving between a range of 429 to 419 this week. Just talk us through, you know, what you made of it and what your outlook is next week with some of the other data we'll be getting.
Yeah, I think that's a great question. That's also a very interesting thing of what we're watching in the
This
fixed
is literally
income
the
market,
worst
Sam,
way to go up.
is that
Just
obviously
small,
everything's been very volatile in
extend,
the equity
extend,
markets,
extend,
the
small,
cryptocurrency markets.
small,
That's
extend,
not
extend,
necessarily the
extend,
case in the
extend,
fixed
small,
income markets.
extend,
Yes,
extend,
we did
extend,
get a
extend.
big move down in yields
Extend
yesterday.
what? The
Looks to
330?
be a little bit of a rebound in yields this morning. But overall, if you look at the
Fucking
move
nuts.
index, and this is akin to the VIX
I
index,
don't even know
in the
how much
equity
it's gonna pull
markets,
back. It's looking like
that's
0
the
DT.
lowest level
Fucking
that
1
it has
DT is
been at,
fucked.
going
I'm just
back
scared
all the
about
way
my
to
Tuesday.
2021. So the
I'm scared as shit.
volatility in the fixed income
If they
market
pull back to
has been
684
very,
today,
very
I'll be
muted,
happy
even though
somehow.
there's
If
a
they
ton of
don't,
things
I'm
going on
fucking
in
scared
other
as shit.
markets. So
VIX
we
got
wouldn't be
crushed
too
today. I mean,
surprised
this thing
if we
18.
continue to
Let's
see
look at the
low
1D,
volatility.
one day.
Our view is that we should see a steeper yield curve.
Right. Whatever people
So
say,
that
right, I'm
should
telling you, the
put,
one day on
we
the
should
VIX is the
expect
most
that the
important.
Fed is
Why?
expected to
What
cut
happened
interest
last time?
rates.
Market ran up,
And
ran up,
really
ran
there
up,
should
ran
be a
up,
little bit of a
ran up,
floor
ran
on
up.
the
It had a
further
day,
downside
down
of
day,
longer
down
term
day,
yields.
and then the
So
VIX
given
stayed up
everything
somehow.
that's going on,
This
a
is
lot of
getting
the instability
crushed,
that's
but I
occurring
mean,
in
if
the
it
markets
somehow
right
stays
now,
up at
I wouldn't
19
be too
today,
surprised if we still
the
see
market can
limited
pull back.
volatility in the
If
fixed
not,
income
then
markets.
surely
Now, there might be a catalyst that could
IWM going to
spill
fucking
over
3
that
point
could break us
fucking
out of this
9%.
lower
No, I'm kidding.
volatility range.
If it
Yeah,
pulls back,
obviously
it
all
pulls
eyes
back.
on that snap
If it doesn't,
election
it doesn't.
in Japan, which has
Shit is
created
nuts.
some volatility in these bond markets,
Nothing else
particularly
can be
since
said.
the start of the year when this was announced. Mike, let's just switch gears to you because obviously we got through this partial government shutdown this
Does
week.
not
but
mean
without
rejection,
some
just means
disruption, of
chopping
course,
and showing a
with
little
these,
rejection.
jobs
Could
numbers
stay
and
up
then
with
obviously,
IWM.
some of the delays around that. What
It's
are you
up to the
watching right now?
fucking big market now.
Yeah, well, great to see you, Sam. I think you're right. That weird
was all
little
day on
4-day
IWM, but
shutdown
still.
bumped things a little bit at the Bureau of Labor
Every
Statistics.
single time
So,
IWM does
yeah,
something
you've
like
been
this,
talking about
this is
this
literally
morning, the jobs
IWMing,
report
and
is
then
pushed
market
to
fucking
next
realizes
Wednesday.
slowly with
The CPI
IWM.
report that was supposed to come out next Wednesday will be pushed to next Friday, and then at that point, I
Shit
think
is
they're sort
ass.
of caught
I
up
really can't
on
believe we're
all
at
the
690
delays.
right now. Like,
But one of the things I think was
from
really
680
interesting
market open,
is
like
a
we
little
were
bit under
fucking
the
around
radar
at
was the
685,
president
683 so
nominating
hard, and then
a
we just fucking
career
ripped up to
economist to be the
690.
head
So
of the Bureau of Labor Statistics.
it's not even
Now,
the
you
fucking
remember that
0
the president
DT, 1
fired the
DT thing I'm
previous
talking
head of
about.
the
Thinking
BLS
about,
back in
I'm thinking about
August
fucking
when he was upset about
every single fucking put and
revisions
call right now.
to the
Every
jobs
single
report.
fucking put has been fucking crushed
There's
with
been
this
a lot
move.
of intrigue on who this the successor
Market is
will
one
be.
directional.
He's named
Thing
Brett
goes up and thing
Matsumoto,
goes
who
down
is someone who
together.
has been a economist at the BLS since 2015, and I think that's given some comfort both here in Washington and on Wall Street about the integrity of data going forward.
Confirmation
this
is
is
trying.
a career guy, kind of a technocrat, and I think it's being received well. So I thought that was a positive piece of news that maybe didn't get a lot of attention amidst everything else going on.
Very, very interesting. Thanks for highlighting that. Hey, Coop, let's just get back to you because I just want to pick up where I left off there with obviously everybody watching Japan. That has been a source of some of the volatility. But you do mention, and I think you rightly note, that we have seen stability in these bond markets despite what we saw in places like, obviously with the JGB yields. What are you going to be watching? Because I've seen that some of the analysts out there do believe that a Takaichi landslide this weekend would actually be the best outcome for the bond market in the yen.
Yeah, I definitely think that what we'll be watching is that it is very much a global market in the fixed income market. And our yields had been pulled up a little bit because of JGB yields. So if we continue to see an increase increase in their yield, then I wouldn't be too surprised if we start to see a little bit of an increase in our yield, Sam. Now, like I'd mentioned earlier, I do expect that we probably have a little bit of a floor on 10-year yields in the U.S. Part of that's because of where the term premium is. Term premium, we've discussed it quite a bit recently, but it is really, for those listeners who are relatively new, it's kind of a catch-all for all of the uncertainty, or our colleague Liz Ann Saunders likes to put it, a lot of the instability that's happening in the markets right now and the economy. So if that instability continues, and that could be concerns over Fed independence, what the direction of Fed interest rates are, concerns over the outlook for the economy, a number of different things on the federal side of things. If that instability continues to remain elevated, we would expect that's likely not to put too much downside on the term premium, and therefore too much downside on our longer term yields. I'd also add in the global markets to that elevated term premium and the instability, the uncertainty over what the direction is going forward. So I think as it translates into our market, it's just another reason that we don't expect too much downside on longer term yields right now, Sam.
Okay, we'll be watching, and obviously we had seen that 10-year mark sort of knocking its head against 430 earlier this week, as you know the markets still were coming around to what they were pricing in, what a Kevin Warsh type of Fed would actually look like. Give us an update as to what you're hearing down there in DC as to the process here, a timeline, what people are saying about what happens next.
Yeah, I mean, I think the timing for a Kevin Warsh confirmation hearing is still a little bit up in the air. And as listeners probably are aware, there's this tension around the criminal investigation of current Fed Chair Jerome Powell. And one of the senators on the Senate Banking Committee has said he will block moving forward on Warsh until that is resolved. There was an interesting development earlier this week
hovering
when
above
the
the
chair
20
of the
EMA
Senate
right
Banking
now.
Committee, Tim Scott, who's a senator, Republican from South Carolina, said that he did not think that there was any criminal intent or criminal activity
Volume did go
by
bullish
Powell
and then just
related
stayed
to
chopping,
the
chopping,
Fed
chopping,
building
and then just stayed
renovations.
bullish. So this is
I
literally
think
what
that
it does
was
on a
a
bullish
sort of
day.
initial sign that we're
WM
moving
helping.
towards winding that criminal investigation down in order to clear the path for Warsh. So we don't know the timing, but I've kind of got my eye on March for the confirmation hearings. I certainly expect Warsh to be confirmed, and then he won't move in to the chair slot until mid-May when Powell's term is done. His first meeting won't be
Divergence
until
that the
June,
HOD
so we're going to
trying
have
to
some
create.
time to kind of absorb all that and,
Rufus testing on
make some
QQQ.
thoughts about where he might head in that June meeting.
Divergence that the roof created.
Thanks so much for joining me
Long-term,
today.
medium-term
Stay warm and
shorts
have a great weekend.
are
That
in
is
danger.
Cooper Howard, Director of Fixed Income Research and Strategy, Schwab Center for Financial Research, and Mike Townsend, their Managing Director, Legislative and Regulatory Affairs at Charles Schwab.
The same fucking thing yesterday, and the same fucking thing yesterday, going lower. They created the fucking floor and made it dangerous, just fucking bounced it, and then went lower. This shit could truly mean we chop today into the day, staying bullish somewhere above 685, or this means they're showing bullish right now for something, or it means they're showing a divergence at the fucking roof or something, but there is a divergence at the roof right now. It just created at 1220. Statistically speaking, even if they go lower here or if they chop here, this is gonna stay bullish with the volume not turning bearish at all. This is the sad truth. Showing 690. Maybe this is the setup. Showing 690 fucking crazy. And then if they reject off of 690 somehow, then it may mean something. But for right now, in this exact fucking minute into the next 5-minute time frame, it is literally saying and showing what I am saying. Trash so far. I don't want to fucking bet on a bet over the weekend too. Like, that's why I'm kind of I'm so fucking worried that a pullback's not gonna happen today. So I'm So into Tuesday, it's not looking fucking good from where I'm at right now. So it's Everything is I hate when the market's fucking one directional. I guess everyone could argue market was one directional yesterday and the day before that too. So you know what I mean? True. So it's like complaining and bitching too, technically. It's like at this point I could say, oh, there was set up on IWM and played, and then and then it's just What? What the hell can I do about what the hell is actually going on? What I can do about what's going on is just my mentality and what I can do. What's going on with the market and what I want to do has nothing fucking to do. KG said technical recovery underway. It's really trying. Bitcoin support testing.
Now do a check on where
we watch this again, but I'm gonna watch it again because I'm kind of bored right now.
We are looking at some nibbling in the pre-market
Some
here.
is it getting weaker, you
S&P
think?
is better by nearly 0.5%. Nasdaq 100 futures higher by more than 0.5%. Dow futures
IWM.
higher by approaching 0.5% gain. Small
Getting
cap
stronger,
futures
but
right
going
now
higher,
going
so.
up about
Mac the
1.25%.
RSI in bull
Bringing up
territory.
green,
This is
senior
bull
market
control on
correspondent, right,
IWM
let's set up
until
the
it's not.
Today. All right, KG, let's help set the stage here. Big
Diversion set
picture.
the
How should we be looking at markets?
Well, we are seeing a little bit of a retracement bounce, Diane, after this aggressive sell-off over the last couple of days. And this is kind of not surprising. Actually, if you look at the technical setup on the S&P 500, we basically closed at the 100-day moving average yesterday. Now, we have seen this in the past around 3 times since the April lows here. And usually the next day, we actually do see green on the screen. A lot of these moving averages, we usually do not flush through them the first time. And
Still green for the week. My profits from yesterday are now at risk. I would like for it
So I
to
think this is a
let
technical
my
bounce back
account
here,
go
at least
back
for
into.
today. Now, if I'm
I would like for it to U-turn so I can leave at the top of the U-cup, but it's like hoping now.
With the markets moving down,
It's very
so that kind of
hopey that
signifies
the
to
market,
me that we are seeing
saying it's going to come
new
back today.
sellers coming into the
Might not
market, and
even
I
come
think this
back
is kind of a
fucking
correction
today,
in
might not
time.
even
We've
come
heard about
back
this
Monday,
term, kind of
and it's
these
fucking
rolling
Tuesday's over
recessions.
then,
I think this
so.
is kind of a rolling correction within the market, and we have seen some weakness
We're in
when
a
it comes to
bullish
technology
cycle on
stocks. We have seen weakness
IWM.
when
We're
it
in a
comes to obviously the software names as well, but there has been some strength in some sectors that have not really performed over the last few years. The consumer staples continue to make new relative all-time highs here. You're also seeing industrials a little bit more participation in that market here, and the Mag 7 names aren't trading particularly well.
IWM deciding with the fate of everybody. All the bulls are fucking burned on IWM. There's bulls trying, I guess, at some point here, and bulls are trapped, bears are trapped, so there's hella bears, and there's bulls trapped, everybody trapped into the weekend on IWM,
and maybe
almost
we get
showing
another
1, 2,
rally
3
not only
bearish
just
day,
today,
and
but
then
maybe
bullish
on
day
Monday
overnight,
before
and
we
then
actually
pump
start
up, so.
testing some key areas of resistance. But I think
There's a
this
major,
trend, this
major
kind of
weekend we
rotation
have
through
coming up.
actually has kind of helped us out
Major
from
weekend
seeing
coming
even
up.
more destruction in the S&P 500.
Damn, someone said fucking my profits from the last
Good
2
point,
weeks got wiped
there.
out today. That's
So
fucking
it feels like already
crazy,
a theme
fucking
so far
scary to
this year is
fucking
the
hear.
rotation trade and the point you
That
just
is
made
so
about rolling
fucking sad.
corrections. But let's talk about
Today
another number,
was the
the Mag
most
7.
craziest,
Amazon out
scariest
with
day
its
because of
quarterly
the
report
VIX
card.
literally pulled back 17%
Another big
from being
spender
at 21,
here in
22
terms of
yesterday.
CapEx
I
for
really
the
thought
year.
this shit was
Take
going to
us through
stay the
some of
way
your
we ended
takeaways here.
yesterday, 4 p.m., but it really just
Yeah, we are
dropped
seeing the shares down. Now,
through.
it's off the lows. It actually traded down to $197. So you are seeing some buyers really stepping in here, at least in pre-market trading. Now, the company did miss when it came to the adjusted earnings per share. They reported $1.95 there. Street was looking for around $1.96. The revenue did exceed the Street's expectations, coming in at $213.3 billion. Street was looking for $211.4 billion here.
IWM.
AWS revenue that did exceed the Street's
I would have never seen
expectations,
IWM coming. I really didn't want to call IWM nothing on close yesterday, but I literally saw yesterday with my own eyes IWM go down 2% to close from 1.44, and I was like, dude, this shit is fucking crazy. And then the whole entire market went down overnight, and then it with Google, and then it just reverted. So best believe everyone in the world got fucking confused on QQQ, SPY, and IWM. Why? Because that's what the SPX put the call ratio showing too. There was a fuck ton of fucking puts, 0DT, SPX, and SPY
for top line but
stacked
bottom line
up
revenue.
today
Their Q1 guide did
because
miss
of the
the
last
Street's
2 days.
expectations, and their operating income guide also did miss.
Whether
So,
this shit is
the
giving bulls
concern
hope
that
back
analysts
at
as well as investors have is
7,700
that this
SPY or
ramp up in
SPX
CapEx
or
spending
not,
continues,
or the
and
calls
we
that
do
got
see
trapped
maybe
into next
a
month end,
deceleration when it comes
expiring
to growth in
February
the top
10th,
line,
February
and then also
16th
maybe
or whatever.
pressuring free cash flow.
This
And in
is
fact, if
completely
it gets too
cycling now.
aggressive, maybe even
After
negative
a
free cash flow, which
complete
makes it very
fucking
difficult
down after
for
3
these stocks to
days.
trade at the multiples that they are
One
right
day
now.
we had
So
an
seeing a
insane
pullback, let's
squeeze.
see
If
how the
anybody
market actually reacts
remembers,
here. We did see
I
buyers
remember.
coming in and stepping into
Because
Alphabet
Monday was
Google
crazy squeeze too.
yesterday in the open as well,
From
try to
last
recover
week.
some of those losses. Maybe that's going to be the same thing for
Last
Amazon
week,
as
what
well.
happened? Thursday and Friday,
Like
right?
this time around, that most of the Mag 7 are being punished
Market is so
for
fucking
the level
volatile right
of
now.
spending
That's
they
all I
plan
can
to
say.
do this
Thursday,
year, if I
Friday,
recall correctly, except
everybody
for Meta.
bearish, right? And then
Let's get
fucking
into
Monday
crypto
pop up.
here.
Everybody
Seeing some
bullish on Monday
recovery
into Tuesday and
in
Thursday and
Bitcoin
Wednesday.
this morning.
Everybody
but, I mean, listen,
fucking
it's
gets
quite a
wiped and
ways
everybody bearish
away
into
from where it was
fucking
back
Tuesday,
in October. Take us
Wednesday,
through what you're
Thursday.
watching here
Everybody
in
bearish
crypto.
on Thursday on IWM
Yeah,
too.
so
and they fucking rally
it's
in this
defending
shit.
a key area.
Not even a
of
little
support.
bit,
We
but
kind of talked about
100
the
points
55,000
halfway fucking
level
back up.
yesterday. We were only $5,000 away, which seems like a lot of money. But
HOD
just given
divergence at
volatility,
the roof is
5,000 can
helping the
actually,
bulls now.
swing in a matter of hours.
Not
actually,
the
when it comes to
bears.
crypto and Bitcoin.
HOD
Right now, this
divergence
is
at the
exactly
roof
what
is
you would
already
like to
trying to
see.
clear
If
now.
you could actually see a close above this around
Doing
the
work to
68,000
0
level,
DT
that
and
would
1
actually be a
DT
very
and my
healthy
shit
hammer
too.
candle
My shit's
on the
down like
daily
50
chart.
something
Maybe
percent
some
now.
buyers want to be able to try
Tuesday
to step in
expiry.
there. You
That's
are
why
seeing
I got
RSI
fucking out of
also
the money
tipping to the
puts.
upside here. Obviously, there's been a lot of
I got
technical
out of the
damage
money
when it comes
puts
to
at
Bitcoin.
fucking
You are
here,
seeing a lot
10
of those that
somewhere
actually hold
at
the
330.
physical
Now it
selling out
fucking
as
rallied
well,
up
which is causing
7,
a lot
8,
of this
$9
pressure to the
from the fucking
downside. And
bottom
this
of
is
there.
once again a little bit more of a liquidity gauge as we see Bitcoin and Ethereum and some of these other
It's so fucking hard.
cryptocurrency
Big's crushed
adjacent
too,
type
and they
of,
rallied northward, so
products selling
everything
off.
going
That
against me.
also
Like
kind of
3
leads
things
to a
going
broader
against me.
spike in volatility within the
IWM,
equity
Big's
markets
getting
as
crushed,
well as
contracts dying,
currencies just in
and
general.
fucking data.
So right now they're defending it. Let's see if this is just a dead cat bounce or if this is something that is actually very meaningful and buyers
Time
will
is
try to
getting
layer into some new long
3 hours
positions.
and 30 minutes left until market close
KG, any
today.
correlation now
So there's
between
today,
Bitcoin
there's
and the
Monday.
tech sector?
That's about it for me. Monday open.
I
Fuck,
think you
that's like
probably are seeing a little bit
already
more of a
fucking
correlation. I mean,
so
if you
fucking
look at
close to
Bitcoin
Tuesday.
compared to the IGV or the software ETF, I mean, the chart pattern
I ain't gonna
is
lie,
pretty
I
much
just jumped in
almost
real
identical
quick into
here.
February 10th because
But I
it
would
was
say,
Tuesday.
Dan, we
I
always
honestly
try to
maybe
bring
should have
these
done Thursday or
correlations with
Wednesday. Now
Bitcoin
I'm
and
fucking
US
terrified.
dollar,
And Wednesday
Bitcoin
would
and
have maybe
gold,
done
Bitcoin
way
and
less for
inflation,
me,
and
but this shit
usually
is
those are
actually
just
moving like
short-lived type
0
of phases
DT.
or cycles that we
My
see
fucking
within
Tuesday.
Bitcoin. I think it does trade on its
3
own and has
DT.
finally decoupled for the broader equity market as a whole. I think that's actually a really
Market
good
moving
sign,
so
not only
much.
for
It's
Bitcoin
moving like a
traders, but
fucking
also for
0
equity
DT.
market traders as well. So
Not even
at
a
least
1
for now, we
DT.
are
It's
seeing
just
you
like
can make the case that yes, there's a correlation between software stocks
it's
and
the
Bitcoin.
craziest part because
But I think
this is
over
why I
time,
did fucking
Bitcoin
1
trades on its
DT
own. I
going
don't think it's
downwards
really tethered to any
yesterday and
other
the day before that too.
product
You know?
that could actually sustain itself
Right.
as far as that correlation. Once again, we've seen these cycles or
This
phases.
is why the
but nothing
pros
has
mean
really
fucking
stuck.
risk analysis and perfect
let's get
fucking
into one
analysis
more
because how the fuck is it
earnings
so
mover that's on your radar.
1/3,
Reddit,
2/3,
those
3/3,
shares
and then
rallying
there
right
comes
now
in the
in
0
the
DT and 1
pre-market.
DT and 3
Take us
DT
through what you
aspect,
notice in
and
the
there comes the
numbers here.
data aspect, and there
Yeah,
comes the
this is
VIX
an earnings
aspect, and
announcement that
like
was better than the street's
there
expectations.
comes the whole
The
entire
adjusted
world
earnings per
thinking
share
about
for
one thing
Q4 came in
aspect,
at
like it's actually
$1.24. Street was looking for
they're
around
set up and
around 94 cents, give or take.
oh my god.
Revenue also came in at $726 million, exceeding the street's
Market really
expectations.
doing
Now, when you're looking
extended
at the daily
northward though,
active
showing
unique
690
users,
to the max
that
with
was
4
actually
bounces
relatively
upward.
strong. Not only here in the United States, which once again kind of beat the street's expectations,
It's
but when you're
about the
looking at it from a
timer
global
before,
standpoint, so
so
their international
this is
presence is starting to increase, and we are seeing their guidance both on revenue as well as adjusted earnings per share actually exceeding the street's
I mean,
expectations.
my put's not
So
going
they're
down
making a
too
lot of
much
money
now,
when it
but
comes to
like
not only
from
the
where I
traffic and the
entered,
ad revenue within their platform, but also these deals with some of these mega cap names like Google,
it's now
Alphabet,
showing the
that's
contracts is
utilizing
where I
their data in
entered
order to
is literally
train
the fucking trap
artificial
push up,
intelligence
the second
models, or
trap
these
push it before
LLMs,
this
and
downward
they
on
believe that that's
contracts.
still
So
going to be
this
the
is working.
future. And they also made a comment that a lot of individuals are actually leveraging LLMs or chatbots, if you will, rather than utilizing search, and they believe that that's going to be a tailwind for their business over the long term. So a decent bounce to the upside, especially after the stock broke below the 200 period moving average. Once again, this is kind of bucketed within that software kind of tech space.
The worst part
And
is
so
my
a
dust
nice
was
bounce.
literally
Hopefully
up
it's gonna be able to hold
25%
here,
yesterday, and
we
I
see
really
some
wanted
consolidation
30%
and
from
potentially a breakout
505
range, a
entry, and the
retest
shit went to
of the 200-day
630
moving
on my
average, which is sitting
Robinhood,
around
and I
$186.
didn't leave, and the shit reverted so fast, and I went to sleep, and I woke up like $1 or fucking something cents lower, and I was like, bruh.
Yeah, wide range once again. 69.10 to the upside, 6,700 to the
Great
downside.
shit happening
VIX is
too.
still
I could have
sitting at
left with fucking
20.3.
2.8K fucking plus or some shit,
$1.2,
$2,000 or
to
something
the
on
upside or
Dust that was
downside.
showing yesterday, and I didn't fucking take
Volatility still
25%.
elevated. So even though we have some green on the screen this morning, it doesn't mean that we're out of the woods yet.
Like almost
Once again, I would treat
2,000.
this as a dead cat bounce, at least for now, until you actually get
now
over
it's
some
in
key
profit
areas
by
of resistance.
1.52%.
6,900, 6,925-ish areas that first.
Why? Because gold went down overnight into gold went down overnight into 9 p.m. and then reverted with the market too. Trapped every bear on gold too. It's the craziest shit. Today, it's not even like they're trapping like one thing. They're trapping everything. Gold, IWM, SPY, QQQ. Oh, what the fuck? I literally refrained myself from shorting on gold yesterday, and look what they did on gold. Look at this shit. Isn't this the most fucking evil shit on gold? What did they do? They fucking played with the 3/3 somehow too. They call this shit consolidation, right? People can't even fucking leave gold in the market hours because it's not market hours, and they go down to here where they could consolidate and bounce, and they do. They show down here, and now it's shown as a gold 1/3, 2/3, 3/3. Yesterday is the fucking 3/3, and it's trapping people in the 3/3. Options wise, at least. It counts as this because this doesn't count. That's not market hours. Market hours shows 1/3, 2/3, 3/3, and then 1/3, 2/3, 3/3, along with IWM, SPY, and QQQ, and everything. That's the craziest shit. And market grinding and grinding. 12:30. Knifing up. Today knifed up. What a fucking insane knife up. Literal insane knife up. Divergence cleared. Divergence destroyed. And divergence set up. 12:30. And this is what I realized though in my life too. This is why the market means by 90, 90, 90. 90% of the day traders in the world lose 90% in 90 days. That's the most craziest statistic, but it's also true. And looking at my life, looking back in time when I've had days where I'm on a run of my life for 45, 60 days, on the 60th day into the 65th or the 70th day, there were some massive weird moments where I got a huge pullback on my account. And I realized that something is kind of going on where when they do directional things or where they do things where one side sets up, it's setting up for the other side too. It's very, 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 very hard to tell and play every single direction and every single fucking direction perfectly, which is exactly why I realize there are times where I need to be okay with the cycle highs that I have in my life, right? Because I took some profits in the pre-market today, right? Because I am in a high cycle of my life, in my portfolio, in my life, in my moment, and I was like, you know what, fuck it, no matter what happens, I'm kind of gonna be securing myself so that if some weird fucking shit happens, like a crazy ass bounce or a crazy ass drop, and I crazy fuck up, then at least I won't be in the position that I was earlier in life where I was like fucking looking back at the highs of my life and I was like, wow, I'm at the medium cycle or the low point of my life or the cycle, and I could go to the medium or the high cycle again. But you know, it's like when I'm at the highs, I always want to think about it and secure it. But Fuck me, what am I saying? I'm talking about deep shit, man, but fuck, the market is... Honestly, though, like, yeah, I mean, anybody in the world could say, oh, yeah, it was gonna go a little bit bullish today because of the SPX put-to-call ratio that's stacked 0 DT, but, like, to think, oh, it's gonna go fucking $15 from the fucking pre-market low, it's almost unimaginable. But the market does unimaginable things every single day to make it imaginable. And if it's imaginable, it means that it's possible, and the possibility says that, you know, it's too fucking much, right? At some points, it's too fucking much for me to be 0 DT every fucking day, correct? Like, it's not even like I'm Einstein. So, it's just like, yeah. Like, I was literally looking at my account for like a week, 1 week, 1 month, you know, trend thing, and I was like, dude, like, there comes a point in my life where I fuck around and I fucking look back at that moment and I'm just like, that day was really the day. That one day I shouldn't have fucked around, or like I was thinking about not fucking around, but I fucked around in some fucking way and then they fucked around the market and they make me find out, and I'm like, dude, that's the most craziest fucking way. And yeah, I don't think anyone could fucking say this shit is a perfect, oh, it's gonna be me, but I mean, dude, it is showing so fucking north now. I can't even imagine the 1DT, 2DT, 3DT that all changed now, and it did change because my shit changed, so I'm in a cycle. That's what it is now. A huge world national cycle. This damn weekend, man. This is crazy. 600 to 607. What are we supposed to think in the world? SPY goes from 680 to 690 in one day, and what are we supposed to think in the world? Everything. Everything. Sick. I'm not gonna lie, even if they reject here, the world probably thinking like 60% bullish and 40% bearish into next week, so I don't really know what that means, dude. It's just all fucking hope at this point. Hope base for bears, hope base for bulls, and they're all fucking just... They completely took this shit to the north, is what I can say. Even if we didn't break 690, this is close enough for me to say this shit is literally 690 price target wise, so... And they created a divergence here at 1225, and they burnt the bears continuously with the divergence. So there's no confirmation rejection either still happening here. This doesn't even mean bearish yet, but I mean now after everything, and now after everything, and now after everything, now after everything, but like fucking cycle just building on top of each other. 6,900 holding today somehow. Like, this is the most craziest fucking play though. This 20 EMA, people are thinking it's gonna pull back to the 28 EMA. People are thinking it's gonna go higher. Everyone's thinking it's gonna do everything. Market's doing almost nothing, and it shouldn't be doing something. But how crazy would it be to see a rejection down, and how crazy would it be to see a fucking fly up? It would both be fucking nuts. How crazy would it be to see a chop? It would be crazy nuts. Market doing crazy shit. Volume. No volume chop up. Volume actually bearish, and the RSI pulling back and we chopping up, so cycle confirmation happening. I'm getting shivers in the back of my head right now. Like, that's how fucking stressed I am right now. I need to stress, walk around a little bit, go outside, look at the sun a little bit, and come back in 5 minutes or some shit, or 10 minutes, because this shit is stress. But you know what I mean? When it's those moments is when I know it's the exact fucking moment when I need to fucking wake the fuck up and stretch the fuck out and get some cold water and drink some coffee and actually fucking focus. So, It's the VIX said. 17.97. Cycle confirmation is trying to create 1235 rejected though, and 1240 bounce. So it's literally 5 minutes cycles, and this is literally hope based. But cycle confirmation did not build. Algo ranging here at 1225 too. Some weird ass thing happening here. I guess I'll draw this algo range for now. But they've been doing this. It's not even like they just did this. They've been doing this. And why do we know that? Because there's weird little spike candles back there too, signifying sometime 1245 or some shit, or 1145. $12.20. So yeah, this is not even bearish yet, just testing, cycling. It's almost so bullish. It's almost sick for me to say that, but like it's almost still bullish. Because nothing is doing jack shit except going higher, so I don't know. I don't want to know. I want to know. Candle crazy though. Candle is crazy though. We're hovering at the roof and staying at the roof today. Continuously. I don't even think that's a 1245. It's a 1240 algo range and then 1240 algo range rejection into 1245 happening. It's not even a cycle confirmation. This is just another algo range building. Rough moment for the market. Market went lower and higher, and now we're jack shit nowhere since our pull almost.
Welcome back. Good Friday morning, everybody. Thanks so much for joining us this morning. I'm Maria Bartiromo, and it is Friday, February 6th. It is 7 a.m. on the button on the East Coast. Coming up this hour, in just a moment, I'll talk with Pennsylvania Senator Dave McCormick. And then at 7:20, don't miss the Word on Wall Street panel with Payne Capital Management President Ryan Payne and the Lonsky Group founder John Lonsky. At 7:30, don't miss my special interview with former State Department Senior Advisor Christian Whiten. All that coming up. But first, this Treasury Secretary Scott Bessent urging the passage of a stalled crypto market bill during Senate banking hearing yesterday. Watch this.
What is your opinion about the importance of having clear rules of the road, market structure legislation in the United States?
Look, I think that it's impossible to proceed without it. We have to get this Clarity Act across the finish line, and any market participants who don't want it should move to El Salvador. There seem to be people who want to live in the U.S. but not have rules for this important industry, and we've got to bring safe, sound, and smart practices and the oversight of the U.S. government, but also allow for the freedom that is crypto. And I think it's a balance that is being worked out.
They're showing a fucking recovery so hard today.
And I'm
Damn.
confident
with leadership of people on both sides of the aisle that we can get clarity across the line this year.
And this comes as the White House officials met with crypto industry executives and banking associations this week in an effort to break the Senate stalemate holding up this legislation. The major impasse centers on whether crypto exchanges should be allowed to offer customer rewards on stablecoins held on their platforms. U.S. Securities and Exchange Commission Chairman Paul Atkins will join me this morning at 8 a.m. Eastern with more on the Clarity Act and the digital assets legislation to come. Joining me now, though, first is Pennsylvania Senator Dave McCormick. He's a member of the Senate Banking Committee. Senator, it's always a pleasure. Thanks so much for being here.
Good morning.
Always great to talk with you. And I thought we'd start right there on this crypto legislation. What are your thoughts on the importance of this and what's holding up? What is the stalemate? Is it largely those rewards?
Yeah, this is, stepping back, it is so important that we have a framework because this is a huge area of innovation. The crypto blockchain industry has huge job opportunities in Pennsylvania. It's going to create enormous investment and innovation. But we do have to have a regulatory framework that gives consumers confidence, that ensures that fraudulent and money laundering activities not taking place, and also gives investors confidence. So I think we've got a pathway here. The balance is, of course, making sure that that framework exists and that the rewards for crypto are creating the right incentives, but also that we're ensuring that we don't have depository flight, and in particular, these local banks, the community banks, which I met with recently in Fulton County. We want to make sure that we're not in some way disadvantaging lending for small businesses and farmers and so forth. So there's a balancing act. I think there's a path ahead, but we got to keep focused on it.
Yeah, and that's why I really wanted to get your take on this, because before coming to the Senate, you were a business person, and so you can see all angles of this. The banks are saying, look, you know, the crypto platform should not be able to pay customers to take money out of their, you know, traditional banking account, their deposit account, and putting in the crypto platforms. That's a real allure, paying customers with rewards, and those companies don't have the same regulations that the banks face. So what's your take on that? What kind of regulations are you looking for the crypto platform so that it is, in fact, a fair playing field?
Well, I think the question is all around yield and those rewards, and how do you have the balance where you have rewards in the crypto space that aren't going to be disadvantageous to banking, and in particular, how to ensure that banks can compete in a way that's going to be advantageous for them too. This is a whole new world, and we need to ensure there's great competition and great opportunity. For me, the issue is that if the banks are holding stable coins, there's a question of how the lending ratios are going to work and whether the communities can still have the amount of loans to small businesses. So that's a particular focus where if deposits are even in the community banks and stablecoin, that they won't have the same lending capacity. So there's a set of balancing considerations, and I think that's the debate that's going on right now. The White House is deeply involved, which I think is a good step.
Yeah, and yesterday we spoke with Cynthia Lummis, your colleague, who of course is the head of the Digital Asset Subcommittee. Here's what she said. Watch. What kind of regulation would you propose for the crypto platforms? Should they be allowed to pay those rewards?
Provisions in the Genius Act for stablecoins is that they have 100% reserves all the time. And of course, banks get to use fractional reserves. They don't have to have 100% of reserves. And so the stablecoin world is already, I would argue, being treated very differently and required to have 100% reserves, so they don't need insurance. They're already fully backed. And one of the things that's done is create a brand new market for U.S. Treasuries. And we needed that, Maria, because as you know, as the United States continues to accumulate debt, the people who are interested in buying our debt gets thinner and thinner. So it's just been a wonderful asset for placement of U.S. Treasuries, and it's helped buoy up our Treasury markets.
Senator, I want to move on to Kevin Warsh and the Homeland Security situation. But real quick, when would you expect this markup to happen? Is this now a March, April affair?
Well, I think we'll see it.
Market
this
is
spring.
up
I agree with the Secretary
1.6
that it's absolutely
6%
imperative that
on
we
SPY.
move on this legislation. This is a huge new horizon of innovation, but we're still in the middle of a very significant set of negotiations. We're close, but we're not there yet.
All right, Senator, what's your take on this pushback from Tom Tillis? He's holding on to this threat that he's going to block President Trump's nominees for the Fed, certainly the chairman of the Federal Reserve, Kevin Warsh, unless the investigation into Jay Powell is dropped. I spoke with Senate Banking Committee Chairman Tim Scott. He oversaw the June hearing at the center of this probe. He joined me on this program this week. Watch this.
I was the one asking the questions. Jay Powell was responding to me. Obviously, he and I have very, very strong disagreements on many issues, number one. Number two, I believe that it's time for a new
1.76, 1.74% on SPY.
I found him to be inept at
This shit
doing
is
his
nuts.
job, but ineptness or being incompetent is not a criminal.
I just added 5K into
I believe
next
what he did was
Thursday.
made a gross error in judgment. He was not prepared for that
SPY
hearing.
puts.
I do not believe that he committed a crime during the hearing.
So you think at the
I'm
end
going
of the
bigger
day,
into
Tom
next
Tillis
week
will
now.
vote to confirm Kevin Warsh?
6.915.
Want to be on your show to say it himself, but my conversations with him very
Retrace
productive.
2 whole day.
Senator,
0.618
what are
fib.
the odds that Kevin Warsh gets confirmed, and when are you expecting
We're at
that
Tuesday's
confirmation
level now.
process to begin?
As if nothing happened.
Well, I think the president made a stellar choice. I've known Kevin for years. I worked with him when I was Undersecretary of Treasury. He was the
today
Fed
NVIDIA
governor
too.
at the time. He's got all the right
Bear trapped everybody in
experiences.
the
He's equipped for
3/3.
the job, and he's also got a
And I
reformer's
wanted
heart,
to long the video, but it
for
was looking so
reforming the Fed,
fucking
which is very
terrifying.
necessary.
And this is
I
how they do
agree
it.
with the chairman. I don't think
It is the most fucking
Chairman Scott, I
terrifying
don't
1/3,
think,
2/3,
Powell,
3/3 on the
can,
video, but they just burnt
conducted any criminal
everybody.
activity.
Expiring today,
I think the
expiring
oversight
next
of
week
the building and all that should
on the
be
video.
taken care of by the
I
banking
wanted
committee.
to
We
long
should
the
hold
video
him
here,
and
but
the
I was
Fed
like, you
to
know what,
account.
fuck it, I'm not going
And
to
I
do it.
think
They're
it'd be a
going crazy
mistake,
low. They went even
and
lower,
unfair to the
171.
president, unfair to
This is
Kevin
fucking
Warsh, unfair to
unbelievable.
the
Somebody was
country
like yesterday,
to
oh,
hold
171,
up,
170 is
his
going to close that, and it
hearing
really did.
on the
I
basis
guess,
of,
it really did.
of those
Like
charges
prophecy,
against
but I was
Chairman
like,
Powell,
bro,
which I
that
don't
shit is
think are warranted.
terrifying. Like,
So I'm
that's
optimistic
not
we'll
something
move
to be
forward on
fucking
that. We'll
happy
talk to
about.
Senator Tillis
And
about it, but
holy
I think there's a good path here, and I think we need
Man,
to
I
move
really
quickly
wanted to long the video
because the
yesterday.
president and the
It's
markets
fucking
and,
crazy.
America
I
needs a new Fed chair.
can't even fucking believe the words that are coming out of my mouth, but 170 to 184 is literally fucking insane. This is literally from 50% down.
Between Republicans and Democrats.
All right,
In
even
the Senate and
NVIDIA.
in the Congress largely.
NVIDIA,
Now we're here
IWM.
once again facing issues
Best
around
believe.
funding. Senate Majority Leader John Thune is warning serious negotiations have yet to begin. And we're 1 week away from a
This is fucking everything.
potential shutdown of the Department of Homeland Security.
This is fucking everything.
Senate lawmakers
Probably
left
QQQ
Washington
too.
for a long weekend as funding for
It's
the
like a
Department of
QQQ
Homeland
bigger
Security
time
is
frame, man.
expiring next Friday. Where is this going in your view? Do you expect that we're going to see the department close down? It's going to have a lot of impact from travel to
chart
FEMA
frozen.
and beyond.
Yeah. This is really unfortunate. I will never vote to shut down the
We were
government.
at
or part of the
595
government.
yesterday
It can't be
close,
used
that's
as
all I
political
know.
leverage. What's happening now is political theater. With the Democrats not moving on the DHS funding, there's two things that you need to know and your viewers need to know. Number one, much of DHS and certainly ICE and the Border Patrol are already funded through the Working Families Tax Cut Act. So this isn't going to affect them in really any way at all. And second, the reforms, or many of the reforms that the Democrats are arguing for, body cams, adequate funding for oversight of detention centers, training for de-escalation. All those things were
And this is what they
already in
target
the DHS
on zero
appropriations
DT,
bill,
though.
which the House passed,
The fucking
and the
3/3
Senate, committee passed.
and the
So
fucking
this
zero
is,
DT.
This is
That's
really a
just
political
part of the
exercise.
system.
It'd be irresponsible because, as you say, the Coast Guard, FEMA, and the Secret Service would be affected. It'd be a terrible mistake. I'm hoping we can find a way through this. The White House is negotiating
Yesterday
with
low,
Chuck Schumer
2/3.
at this moment, and I'm hoping we can.
3/3. And they get everybody
coalitions
like
prevail.
that. 1/3,
All right, we'll be watching
2/3,
you work on that.
3/3,
Senator, it's always a
3/3
pleasure to
doesn't
see
break
you.
the
Thank
low.
you, sir.
Thank you.
All right, Senator Dave McCormick in Pennsylvania. We'll be right back.
Wild, wild, wild.
Industrials. The rotation out of tech has been a very good thing for Caterpillar stock. The heavy machinery maker is up nearly 25% this year and nearly 95% over the last 12 months. Caterpillar hit an all-time high on Wednesday and is 1% below that mark in today's session. We are trading higher by 5% right now $712.50. Let's go inside out on Caterpillar and the industrial sector. Joining us now is Jonathan Secreta, who's the VP of Equity Research at CFRA Research. Thanks so much, Jonathan, for joining us. Happy Friday. What a great start for industrials. Just talk to us about what you've seen as far as that rotation out of technology into this sector.
Right. So thanks for having me. What's interesting is there is rotation out of tech, and we're seeing maybe some flows towards Caterpillar, but really Caterpillar's growth story right now is very much aligned with technology, right? That power generation business is doing exceptionally well. Fourth quarter sales and power generation was up 44% year over year. Really some incredible momentum. And we're also looking ahead. Backlogs were up 71% to a record $51 billion. So pointing towards very strong momentum continuing into 2026. And as you said, shares reflect that momentum, up almost 100% over the past year. So we think that looking ahead, investors should be a little cautious on valuation currently, but the fundamentals have been quite strong.
You know, one thing that I've been covering a long time is the tariff impact on this company in particular. I remember I used to speak to some of their suppliers out in China about that. And I mean, this is obviously something that they've been trying to grapple with for a long, long time. Just to talk us through what you're seeing as far as those related manufacturing costs and how they might actually continue to be a margin obstacle here, or are we out of the woods on that front?
Right, not quite out of the woods yet. Looking to 2026, tariff costs are expected to jump higher, about $2.6 billion impact guided from Caterpillar themselves. Certainly, shifting supply chains is a complicated, time-intensive process, so it's not something Caterpillar can shift very quickly. They are making headway there, but it's something that's going to take some time. But even so, we're expecting margins to improve this year. Operating margins around 18%, kind of on the low end of their expected range, but nonetheless a bit higher than last year. Really supported by volume growth, a bit of pricing realization that's been absent over the past year, and also just the profitability stemming from the power generation business and really the power energy segment overall. At this point, that segment makes up about half of the sales, 60% of their profits. So as it becomes a larger share of mix due to outsized growth, we're expecting some contributions. But nonetheless, tariffs are an obstacle. But this is not something investors are putting Caterpillar in the penalty box as of right now. Really, they're quite focused on growth, which makes sense, just given how much momentum there is currently with Caterpillar.
And it's interesting as far as that unprecedented demand that you point to with respect to the data center and the power generators that they are supplying for this whole AI build out. I mean, it's like industrials have become this whole sort of backdoor adjacent AI trade. It's really all part of it. Who else are you looking at as far as a beneficiary in this space?
Right. So Caterpillar is solving a very real problem for data centers, and that's power. One of the issues is that it can take several years for actual grid connection to be taken place with data centers. So really in between a bridge, if you will, are these large reciprocating gas and diesel engines. And there is a number of players out right now. Really another top pick for us that's at the center of this AI infrastructure boom is GE Vernova. This is another name that's really grappling with unprecedented demand. Margins are benefiting quite significantly as pricing follows that increase in orders and backlog. And we should start to see, I mean, there's a lot of visibility given by these backlogs, right? Record levels for GE Vernova, it's well over $100 billion for them. And that's something we currently have a buy recommendation. We think there's a bit more room to run as far as earnings potential for GE Vernova. They're starting to see a step change in margins that Caterpillar isn't quite enjoying as of yet. So we currently have a buy recommendation on GE Vernova. We think the premium multiple is
divergence
a bit more
on QQQ
on this name, but this is another power infrastructure play we think investors could benefit from.
Okay, we'll be watching. Yeah, it certainly is all about the energy and these power needs. Jonathan Secreta, happy Friday. Thanks so much for joining us. Have a great weekend. That's the VP of Equity Research over at CFRA Research. Let's trade it.
All I can think is that they're showing north using the divergence.
More than $1 trillion wiped out from big tech market caps in just the last week as those 4 large hyperscalers announced they expect to spend more than $600 billion in CapEx this year. Our Drew DeBosa has more on that in today's Tech Check. Happy Friday, Dean.
Hey, happy Friday morning, Carl. So this really gets at a contradiction right now at the heart of the AI trade. Software stocks, they're in free fall, and the logic here is that, well, AI works so well, it's going to eat these companies alive. Yet the other side of this is the mega caps. They're building for exactly that, spending hundreds of billions of dollars to make AI that is powerful, and yet they're getting punished too. So you got to wonder, which is it? AI that is so good it destroys SaaS, but the companies building it are wasting their money? Both of these things, they can't be true. Meta might be the best example of this contradiction. It is spending more on AI as a percentage of revenue. 50 cents on every dollar is going back into infrastructure. Amazon's ratio, it is half of that, with an actual very large
I think they're
cloud
cooking
business.
something at the
Yet
top
it's the
now
one
at this
selling out.
point.
Yes, Meta's top line growth, it has accelerated.
I don't know about
but
today,
CapEx
but
to revenue is growing
at this
faster
point,
than that.
with the
And
market
its
up,
operating margins,
SPY
they
up
fell from 48 to 41
1.76,
year over
1
year.
point something
Free cash
percent,
flow fell 15% last year.
1.71%,
And given what they're planning to
QQQ
spend
up
this year, it could get cut in
1.92%,
half or much worse.
IWM
Now, I
up
spoke
3
to someone who
point
sits right in the middle of all of this.
something
Versalcio
percent.
Guillermo
I
Roche,
think
who
this is a
runs
setup
on
at this
top
point.
of OpenAI and Anthropic. He said that
It's like
a
we're
one-person
at
billion-dollar
all-time
company
highs.
is well within sight. So
Channeling
the
at
market
the
may be
all-time highs
selling the
almost.
winners and the big spenders, but leaving room for
We
a
could get a
whole new
breakout
set
too,
of
possible
companies it
Monday,
hasn't yet
a
priced
little
in.
bit higher, and then figure
Guys,
out.
we may be about to find out how this all gets
Expecting this shit.
resolved.
Some
OpenAI
sort
is
of a
preparing
fucking
for what could be a $1 trillion IPO. Anthropic reportedly in early
fucking
talks
point.
as well to go public. When they file, they will have to open the books fully,
today now.
revenue, margins, burn rate, all of it. And then the market won't have to guess whether the AI trade makes sense. It'll actually have the hard
Fucking
numbers,
cooking today.
and that'll be really interesting, guys.
Meantime, a lot of desks
We were at
today,
684 and we're at 690 now, so I mean, I can't. I
why
haven't even looked
open
at
down
0
9
DT
when
today.
AWS
I
is
haven't
growing
even
at the
looked at
fastest
0
in 3
DT a
years,
single fucking time
backlog
today, but
growing
my
faster than
goddamn 3
revenues, up
DT was
38.
moving like 0 DT, and it's now it's moving like a 3
exactly
DT.
this
So
contradiction.
that's a
Why are
fixed
we
crush,
punishing
and
the
then
companies that are making AI more powerful? And we see the flip side, which is, can disrupt software, the software trade entirely. So this is where it
shit
doesn't
really
make
looking like
sense.
it's not trying to
Why
pull
is
back
nothing
today,
working
though.
right now? And it may be
Wild.
something as simple as macro is more important right now. It may just be
28
that there's just
EMA
so much
when?
uncertainty. I mean, look at the next few weeks and months. We're going to get more model
Man,
releases.
we've been hovering at the
This
20
is
and
going
chopping
to change,
upwards
so
today
perhaps the
forever.
market is kind of just waiting and seeing, because the headlines in AI, the progress is coming so incredibly quickly. It's really hard to tell what's going to be disrupted and what is going to
Divergence
survive.
at the roof is being
We need
cleared.
like a calendar of when these updates happen.
Maybe
like an
690
economic
is
data
really
calendar,
fucking
because
coming.
they're so
50 cents
marketing.
away.
I know
That's
they
the
want
next
it that
fucking
way,
50
but-
cents
The
up.
thing is, sometimes, exactly, we don't know. They could get delayed, and a lot of this depends on the infrastructure being built, right? That's the whole irony.
Bulls
of
are
this.
clearing
We're
the
seeing these
divergence
models,
at
these
the
powerful
roof
models
on
that were put
SPY
into
right
place
now.
2 years ago by all of the money that the mega caps
Right
were spending.
fucking now. And IWM is testing the roof again. Showing complete north on everything. Yeah, we gotta watch this.
This was as big as it can get in terms of a capex number out of the hyperscalers, and probably because they went last in terms of reporting earnings. But look, I think had they not gone that big, the stock would have been up because they posted best AWS growth in the last 3 years, and sequentially things seem to be improving. It's just that $200 billion number and the fact that their margins are going down on the AWS side, that's why you see this kind of stock reaction. And there wasn't enough justification to ramp up capex by about 55% to $200 billion.
Mandeep, how long are we going to see these massive increases in CapEx? I mean, this was for 2026 full year. I mean, are we going to see this for another 2 years, 3 years, or have we, is there an end in sight, I guess is the question.
So based on our work, at least so far, we feel this is the peak CapEx
That's a good question.
growth. You will still see
Is
growth,
there an end in
but it's
sight?
not going to be of the same magnitude. I mean,
This fucking
2026,
madness
we are
today.
talking about
Or
a
are we
year
just
where
extending the
CapEx
3/3 all
from the
fucking day long?
hyperscalers will grow almost 60%.
That's a good
So,
fucking
and
question.
last year we had 2024 to 25 was also 70% growth in
If
CapEx.
not today,
so
how?
we've gone from $200 billion of
What are they
hyperscale
gonna fucking
CapEx
do to
to now
extend this bitch?
$650 billion. I think that growth
Man,
rate will
I was looking at the
certainly come
long-term
down,
chart, and for
but
us to go back to
there's
all-time
no doubt
highs
that
would be
we are still in that
probability-wise.
part
I
of
mean,
the
it would be
S-curve
fucking.
where
We'd never
there
never
is
seen
more
before like
demand
15,
and everyone has
25%
called
chance.
out
But I mean, the
supply
market could do
constraints
fucking
and
anything at
they would
once.
have
So.
grown faster had it not been
Shit,
for
7,700
supply
SPY, man. If
for
we're
AI
there next
infrastructure.
week, I'll be
So,
fucking
Mandeep, we talk to
dead. But I
institutional
mean,
investors
bruh.
all around the world here that focus exclusively
At that
on
point, we
technology.
gotta fucking break it
Where
down.
are they?
I mean, at that point, like, nah, this is.
Where and when and to what degree this industry should invest in AI? Has the fundamental view of AI and how this tech industry is going to get there, has that changed among some of those big tech investors that are big shareholders in so many of these companies?
Yeah, I mean, right now you see both, anxiety and some sort of panic as well in terms of, the level of free cash flow that's going to get hurt because of this spend and how fast it's happening. I mean, the cloud market grew almost 20% plus for a decade, and everyone was fine. You could see predictable free cash flows. This is a very big upfront spend, and look, it makes sense that you have to spend first to build the infrastructure, but I think you really have to take a leap of faith that all these companies that are putting $200 billion will see ROIC for their spend. And I think that's where there are question marks that some of them may not have that level of
So we'll only
ROIC.
know at
So
4:01
that's
p.m.
what's
But
reflected in
basically, the
panic
most important
so
thing
far,
right
but there's
today
no
is
doubt that
into 4,
workflows
and
are
right at
changing
market
and
close,
there
we
are
will
some real
basically get an
productivity benefits
understanding
we're seeing
because
out
of the
of this spend.
options data given us, the options data. We will have an understanding if there are more long-term bulls or if there are long-term bears into March 20th, into September or February 20th, into February 20 something. So we're right in the middle. Went down 200 points, went up 100 points. We're in the middle. So only at 4 p.m. close will we really have a true understanding of the bigger picture. And will the options data give us an understanding of what is going on in terms of the intraday move and in terms of the higher time frame as well. That's what I can say at this point too. Wow.
Have some of them that remain under pressure. And again, I'm going to equal weight it here to give you a look at what is going
Software.
on here. Stocks like Snowflake and Oracle are bouncing back here today, but Atlassian is still down about
divergence cleared again.
Zscaler, which is more on the cybersecurity side of things, is falling. ServiceNow is still declining as well. And if you look at the 5-day chart here, wow, I only see 2 stocks on this list that are higher on the week. So this just shows you the depth and breadth of the selling within software this week. Even as some analysts have said to us, you want to come in here selectively and start to do some buying. Maybe that's happening to some degree today, but we are still a long way from any kind of
divergence at the
recovery
roof
in these software stocks. And speaking of which, let's talk about crypto too. Here's Bitcoin here, and
they
what
might
we
still
are seeing
chop
on
or
an
hover it up here.
intraday basis here. That before we're showing the 5-day chart, and indeed on the 5-day, we continue to see this slump
Man, I wish
here,
I wish I had the chance to look at IWM and study it really. I really wish I had the chance to just long IWM today.
Dig more into what's happening within crypto this week, because Bitcoin now hovering around that
Historical shit
68,000
happening on
level. The
IWM
token's
too.
struggling to find a bottom after the latest steep sell-off. It's now down nearly 50% from all-time highs in October of last year.
$10.
Yahoo Finance's Ines Ferre is joining me, and also joining me is Andy Baer. He's the managing director at Coinbase Indices. And guys, Thanks for being here. So there's a lot to talk about, obviously, when we're digging into what's going on here. So Andy, I want to start with you and what's going on with the declines here and this sort of struggle for a bottom. But the velocity that we saw throughout the week, sort of picking up steam. What's going on there?
I'll just make one quick correction. CoinDesk, not Coinbase. So
excuse
you owe 1 Bitcoin in the
I do. Oh my goodness.
You said it perfectly at the beginning that the bear market really started in October with a big deleveraging event that was very crypto native. That was on the 10th of October. That gave the positive vibes of the bull market that it carried us through so much regulatory process. It ground to a halt very quickly. And the mood, I wouldn't say it changed to fear. And I think even before yesterday, we weren't really in a fear environment, but a skepticism and boredom environment where, crypto, all of crypto, kind of as a not necessary, a not core asset, was feeling the same kind of lack of conviction that we're seeing.
Yeah, I'll be skepticism. Kind of if we drop to the lows by next week, that would be true
up until before yesterday, I think that, it wasn't a happy market, but it wasn't a fearful market. What happened yesterday really
today they're showing the bounce.
And what made it so different?
I think we really had a second deleveraging event. You could see by the velocity and by the inclusion. I think probably the most interesting thing to look at, now crypto is a very, they're very segmented. There's a lot of crypto native leverage activities. There's a lot of perps, a lot of trading on exchanges like Binance and Coinbase and our parent company Bullish. And then there's ETFs and ETF options. Yesterday saw really record-breaking volumes in the IBIT ETF and the IBIT ETF options. That really brought volatility quite high. There was a lot of option buying yesterday. There was a lot of option buying on crypto's biggest crypto native options exchange, Deribit, yesterday. So whereas even last week, gold volatility was higher than Bitcoin, which is remarkable in itself. Yesterday, you saw a lot of option buying, and it had the feelings of something that had some leverage in it being unwound. With all this motion going on with precious metals, it's not too hard to take those apart. That there was a lot of fast money that was darting for new homes yesterday. So it was a day where you really had to just watch and like one of your quotes said, a terrible time to try to make speculative trades for people. You never want to trade a market when it's this volatile, but you just have to watch and see if that got flushed out.
A lot of people were trading in the market when it was that volatile. That's to be sure. That's to be sure. Ines, what have you been seeing here, and what do you read? Because I know you read very widely. The research is out there. You talk to a lot of people. Where is the sentiment sort of coalescing now as to what's going to happen next?
Well, Julie, Sean Farrell over at Fundstrat had said the sentiment seems to be fear and fatigue, really, from crypto native holders, basically. But look, it's on pace right now for the worst week since 2022. We'll have to see how it goes because we are seeing a rebound today after yesterday, and yesterday was the worst daily drop since 2022. But certainly there has been sort of a sentiment shift since that October liquidation that you were just talking about, and whale selling also, which really started in the summer and really picked up sort of in the fall. But 10x Research also is a firm that does a lot of data. They analyze a lot of data and flows. And they have been talking about this overhang that is with overexposed holders of spot Bitcoin ETFs, and basically saying that their cost average is around 90,000, and many of them would have wanted to sell at higher levels. And so you have this overexposure happening. That's an overhang, as well as with Ethereum as well, which is what they've been seeing too. I will say that the feeling is that the bottom may have not been reached yet. I mean, we saw this big, massive drawdown, but there is the possibility that we're still going to be going lower. 10x is saying that probably in the summertime is where you see the real buying opportunity. Sean Farrell over at Fundstrat is saying that he's deploying some money right now, but he does see that there is a risk that you could go lower even.
Yeah, and that seems to be sort of consensus on Polymarket too. We were looking at the odds for that, and it looks like
the bears are slightly trying to pull back.
28% of the odds makers saying 55 will be the low just this month. So this doesn't say that the bottom won't be below that.
PM level.
It just says it could fall as low as that this month. You've got the brave
level.
few saying that it's going to rebound
Bears are
to
trying.
85,000,
Bears
13%
are trying.
there.
Bears are
Andy,
trying.
what about you? What are you hearing?
I think
12 p.m. level must break for them to create any
week
sort of
that,
bigger
that
1/3, 2/3, and trap the 1/3, 2/3 bullish cycle since
influential people and people
1055
who
as
know
well.
what's going on in Washington.
12
The mood
p.m.
around the Clarity
is
Act
the
and
level
its passage,
of
which would be a fantastic catalyst, probably the
interest
largest
for the
catalyst
market.
for crypto
It's
in
a
particular,
DMZ.
is that would get done before Memorial Day. We don't have a personal
Demarcated,
call on that, but the consensus view or the
demilitarized
modal
zone.
view is that will get done
DMZ.
and progress is
Is
faster.
that really going to help the price, though?
Oh,
because
absolutely.
but usually you see a rally into a news event. In any other regular asset class, you anticipate something, you buy in advance of that. We have not seen that in this case, even as it seemed to be getting closer.
I agree. I think that the market would still treat, let's talk about the best case, the market would treat completion
that would be
of
the
Clarity
28
Act
EMA
almost
if
as
it
a
ever
surprise
does.
at this point. Maybe in the days leading up as evidence accumulates.
Could not do
But
it right now either.
There's really not a lot of
5-minute
market-based
IWM
hope,
growing and
right,
growing.
that Clarity would happen. It's going to be
1
a big
minute trying to
fundamental
bounce.
shift. On the skepticism side, there's a lot of AI
There's
AI
IWM
parallel
pull
building.
through.
There's a lot of tokenization building, a lot of stablecoin building, on the hope that there's a lot of demand out there for these kind of products.
It
We
says
think that there is,
IWM
but
rejecting. It
again,
sure
it's
looks like it's
speculative. You're
trying
kind
at
of
the
building
5,
things and
but the
hoping
1
that they
minute
get
it is
consumed.
trying to bounce.
And I think, again, anxiety and skepticism have crept into this idea of adoption and growth. Right now we're still, it's funny, crypto's still a young asset class. It's still something that is sitting on the outside, on the satellite part of most institutional investors' portfolios. It's not a core asset yet, and it can get flighty. So when people are experiencing paper losses, they tend to get a little anxious. So
yeah, and these are big paper losses.
they are big paper losses. The asset class, though, from a fundamental point of view, is as strong as ever. Its adoption is as broad as ever. It's every day that it lasts, it's lasted another day and it's grown another day. The education narrative continues to expand. The regulatory efforts continue to expand. And just blockchain technology with things like collateral movement and settlement of securities, that's not going to turn around. That isn't, it has oil tanker type
IWM really
speed and
failing.
agility, but it is certainly moving. You can see a wake behind that.
And that's sort of independent of the Bitcoin price.
It's independent of the
Crazy
Bitcoin
work.
price, but
Crazy work.
crucially, right, a
It's
broader rally
squeezing.
of those layer one blockchains,
Crazy work,
Ethereum,
man. The
Solana,
last
some of the more
fucking- in the
specialized
crucial
blockchains
minutes.
like Avalanche or the Oracle companies like Chainlink, they will help. They'll be part of that, right? Fidelity issued its first stablecoin. Tether issued a U.S. compatible stablecoin. These, to the extent that these things really help improve things and present new features that people use, it's technology that, like AI, that's going to take a while for people to have that aha moment. But we feel stronger than ever that it'll happen. The Genius Act was a great start. Clarity will be another second piece.
Ines, I got to ask you
Calm
about
down for 10 seconds.
strategy.
Hit the
also.
like
We
button.
talked about it a little bit
Everything will
earlier
be
with our
okay.
Jared Blickery, but the pioneer of this whole digital asset treasury
Calm down a little bit.
structure. It's not looking so great
I was
right
gonna
now,
delete
right?
one message, but
so
just get a 10
it's not
second
trading at a
cool down.
premium anymore to the underlying price of the Bitcoin that it purchased. And that seems to be kind of the locus of a lot of the concern around what's going on right now.
Yeah, that's right. And we know that they had set aside that fund for that volatility that we would see in crypto. But when you talk about the cost basis, I mean,
He knows what I'm talking
their
about.
cost basis, their average cost of what they have purchased for.
I only like the one message, all right?
Yes, it's
But,
not
like,
looking
calm
good
down a little
for
bit, 10
digital
seconds.
asset treasuries in general. There is
Making me
expectation that
fucking freak
there
out.
will be consolidation, that there are going to be these companies that, especially the newer
Market
ones,
is
that
exciting,
came in
man.
with tailwind of all
Exciting
this,
too. At
and
120.
those may not survive.
It is
I mean,
failing
there
to even
may
get the 20
very well
EMA.
be
It's
large
failing. The 28
consolidation.
EMA
And
is
this, of
somewhere
course,
here
is
at
sort of
12
the
p.m. and
poster
it's
child
failing
for
and
these
failing and
kinds of
failing.
companies because they've been buying since 2020.
no
But if you
fucking
take
clue.
a look at their stock, yeah, I mean, year to date, today it's up, but
It's
year
almost
to
like
date, it's down 21%
35% bearish,
over the past
trying.
year, down more than 60%.
65%.
But Julie, I did want to mention one
Still
note that
bullish
you were just
trying.
talking about the market structure bill. I do think that is very significant. significant for Bitcoin because we saw that when Coinbase had sort of
Just because the candle
said that
is
they
saying
didn't
that
like
in
the
the
version
MACD
that
and
they
RSI is
saw,
pulling that back from
recently,
being bearish,
we
I
saw
can't
Bitcoin
lean
really
bearish
reacting
here.
to that.
If the MACD and
And
RSI was in
strategists are
bear
saying
territory and
without
the volume was
big
bearish, I
catalyst,
would be leaning
it's
60-40
hard to
bearish
see
because the
Bitcoin
candle is
going a
probably
lot
showing that.
higher.
But
You do need that market
candles
structure build to go
itself
forward. The question
is
is,
showing
will
what the
it or
MACD and
not
RSI and
because
the
of
volume that
midterms that
they're
are coming up
fucking
as well.
cycling.
Good point. Ines, Andy,
It's
gotta
some
leave.
sort of
Thanks,
algo
guys.
range. Maybe
Appreciate
I
it.
didn't draw an algo range here.
And
Maybe
we'll
I was
dig
lazy.
deeper
Time
into
is
more
110.
prediction
Time
markets
is
around crypto
110.
or
There's an
anything
algo
else.
range
Have a
here.
look at the prediction markets hub on Yahoo Finance, powered by Polymarket. Coming up,
Algo
Under
range
Armour
probably
has
here
struggled
too
with
that I never
forecasts
drew
more
at
than
1
expected
p.m. but it's
losses as
okay.
it attempts a
This is the
turnaround.
most recent
We'll
one.
discuss it
So.
with an analyst next.
I want to watch this sports betting.
Parlay, you're really invested in the game. If you look at the data, fans are much more likely to watch the full sporting event or the broadcast.
Algo range going on the
engaged in
market.
sports betting, and
110.
the technology's just gotten better and better. We've got a great partnership.
110.
For instance, with Amazon Prime
Things
right
are
now
happening
for
so slow.
NBA and WNBA, and you can link your Amazon Prime account with your FanDuel account, and you can actually track your bets as the game is going on. So it's the technology's really developed, and it makes it more fun.
And Amy, as we've seen sort of more offerings out there, we've also seen more companies jump into the space. And so I got to ask how you're thinking about competition with the prediction markets, the Kalshi, the Poly markets out there that have become really popular.
Yes, I'm delighted to say we have our FanDuel Predicts product that we have
Chopping
launched.
at
It's
the
available
roof
in
with the
all
divergence.
50 states.
Statistically speaking,
we're
this
only
is
offering sports contracts in states where
still
sports betting
bullish.
isn't legal. So for us,
Maybe about to
FanDuel
break the
Predicts
roof
is
or
a
not.
great
Statistically
complementary
might not,
offering
but
to our core legalized sports betting
I mean,
product.
statistically
And
might
at the end of the
any
day,
minute,
our
but
North Star and objective is
chopping
still
and
to
chopping and
safely
chopping,
legalize
it's
and
for
open
sure
up
not bearish
all
yet.
50 states. If you look at the offering that we have in New York and New Jersey that has been legal for quite some time, it's much more robust, right? As I said, for the Super Bowl, you've got hundreds of different markets. You can parlay just about any bet you want. You can go in and customize the lines. So that's really still the objective. But in the meantime, as the industry leader, since we have an opportunity to offer a safe, regulated product in markets where sports betting isn't legal, it's a great opportunity for us.
Amy, can you give me any sort of numbers around the reception you've seen for your prediction markets offerings as of yet? I know when we saw some of the sports offerings rolling out on some of those
One thing is for sure
they
today.
were releasing the numbers about the adoption, so I'm curious what you guys
Today,
are seeing.
the perma bulls
It's early
and the
days.
candle
We're not
traders
closed,
are
so I can't
happy.
comment specifically
Today,
on numbers, but we're very pleased with how the
Iran
product is performing in
news
the
and
market. We've
whatnot,
got a phenomenal
whatever
partnership
disappeared, there's
with
none
the
of
leading
that.
exchange
It's actually
provider,
set up.
Chicago Mercantile
But
Exchange,
today,
and so
and
we
into
keep
next
adding
week,
more sports, more combos, and
Still-
more opportunities for fans to engage, not just in sports contracts, but we also have in all 50 states, you have an opportunity to engage in contracts around financial benchmarks. So where's the S&P 500 going to close, or the price of gold, political events, cultural events like the Grammys. So it's a pretty broad offering, and we're very happy with how the early days are
it's
going.
one directional bullish, and we got super close to 690.
I'm curious
So
about prop bets for the Super Bowl. If there are any that stand out to you, or any that are particularly popular or that are fun this year.
that's what I see.
Well, prop bets are always very popular. Yeah, I'd say probably more
Today
than
is a
50%
good
of the
day
bets will
for
be
perma
prop
bulls
bets.
and for
It's
price
really the
target
consumer's
690.
way of expressing what they
But
think or what
like,
they hope is going to happen during the
yeah,
game. This
after
year,
the last 3
you always get a
fucking
lot of
days and
activity
the
on
2
the
days
quarterbacks,
before
so
Monday,
Drake
I
May
don't
and
know.
Sam Darnold are popular as
It's been a long
Jackson
and a
Smith,
rough ride.
Stephon Diggs. So there's a lot
For
of very
both bulls and
popular,
bears, but like it's been rough as
props
fuck
in there. And
for
the fun thing
long
is on
staying cycle
FanDuel,
fucking
you can
in
actually go and
between data and
customize
then
a lot of those
HOD
player
test
props. So
all-time
if you
high
think the
run
house
and then
got it wrong,
rejection and then
you can go in and you can
like,
figure
it's
out
been rough.
how many touchdowns.
sure. Bulls
Sam
and bears,
Darnold
I
was gonna
guess.
throw for
That's
us.
for
So,
sure.
Lots of opportunities if you're
Today was the ultimate 1/3, 2/3, 3/3 up on IWM, on NVIDIA, on a lot of things.
Thank you.
Things were setting up in the 3/3 yesterday and the
Well,
day
if you're
before
like
that
me,
in the
the main
huge ass
event
cycle
isn't actually
3/3. So
the game, maybe not even
Can't
the
lie.
commercials. It's probably
It's
the halftime
been
show. This year is Bad Bunny, of course.
Market
which
trying to
has
pull
been
back with the cycle
much
confirmation.
talked
HOD
about. It
divergence
could
is
end up being
there.
the most viewed ever.
Rejection
And
trying.
Book De Palma is is here
If
with me now.
115 breaks,
as we
the
look
next
ahead
time
to the
is
big
1
performance. You and I
1215,
being
1240
numbers
algo
girlies,
range,
right?
1215
We're
algo
interested in
range.
music, of course.
If that breaks, it's the
but we're also
DMZ at
interested
12
in
p.m.
the sort of halo effect
28
and what
EMA,
the numbers
the
are going to be
DMZ.
around the Super Bowl halftime show, and how many people are going to watch it, for example.
Yeah, and let's be honest, while you're actually
Might
watching
be
the
so
game, I mean, there's like a
visible,
group of
though.
people who are eating the snacks. That's mostly me. And then when the Super Bowl comes on, we're running over to
Like
see the
the
event. But take a
RSI.
look at how many,
Still sus.
what artists actually have gotten the most attention. It was
Mhm.
quite surprising.
IWM
Think
volume
about how
growing.
long this has been going on. You think about
Like
who's
the
gotten the
RSI
most
trying to
viewers. It
turn
was actually
down,
the most
but
recent
still
years. We have
sus.
Kendrick Lamar last year, Usher and Rihanna. So really the most recent years.
Right.
But then surprising to me,
Time
about
is
11 years ago, Katy Perry, and
1:25.
before that, Lady Gaga. So it's interesting
Cycles
to
were
see
mad
that
easy
it's not
yesterday
just the
and the
most
day
recent,
before,
maybe
up
viewership
and down.
numbers going up,
Cycle
but also
today
standouts
is
like
rough.
Katy Perry and
Big
Lady
channel,
Gaga.
channel,
Now,
channel,
expectations
small
are high
cycle,
for Bad
range
Bunny.
up.
And I wonder,
Channel,
though,
channel,
like,
channel, small
is
cycle,
it just the
range
most
up.
viewed games that
Drop
end up
off,
having the most
bounce
viewed
V web,
halftime shows?
small, small
How do you know
cycle,
how many physical people are actually
down, up,
tuned in
down,
during those
range,
games?
range,
because
range,
it's
range.
not like you're
Break
watching
the range
a game
up
and you
somehow
turn
with
it
the
off
ranges.
if you
I'll
don't
go
want to watch
ranges
the
like a
halftime show.
fucking
It's
rook.
and conversely, if you're not watching the game,
Somewhere
and
here
you
I
try
said this
and
is the
time
worst
it,
way to
turn it
go.
on the halftime.
But
I
like
think
this
there
is
probably
literally
are some
the worst
people who
fucking
do
way
I'll
to go.
admit, sometimes I did that.
I was actually
fucking
talking
abyss.
to one of our makeup artists this morning who is a Bad Bunny fan, and we were sort of Googling trying to game out when the halftime show was going to hit.
I'm really bad with one directional shit. Maybe it's because of IWM. I don't know, but it's very, very hard for me to
if
be
you're
like,
not watching the
oh,
game,
roof.
apparently that's when you want to
Or
turn
not,
it on.
because they just make roof
Did
after
you know
roof
that
after
when
roof after roof,
artists
like
play
nothing. Break
the
the
Super
floor
Bowl,
after
they
break
do
the
not
break
get
the floor,
paid
floor for like
for
nothing.
that
Pivot
gig,
point
which
just
And the amount of
is
time
there.
and effort that they
Pivot
probably
point
put
was there
into
like
this.
3 times
but they
today
get
though.
paid in other
Somewhere
ways.
here and
Okay,
somewhere here
so
and somewhere
take a
here.
look at some of the streaming bumps
Pivot
that we
point
have seen
fucking
people
roof
get in the
breaking
past, and this is
all
sort of
day long.
around the performance. In some cases, leading up to, and then after.
Because you want to like get to know the songs
Sure,
before.
right,
Yeah,
exactly.
Especially with Bad Bunny, I'll admit.
Yeah, you
I've
and
been
I
practicing.
You and I are like glued to Duolingo to try and learn
Yes.
Spanish in the next few days before this happens. But so we have seen huge multi-100% bumps. For these artists, which is also interesting, and in some cases they get a bump for tours as well. For Bad Bunny, the bar is already high, because if you looked at his touring numbers for 2024, for example, and he's still on tour now. I mean, his tour is huge. In 2024, $211 million is what that tour grossed. More than 750,000 people or tickets were sold to that. So, and they were already, the average ticket price was nearly $300. So he was already getting those kinds of grosses. Actually, after the Super Bowl, the following Friday, a week from today, he's going to be in Buenos Aires,
What even is this?
resuming his tour, South America, Australia, and then to Spain.
Yeah,
I don't
and
even fucking know, man. I don't even
contractually,
want
I
to
believe
know.
that he hasn't been able to do performances leading up to this halftime show.
that
At
makes
least
sense.
on the Grammys on Sunday night, that was like sort of a bit leading into that.
Right, exactly. That makes sense.
So
that
slow.
That the NFL wants to, guard their eyeballs for their big
Exactly.
show.
Just wait. Let it all build up.
Yeah,
the
yeah,
momentum.
yeah.
But think about this, Julie. When you think about the odds of how exactly this will not just play on the night of the Super Bowl, but then, of course, now we can stream it on YouTube after.
Yeah.
So when you think about the betting odds, according to Polymarket, about 11% chance. The odds here, about 11% chance that this will become YouTube's most viewed halftime show.
I mean, my question
on
is, what
YouTube.
after the 28
so sort of
EMA?
the betting odds
If it
getting
does
in
go
on
lower,
this, you're
it
trying to
just looks
understand
so
what are the
structured
implications
slow.
after the Super Bowl when it comes to the most viewed. We were just watching Katy Perry's 2015 performance. You can tune back into Lady Gaga, Kendrick Lamar, and others. So right now the odds are saying that this will actually not be one of them. It's about 90 cents you give out on it that it will not be the case. That'll be the most viewed after. But
right. Well, and
the amount of attention this got, I'm surprised to see this.
Yeah, I mean, well, it's not versus other halftime shows, though. It's versus any YouTube video. So I don't know. I guess.
She looks
I
very
guess
trappy.
we'll have to see.
Zero DT,
But as we
man,
know, people
still.
love their prop bets and betting on everything.
Yes.
So they're also betting on things
Oh,
like
fuck.
songs. Is he going?
This is
to
literally
perform?
almost the last
Again,
hope
I
for the
can't
Bears
claim
to
to
push
be,
down, but like it just
very
looks so
super
fucking
familiar
easy.
with his
28
over, right? With all of his songs. I
Nice
like
cycle.
them. I will be dancing during the halftime
my
show. But these are some of the songs that people are betting on.
And a lot of these, like Titi Mi Pregnuto, if I said that right, apologies if I did not, but this is one of his earlier songs in 2022. The first two are his 2025 songs.
Right, right.
So some of his newer albums just goes to show that for years, he's sort of been building up to this moment with many of these songs well known among not only the Latin American community, but also among so many viewers.
Right, and apparently La Mudanza got my intel from that same makeup artist, was a fan of his, is a big sort of love letter to Puerto Rico. And so the bets on that are that he would play it, sort of playing up his his heritage, right? And a call out to Puerto Rico, where he also did huge shows.
Yeah, those were big numbers.
Exactly.
Let's break that down. If you think about his Puerto Rico residency, it was about 31 shows, a 30-day residency, from what I understand. And $11 million in ticket sales. Not quite Taylor Swift's Eras tour, as people like to compare every tour to.
No, but that was
this was instrumental.
That was in one place.
Yes, absolutely amazing. Blow away bonker numbers. $200 million in direct impact on the economy. But then also, you heard about all these other implications of local artists getting into their recording studios, local bookstores, even real estate agents said that this bumped up people wanting to move to Puerto Rico.
Cool.
So really, a huge impact. I'm excited to watch.
I like Bad Bunny better than Taylor Swift. Don't at me. Thank you, Brooke. Appreciate it. And thanks so much. Have a great weekend, everybody. That's it for Market Catalyst.
Boo-hoo. Market sucks with this flag. It's data fucking eating into every single one of my shit into next week, but slowly. HOD continuously testing. Sick stuff. Slow, gradual fucking monster rip. And stay at the top. Computer fucking broken.
Let's get right to our panel. Matt Maley is the Chief Market Strategist at Miller Tabak. Barbara Duran is the Chief Investment Officer at BD8 Capital Partners. And Raj Patel is the Global Macro Strategist at Vanda Research. It's great to have you all here. Of course, I got to start with the markets. Obviously, it's been a topsy-turvy week. You got a VIX at 20 right now, which is actually off the highs of the week. But Matt Maley, I mean, you've seen a number of market cycles. How does this feel to you?
Well, you know, one of the things that we're looking at right now is this big decline in Bitcoin and the forced selling that's gone with it. And experience tells me that when you see this kind of decline in Bitcoin, you know, I should say not just Bitcoin, the entire crypto market, that market's just not liquid enough for people to raise enough money to meet their margin calls. So they have to sell other things. What the Bitcoin owners hold, they own tech stocks. And so I think that we've gotten a little bit of the baby thrown out with the bathwater on a near-term basis. And Bitcoin and other cryptos these stocks should bounce back.
Oh my God, the news.
Will they be able to hold any kind of bounce?
Oh my
I mean,
God,
we
the
have
news.
Amazon, their growth spending is bigger than their growth in revenues. You start to worry about how much more debt are they going to have? You know, what is their cash going to be, their free cash flow, et cetera. So there could be some more revaluation at some point again once we see some sort of a soon.
Yeah, I mean, Barbara Duran, if you look at a chart of the IGV software ETF versus Bitcoin, they basically have been trading in lockstep. Just yesterday on this panel, Jeff Kilberg made the point that Bitcoin's basically being treated as a cash machine. The fact that we've seen such a downdraft, there's been speculation of some forced selling here. Does it feel flushed out?
Well, I think it's always hard to know when you've had a massive sell-off like this. And, you know, we've seen this in all the risk on assets, and that's all the big tech names
It's Bitcoin. We've had 7 days of selling, so there's a lot of fears. Okay, is there more to go? But typically, I think these kind of sell-offs, which are a big overreaction, in my view, we're throwing out everything, even the hyperscalers that have great growth. I think these typically are buying opportunities. You saw that with DeepSeek last January, where you had Nvidia down 17% in one day, and of course, what's happened since then is stock rebounded. And the same with, I think, the tariff uncertainty in April. This is not 08. This is not a systemic crisis. There's no credit issues, maybe somewhere out there. But I think this will prove to be quite a buying opportunity. So, question whether you buy today or tomorrow, whenever. But these stocks are on sale in a big way.
Raj, want to get your thoughts on this. I mean, what was one of the biggest stories, one of the big trends last year, that retail investors were buoying the market? Is that what we're seeing now? Do they see buying opportunities?
Yeah, I think retail effectively epitomizes current market sentiment. So what we're seeing in our data is very much a retail investor that's probably selective and opportunistic, right? So a good example is we're seeing weekly retail buying of single stocks running around sort of the 54th percentile, somewhat pretty standard or average since COVID, compared to September, October last year, where that was in the 100th percentile, right? So I think it's very selective, but it's not an investor base that's completely out of the market right now. A good example, for example, this week on the back of sort of Google earnings, we saw the biggest day of retail buying in Google, in Alphabet, since pretty much May last year. So, selective buying, coming in, buying this dip, kind of epitomizing what Barbara was saying there, where I think retail effectively seeing value in some of the sell-off this week.
Yeah. Okay. Speaking of hyperscalers, Barb, Amazon sound like 7-8% right now, pre-market. Yeah. Operating income Q1 expected a little bit softer than expected, and certainly they're spending a lot here. But otherwise, the numbers are pretty strong.
Yeah, they are. And certainly you have to remember, they really are a conglomerate. But the key thing that people watch here is AWS. And I think they're down. It's an AI play. We're seeing all this last week as a question of who's going to make money, how fast can it be? And of course, they have upped their CapEx spending, which I see as a positive, where there's criticism.
Even if they drop to the 28 EMA at this point, obviously, this shit is
spending
just
because the demand
boring.
is real, and they see what they have to do to build out their servers, their data, their data warehouses, centers, in order to maximize this demand. So people have to adjust. Margins will be dinged a little bit. Earnings may come in a little bit. This is really to set up for the future and in the not so distant future. So I think there's a buying opportunity when these kinds of names get hit for these kinds of reasons.
Yeah, we were talking so much
Time is almost
about
2.
software, but some of the action we've seen in semis, especially when you think about Amazon, which has its own product that seems to be gaining traction, or Alphabet as well with their CPUs. What we're seeing in that part of the market and how that's factoring into the broader S&P moves now.
Man, I wish I took my best profits at fucking 25% yesterday. My count is at yesterday's profit levels, but this is like, it would have been great. Because I would have been down less than half of it almost.
They're still making money hand over fist.
Or maybe I would be down a little bit less.
That's what people are worried about. The thing is, more recently, we have...
Damn, they're squeezing the fuck out of my options right now. This is crazy.
The entire tech sector has been getting hit, not just, the software stocks, not just some of the...
I actually just should have fucking stayed away today. Fuck. Yo. What a day.
It has no choice but to knock down the rest of the market.
What a day.
They're so highly weighted. I mean, 62% of the NASDAQ 100 is technology. So if the whole group starts going down and the indexes start going down, I worry that, the retail investor, who is so important right now, is not going to rotate into other groups. They're going to rotate into cash because of all this talk of bubbles that we've been hearing
going the opposite way for me too today, along with the options.
It's definitely going to be important to watch those. Let's face it, the chip stocks have been the most important leadership group for decades. Keep a close eye on that going forward.
Fuck. Yo, my account looked crazy last night at like 9 p.m. Like, the profit that I made yesterday, I made like from 4 p.m. to 9 p.m. I just didn't take the fucking crazy ass fucking boost that I got on the 2 times the ETF, and now it's literally back at my entry level. It's the most greedy shit I've ever fucking felt. I literally entered at 505 at fucking the average, and then it was at 518, and then it went to 650, 630 on my Robinhood, and I never took it. I just watched the shit go down. This is like some shit that I'm feeling from back in the day when I was fucking young, man. Literally. And now I'm in the hope. I'm in the fucking hope. 1 third, 2 third, 3 third spike candle and it's playing inside of it. So this shit crazy. I've been huge on this shit. I was literally up like some. Man, oh no, no more. Oh no, no more. Market needs to pull back into next week now, bro. At least 685. At least 685. Into next week. This shit. It's too high. Too damn high. Man, the video went down though for 1, 2, 3, 4, 5 days. 1 full week, almost 5 days, from 196 to 172, and then pushed from 172 to 183. Man, but this is what the market targets, guys. I know this is the worst fucking shit to hear. And this is literally, just I'm saying this shit because this is literally what I told myself for fucking years and years and years. But the reality of the market is, right, the 90-90-90 rule applies. 90% of new traders lose 90% of their capital within the first 90 days. It's the fucking craziest shit ever. Due to steep learning curves, due to emotional pitfalls. This is from Google. Fear and greed, and it says, and a lack of strategy/discipline, common among beginners, right? Who jump in without proper knowledge and/or risk management, leading to rapid acceleration and deceleration. This serves as a cautionary tale to focus on education, building a solid plan, mastering psychology, and managing risk to avoid becoming a part of the majority. That's the fucking craziest shit. And it's literally what fucking Google's saying, not me. Like, that's the shit I posted on the fucking WhatsApp group, right? But I mean, that's the fucking sad, fucking crazy fucking truth of this shit, man.
I'm Danny Berger.
This fucking
Bloomberg
world
Open
and
Interest
this shit is
starts
so
right
fucking
now.
crazy.
It has been a whole week. Stocks, precious metals, and Bitcoin attempt to come back as dip buyers unite.
And also in that week, it's been a busy.
Significant delta beyond what consensus was for
That's the shit they're saying,
the sell
man.
side are calling it sticker shock. It's the same story we've been.
Momentum unwind or deleveraging, whatever you want to call it, from gold to silver and Bitcoin. And I mean, like, honestly, gold and silver should never and have never meant to be a momentum trade. And like, the way up was crazy and the way down is now equally crazy. And all the leverage that we have seen from, I guess, presumably mostly retail traders.
I'm removing some distracted channel chats because
the market, which is
no matter what's
like
going on,
this week,
I
sometimes
can't
lets me
let
shake my head and go,
one person
what's going on here is like that AI
disfocus
where
and
we
dissuade other
weirdly
people
work through like
from
what is working and
focusing.
what is not working in terms of like
So,
capex spending and reward.
sorry, Shawnee.
But at the
Much
same
love.
time, we are also
But you're gonna have
already
to take
like
a 10-minute
pricing
break.
all the disruption into
Let's just
certain
focus
areas,
on what the market is
from
going on and
exchanges
doing
to
right now.
European media companies and most pronounced
Right.
in software stocks.
I'm not saying
where I
nothing
feel
about we
okay,
can't talk
what's the
about what
market actually
happened,
wants here?
but
Are we sure now AI is working and we
right
need to price
now,
those disruptions? Or are we still
the
figuring
chat
out if all the
itself
spending
is
is
very
actually worth it? So
unfocused and
the
it's
whole market
killing off the
sometimes
views.
has a
So
bit of a narrative where I feel
right
like
now,
a
I
bit a
need
lot
to
at
focus.
once, and let's not forget
And the
all that
chat.
under the umbrella of like
Let's
an economic
focus.
topic, a US dollar topic, a US rates path topic that is still not having its final chapter written. So a lot to digest right now.
JP, thanks very much. Bloomberg strategist JP Barnard talking to us about the trades that have worked and no longer are, like momentum trades have been falling apart. Let's get a look at some of the individual
Give me
movers
2 minutes.
on our
I'm gonna
radar
run to
this
the
morning.
bathroom.
Reddit gave an upbeat outlook for ad sales after earnings topped expectations. Roblox daily active users were estimate.
Policy correspondent for Bloomberg, and we are here in Atlanta. Welcome to all of our viewers and listeners around the world on Bloomberg Television and radio. We're speaking with the Atlanta Fed President, Raphael Bostic, who is retiring at the end of this month. So this is sort of your HR exit exit interview.
Mike, it's always good to see you.
I want to ask you, as you travel around your district for the past year, what's the mood like among companies and consumers? We've seen the surveys show that people are getting very, very pessimistic.
Well, I'd say it runs in two ways. So first of all, what has been true throughout the last year is a tremendous amount of resilience on the part of both businesses and consumers. You know, when April 2nd, when the tariffs were announced at very high levels,
that's crazy on IWM.
On their heels,
that's fucking crazy, dude.
And what's happened through the year is
Ochoa says shit looks like IWM is burning the weekly bears too. I mean, we literally talked about it earlier. It already did.
Most households are not thinking that the worst of the possible
it already did.
Going to happen. They're not sure
1,
they can get to
2,
the best
3,
ones,
4, 5,
find a steady state
6,
where they can get through.
7,
so I think
8,
the sentiment
9,
is
10, 11 days.
Of,
the last 1,
optimism,
2, 3, 4, 5, 6 days, 7 days became the 3rd.
Really trying to wait and see what happens.
Well, what do you think that means for the economy?
Well, I think it means that the things that we've seen for the second
half of 2025, it's just doing more.
We will continue to see through 2026.
It's doing more.
You know, I've talked to a lot of folks for the last
It already
6
did
weeks
somewhere
or
in the
so,
morning.
and they said,
fucking 10 a.m. is fucking crazy work.
In October, November, December,
NVIDIA did the same thing.
Move on. And then there are some reasons why they think it might actually get stronger.
They trapped everybody down there into 3/3. 1, 2, 3, 4, 5 days. Right, 1/3, 2/3, 3/3. 170. Where is the end of the 1/3, 2/3? The end of the 1/3, 2/3 was 180 when I left. I was done on NVIDIA before 180.
Then I think
anybody remembers that I was the one that was crazy as fuck on the video, and I was like, oh, God did, oh, blah, 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 oh my God, I was screaming at the live stream and said, oh, God did, oh, I'm out, oh, they're going more, whatever the fuck, this is stupid as fuck, blah, 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 and I was like, oh, stupid as fuck, and I was like, oh, I want to long the video, but oh, they're going lower, and I was like, oh, fuck this shit, you know what, I'm just gonna watch. Oh, they go crazy low. Oh, this is stupid as shit. I don't know. This is, oh my God. Oh my God. I don't know. Somebody was like 170 again. I watched it and I was like, oh shit, that's crazy. That's fucking crazy. And I was like, dude, maybe there's some sort of level they're playing here and they're going to go lower somehow with the market and do some shit. But they fucking popped it up clearly. How the fuck can I know now? And this shit is literally Wednesday, Thursday, Friday. They burnt everything on Friday and next week on IWM and NVIDIA and SPY and QQQ and everything.
When I talk to businesses,
woo! That's called setup though.
Entry-level people at the same ways that they did before, because they think things like AI can replace that, and they can deploy resources for other things. And I'm hearing that kind of reticence. There's also the reality that during the pandemic, a lot of companies ramped up because the demand ramped up, and they've been slower to right-size. We see a bunch of that right-sizing happening as well. And then we have issues around the labor supply and whether the immigration shifts are going to be temporary or permanent. And if they're permanent, then we're going to have a lower steady state job creation. So for all those reasons, I think it's very hard to make a clear statement. And then, of course, we don't have a jobs number today, right? So we're not getting the data in a timely basis. My team tells me it'll be April or May before we start to be able to draw clear signals from the data to really understand what's going on.
Yeah, we wanted to wish you a happy non-jobs day today. You started a long and varied career at the Fed in 1995. Since then, what have you learned about the economy and about inflation?
Well, I think for the economy, one thing that is true is that it is a very complex economy. It's very large. And to understand it, you really have to get out and see all parts of it. And one of the things that's been great in my role here is I've had a chance to do that. I think it's given me a deeper understanding of just how people engage and experience the economy and how they make decisions to move it forward. In terms of inflation, you know, what I've learned is that we really don't want to have inflation. Right? Once inflation gets entrenched in people's minds, it changes how the economy evolves. And it's one of the reasons why I think that we need to keep our policy in a restrictive posture so that we get inflation back to 2%. That's paramount. High prices and the prospect of rising prices really do have a lot of families on the edge. And you all have reported a lot about the K-shaped economy. There are lots of families that are feeling very precarious right now, and that's a source of concern.
Do you think the economy is becoming more K-shaped?
You know, I don't know more. I mean, it's been that way for a while. Just before the pandemic, I had been talking about this, and we were trying to find some metrics to really detail how there's a split. I used to call it the barbell economy, where either you're at the high end or at the low end. The K-shape is the same thing. What I know is that there are a lot of families that are precarious and are feeling very uncertain about their prospects for the future and the prospects for their children, for that matter. And that concern, I think, does underlie a bit of the lower on the low consumer confidence that we continue to see being reported. And what we'll need to do is really give people reasons to be optimistic, show them where the new jobs are coming from, and show them how they get the skills to compete for it.
Well, this week, Treasury Secretary Bessent said the Fed has lost the confidence of the American people. Do you think you have lost the confidence of the American people? In your district, do you hear people raising questions about that?
That's not been my experience. As I go around the 6th District, people tell me, we're grateful for what you're doing. You have a very hard job, and we want you to be as data dependent and as open to information so you can make the best judgment that you can. Look, the world is very complicated. It's actually more complicated today than it has been my whole time here. So what I think most people understand that, and they know that we're doing the best job that we can under very difficult
I'm excited.
You have a unique perspective because when you took office,
I'm like, what the fuck is this? But like, I'm also excited at the same time.
President of a regional Fed bank. Looking back now and hearing the criticism that we get from Washington, do you think the Fed was too woke? And perhaps,
man, but I was saying in the WhatsApp group, I see some sort of I said this yesterday in pre-market. I see some sort of recovery at some point in between today into Friday into Monday, right? I can't believe it came today on Friday though, not yesterday. Yo, we fucking came in crazy for one day.
And it doesn't serve the American people.
Oh my gosh.
So I think the focus on every American and every American's experience is exactly the thing that the Federal Reserve needs to be doing. That's different than saying that is unduly influencing our policy decisions. And I will say
it's like absolutely possible market goes up a little bit into next week, or it's possible market pulls back a little bit into next week. Absolutely possible for both. It's almost recycled everything. Neutral point.
I actually think we've been doing the best that we can, and we've been data dependent and the way we've been for 100 and some odd years. So
HOD into 150 time is almost 2 p.m.
says the Fed needs regime change.
Cycle extended, got smaller and smaller and smaller and chopped and chopped and chopped and literally did fucking nasty to 0 DT today.
Our bank
and 1
really
DT
taken on board
and the
the
2
notion that we need
DTs
to go out and engage and talk to
and the
business
3
leaders,
DTs.
find out how they're engaging with the business, how they're making decisions.
But it actually neutralized almost everything.
To give us the best perspective on how the economy is performing. I don't think that we should change from that.
How so much super knife?
Even lean in more to those non-official data sources as the economy is changing so rapidly, because those are all looking backwards, and we need to be looking forward.
He's been very critical of what he calls
just not today, maybe.
Creep. Does he have a point?
I actually don't even see the mission creep.
Why? Because this was today. The entire shit was today.
On the banking side, for example. Our job is to make
sure
that every bank that's alive today is alive tomorrow.
There's HOD divergence on the roof on SPY and QQQ now too.
Cause them to need to deploy capital in ways other than in loans. And so having conversations about those things, I think is fully appropriate, and we should be doing that. We don't tell banks where to lend. I've never told a bank, don't do a loan.
It looks like QQQ pulling into 3/3 too.
As well. I think we are asking prudent questions to make sure that financial sector, business leaders are aware of trends that could be introducing risk.
Warsh also says that he wants to shelve QE and significantly shrink the balance sheet and perhaps go back to a scarce reserves regime for managing the interest rates of the country. Could he do that? Would that be a good idea, or how hard would that be?
So I think it's doable.
Since the tech drop off Tuesday,
when the decision was made to go from the scarce reserves to an abundant reserves regime. I do know there were tensions and a lot of volatility that happened in the scarce reserve environment. And so if you were going to move back to that, I would hope that there'd be a discussion about how to mitigate that volatility.
Why do I want to go on a vacation, man? I want to go to Cancun. Fuck. I want to take a nice vacation to a fucking warm-ass place on this planet real quick.
Are not worrying, can just worry about is
Too
this a good
fucking
decision
cold
as opposed
outside.
to whether I can execute on
So
the good
damn
decision.
stressful.
That leads to a different kind of allocation.
I need a stress break.
Tell me about
Oh my fuck.
Jay has been great.
It's been so
he's a
stressful.
colleague. I consider him a
Time
friend.
has been flying.
Very open and very transparent.
Every
and
day.
He's led the institution. He's been at the institution for a long time through a lot of significant periods. I think
It's already
he's
Friday.
been
Like how?
positive.
I actually
And,
feel like just
you know,
now it
I'd
was
be sad to see
Tuesday.
him leave the board. That's what he
Just
chooses
now
to
it
do,
was
but,
Wednesday.
but it's been a
I
great
think I
relationship
literally
for me
said,
with
"Oh,
him.
today is Thursday
Been my pleasure to
on
serve under him.
Wednesday," and
Do
I
you
think,
agree
"Oh,
with his,
today is
the
Friday
sentiments
on
he,
Thursday."
showed when he made his video a couple of weeks ago?
Actually,
so I'm not.
Look at this shit. The fucking Russell, what? Nah, Russell fucking up 3% now, bro. This shit is. I mean, this has to be a huge candle on the 1-day candle too. Like, it's a humongous candle. Counter rally in the 3/3, but the candle is literally absolutely humongous. It's like a once in a fucking time thing, once in a blue moon type of candle. 33rd. This only comes in the 3/3. This shit's the 3/3 candle. 3/3. Fuck. It's so wild. Wild. Does anyone else think it's wild? The power of the 3/3, right? I call this 1/3, 2/3, 3/3. Does anyone else see?
It's an interesting
power
time
of
to
the
have
3/3 is
obviously,
crazy,
which
man.
any time is, but especially given what's been happening within the market. Today looks a lot different than the last couple of days have. The market obviously concerned with what's happening on the spending side of the hyperscalers and this big build out in AI. What's your take from that, the way the market continues to react to this?
Demand is sky high, and there's a fundamental reason for that.
All right.
We're in the
Last
once in
poll
a generation
of the day, folks.
infrastructure build out. This is the largest
We
infrastructure
did not
build out
touch
in human
690
history.
yet.
There's a
This
fundamental
divergence
reason
at
for
the
that.
roof.
Artificial intelligence is going to
Into next
fundamentally
week,
change
the market
how we
is
compute
into close. The
everything.
market is,
Everything from
in your
database
opinion,
processing, the way we do
super
search, the way we
bullish
do
or
recommender systems, the you shop,
bearish?
the way you watch movies, and of course these new agentic systems that are being developed and evolved. This last year, we saw an inflection point in AI. AI became super useful. No longer hallucinating, it's generating informed content, it's reasoning, it's thinking, it's doing research, it's able to use tools. All of a sudden, AI over the last couple of years went from being curious to super useful. The inflection point also came with
SPY
it.
is up
Profitable tokens.
1.7%.
Anthropic
QQQ
is
is up
making great money. OpenAI
1.9%.
is making great money. If
IWM
they could have twice as much compute, the revenues would go up 4 times as much.
is up
Literally, these
3.4.
guys are so so compute constrained, and the demand is so incredibly great. The number of enterprise users, the number of consumer users,
We have
the
1,
number
2,
of
3,
startups that are being built on
4,
top of these companies,
5.
it's just going through the roof.
11
So
people
when
that
you
is bearish,
see
12 people
numbers
that
that
is
are
bearish into
frankly
next week
remarkable,
based on
that
today.
$660
13
billion
people that is
this
bearish
year
into
will be
next week
spent
based on
by the
today. We
hyperscalers
have
as we continue to
3
learn, like
people
we
that
did
is
from
bullish
Amazon last night.
based on today.
You sit back and
to
think
next
to yourself,
week. Okay.
that's completely justified.
Interesting poll.
Based
I
on
thought
what
there
you
was
see.
going to be a lot
It is
more bulls.
appropriate and
Based on
sustainable.
today's move,
And the reason for
candle
that is
moves.
because all of these companies' cash flows are going to start rising. You know, people are comparing it to cash flows. One of those numbers are wrong. It's just the cash flow is wrong. We are addressing the largest software opportunity in history. For the very first time, software is not just a tool. A tool is like Excel. Now software uses tools. So these AIs use Excel. And so I think the opportunity
My back
for
just
this
cracked
new
so hard.
era of software is incredible. And we're seeing it already
The extension
moving
cycle, 3/3,
the
1/3,
earnings of
2/3, 3/3.
Nobody
Today
uses
became
AI
a
better than
2/3,
Meta.
a part of the
And so
3/3.
if you look at the way that they're using AI went
1/3,
from a
2/3,
classical
and
recommender
3/3.
system running on CPUs to
Wild.
now a generative
Bears are
AI
trying
agentic
after
system
150.
that's making
Barely any
recommendations.
cycle confirmation.
Everything from the way social media works and the way they recommend ads and help advertisers create content has fundamentally been changed, and their earnings show it.
There's
that's the
1,
reason why they're investing
2,
so hard.
3,
They see
4,
just a much
5,
larger
6
future
plus
potential for it.
9.
And
There's
not just one
15
company.
people.
This is going to affect
That is
AWS's
bearish into
shopping
next
and the
week
way
based
they
on
recommend
today's
goods.
candle
This is going to
moves.
affect how Microsoft's
In
enterprise
their
software
opinion,
works. Every single company is
3,
sees the
4
same
people that is
inflection
bullish
point,
into
and
next
that's
week
why
based
everybody
on
leaning in
today's
so hard.
move.
I feel like that's the point that you were. It's an interesting point. It sort of turns the way you need to think about these businesses on its head. That if you're just fixated on the spending side, as you were talking earlier about, oh, they're spending such a huge
now
portion
it's
of their
16
free
versus
cash
5
flow,
counting
you're
Ochoa,
kind of
I
missing
guess.
the story. The market needs to get its arms around that. You as well as an investor?
Yes, if you turn the
So
clock back,
Kill,
Scott, to
stop
2008,
asking for a video on the 1/3, 2/3, 3/3, man. Watch the live stream and you learn, or you don't.
Jeff Bezos
Alright?
said, I'm going to invest in this thing called AWS.
Alright.
Think of it as digging a gold mine.
I can't make
you
a
have
video
to spend
on
a lot of money
1/3,
to dig
2/3,
the gold
3/3.
mine
I'll get in trouble.
before you get the gold out. These
Alright,
guys
just
are
watch the
digging
damn
the
live
biggest
stream
gold mine
on
in
here
the
every day.
history of software.
Streaming.
Right? But it costs something up front. Now the question is, do you believe
Right.
Andy Jassy and Mark?
There's the YouTube video.
Mark
Like what
Zuckerberg
else?
and
What else?
Sundar
You know what I
and
mean?
Jensen, that this opportunity is that big.
There's the
Or do you
YouTube
have a
video
special
that you
insight
want,
that
the live
causes
stream.
you to understand there's no gold in the bottom of the gold mine. As an investor, I'll just tell you this. I want my personal net
I
worth.
understand
want my
you
funds
do
net
just a
worth
little bit too
levered
slow,
against
but this is
AI
what it
because
takes.
all human
It takes fucking
progress is gonna be
dedication.
derived from
It
machines
takes
helping
a little
humans
bit
think
of too
and augment
slow.
human thinking. And so
It takes
whether it's owning NVIDIA, which
fucking
is our largest
frustration.
public
It
position, or whether
takes
it's
I want to learn
Anthropic
more.
or
It
OpenAI,
takes
all of these
fucking
companies
good.
are
It
going to
takes
be
fucking
tremendous
dog shit. It
beneficiaries,
takes
and
everything.
they're doing it at scale.
And it takes it into
There are
consideration
increasing
and puts it in a
advantages to
basket
scale,
and it fucking
right?
shakes
And
it up with
so
all the
I
shit.
think it's hard for people to
And
get their
it
arms
gives
around
it.
now, just like it was in
And it's up to the
2008,
people to
2009.
choose
But thank
to
God
get
Jeff
that
Bezos
basket
did that. Now it's a
and be like,
$140
ooh,
billion
happy
business,
Easter. But to
generating
grab
$30
that
billion a
basket and
year
be
in
like,
annual
damn,
profits.
stop and
People
shop, food
criticized
shopping.
him for
You know what I
investing in
mean?
back then.
How
It's incredible that OpenAI and
The
Anthropic
market is not
are
gonna
$20
fucking make
billion
it easier,
run rate
any
companies,
easier than what it is. It
generating
is what it is.
profitable revenues,
This
and
market is what it is.
accelerating growth.
The market
all
does
at
what
the
it
same
does
time.
because there's
These are
active
extraordinary
participants
things, and it makes
deciding what to
perfect
do
sense
live.
from
That's
what we
all it
say.
is.
How can we be so certain that the amount of compute we think
Time is
we'll
2.
need,
It's already
and
getting
that we
close to the
continue
3.
hear
We're at the
from
roof
CEOs
chopping.
like
Created
you
the
that we
divergence at the
will
roof
need
3 or 4 times
is
today, and we
actually
broke
gonna
the
come to
roof 3 or 4
fruition? Isn't
times
it
today, or
inevitable
5
that we're going
continuously.
to,
In
at
the
some
time of the
point,
divergence, we broke the roof like
overdo
11
it, but we're
times
not
today.
going to know that until it's too late.
It's not like
9,
roads.
8 times.
Roads, once you lay it down, it stays fairly useful for a long time. The way
Man,
computers
what was I
work
saying
is you
yesterday?
build
Psychologically,
out the
I was like
infrastructure,
saying, this is
but
the
then you
fucking
start
weirdest shit
replacing
ever.
it
I've
5,
never
6,
fucking in
7
my
years
life
later.
have I ever
And so I
fucking
think
went up
it's gonna
so
take us
fucking
some
crazy like this one
7
directionally,
years,
just
8
fucking
years
up,
to
up, up,
build
up, up,
up
up, up,
to
up on everything
the
that I
level that
literally
we have to
took fucking
sustain,
some
and after
big
that,
ass
we're gonna be
profit in the
refreshing and
pre-market
slightly
morning
growing.
on
And so
my
we've got
account,
several years
and
of
now
build
here
out
we
ahead of
are.
us.
My account's
The
down, and I
important
lost
thing is
fucking
this.
yesterday's fucking
You have
up.
to go back to first principles.
I lost
Computing has
yesterday's fucking
fundamentally changed. It
100%
used to
up
be
in the other things.
pre-recorded.
Right, on my
Excel
dust shit
and
too, I
PowerPoint
had
and
to take
all these
profit,
tools
and
and all
now
this
it's
software
at
is
yesterday's profit level,
pre-compiled. They
but
compiled it and they send it to us.
shit.
The way
All I
software
know is I
works
took
now,
fucking a lot
because
out.
it's contextually aware, every single time
All
you
I
use
know
it,
is I'm still
it takes
fucking
into
green somehow
consideration
for
the
the week, and
context,
thank
who
God.
you are, what
This
you're
week has been
asking
fucking
about,
nuts.
what's happening to the world, what other information you give it.
Yesterday was
context.
Thursday.
And
Like,
every single context
you know what I mean? I
is
didn't
different,
even
and
need to
every
fucking
single
go off yesterday.
response is
Yesterday could have been fucking
So
bad
from
for me,
now
but
on,
yesterday open
every
was
single
somehow God
pixel,
gifted.
every
I
single
mean,
beep of a sound, every video that comes out of the computer is generated in real time. And that's the reason why we need computers to operate software at such a large scale going forward. And all these tokens
I was posting pictures yesterday in the WhatsApp group from 15%, 18%, 20%, 20%, 22%, 25%. And then at 9 p.m. I was like, oh shit, tomorrow it's going to be at 37%. Oh shit, tomorrow there's going to be like options open. Oh my God, for me. And then it fucking just reverted.
Blame in some ways investors who
it retraced the entire fucking thing on dust, so
tech went through
there
this
you go.
revolution
ETF
and
2 times, no
evolution
fucking joke, up or
at
down.
the same time
Thing is
for
literally just
seeing
fucking
certain
moving.
things that
Cycling
remind
always.
them of then and worry that they'll happen again.
It's good to always reflect on history.
Nobody cares about dust. Only I care about dust, but I was going to type a whole paragraph yesterday, be like, oh, this is the 3/3 on dust, blah, blah, blah. I'm in the 2/3 into the 3/3. It can pull back and go higher, it can go higher, or whatever, blah, 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 but gold reverted. Like, this does what the gold does. It's the anti-move of gold.
There was a ton of dark fiber. There are no dark GPUs.
Time is
100% of the
2:05.
GPUs are rented. In fact, GPUs that we sold 6 years ago the prices are going up. It's not like it's antique. I mean, it's incredible. It's like a fine wine. The demand is so high.
Yeah, how does a 2080 Ti go up? Make that shit make sense.
And so I think the demand is just incredibly high for the reasons that I just said. One, we went through an inflection point. AI has become useful and very, very capable. Two, the adoption of it is incredibly high. And three, because these AIs are thinking,
NVIDIA at 185, that thing ate.
And so to the extent that people continue to pay for the AI with
everything
and
down
the
here.
AI companies are able to generate a profit from that, they're going to keep on doubling.
What even is this line? I don't even know why I drew the second line. Maybe that second line is nothing, but it really ate. VIX is at 18. There's a gap here at 21.75 now. The VIX tends to fill gaps. Like the gap it created down here and filled it. Now there's a gap at 21. When do we fill that shit? I don't know. Oh my god, does that say pivot points? Oh, there's a lot of proof points. Oh my god, I thought it said pivot points.
Mark Mahaney joins us now, though. Speaking of losses, Mark, Amazon is down today, but you just raised your target price from $285 to $335. Are you ignoring that report?
I'm sorry, Stu. It's the other way. We lowered our price target down to 285. Oh. We're sticking with it. I started the year. That's right. I started the year saying this was my top pick, and I'm not looking too smart right now. But I'm going to stick with this. We have we're going through a free cash flow desert. I mean, the level of investment is greater than
but this is why,
thought, at the beginning of the year.
This is why I laugh at candle traders and people, channel hoppers, because those people only seek the good points in life, and they try to nitpick the good in life, and like life is never gonna be like that. Life has never been like that. I don't think it has for me, like reality-wise, and I just know for a fact that that's not the mentality that has ever worked out. Trying to nitpick the good and the bad in life, and trying to come up with the good, because like the life gives good and the bad is just how people react, I guess, to the good and the bad that really matters.
CapEx, capital expenditures amongst the four biggest companies, Google, Amazon, Meta, and Microsoft. It's over $600 billion. I think in all fairness, the market would have thought maybe $300 to $400 billion at the beginning of the year. Like, it's dramatic, the investments. So the question investors have to ask themselves is, do you think you're getting a good return? Are they going to get a good return? And then are you going to get a good return on these investments? And I think some of the data points, I think, have been very positive. I look at AWS grew at 24% in the last quarter. That's the fastest growth they've had in years. They actually outpaced every other cloud vendor. They had margins that were close to record high. So the fastest growing, most profitable part of the business, that's what they're investing in, and they're seeing a return in that. But, I understand the market's going to be skeptical until they can kind of get through this desert and start showing free cash flow growth again. And that's probably not till next year. The market will discount that. So sometime in the middle of this year, I think we're going to get another rally going in a name like Amazon. In the meantime, Google and Meta, both of those showed accelerating and multi-year growth rates in their search and their advertising businesses. And I think it was because of AI. So I think there's a lot of proof points that AI and investments are working, but you have to have faith in it.
Well, it's the same story with Google. You've moved. Yes. This is where you have raised your target price.
Yes.
It was $325. Yeah. Now you're aiming for $400. So you're still confident that they can spend all this money and get a valid rate of return down the road. You're still confident of that?
Yeah, and Google's big advantage is they've got so many different ways to monetize AI, whether it's search or whether it's YouTube or their cloud business, and they're kind of what's called a fully integrated tech stack. Like they sell the chips, they run the cloud business, and then they have those huge apps that we all use, things like search and YouTube, and then they got this wonderful asset in Gemini and personal intelligence. So I think they're probably the easiest AI story. And then the last thing, just so we're not only doing this on faith. We're looking at valuation. And if you look at the PE multiples on these three names, you know, they're somewhere between 20 and 25 times earnings next year. Like, you're not paying nosebleed valuations for the three probably biggest beneficiaries
Imagine if the market just
of
actually did
AI,
something,
at least
though,
in
but,
consumer
yeah, no
in
volume.
consumer tech. Apple to be determined, Microsoft not so much consumer tech. And I think those valuations are very reasonable. So I'm going to stick with my guns here. I like all three of the names. Top pick still is Amazon. Then I'd probably go Meta, then Google.
But is the money available? I mean, you're talking about an investment of $650 billion by just 4 big tech companies. Is that money available? Have they got it, or did they have to go out and borrow it? Because that would be bad.
Most of them have the cash flow. You know, these are extremely profitable businesses to begin with, so they're self-funding.
You know,
this
it's
for
the
the most part.
craziest
Amazon's
part.
going to have to dip into the
really
debt
did just come
markets
back to that purple
because
box, looks like.
That's the one. It's, you know,
I mean, that's
but it's
crazy.
not,
I did not extend this since
it's not like these
Wednesday.
are highly levered companies. They've got you know, they're and they can easily cover all of their interest expenses. But the other ones, Google and Meta, they've got all the cash flow they need to fund these. They're self-funding. That should give investors some confidence.
It's extraordinary, isn't it?
Probably should have extended that earlier in the morning.
$500 billion or more just by 4 companies. That's extraordinary. Mark, you have a great weekend. We'll see you next week. Good stuff.
I'm not gonna lie, I probably should have marked that way earlier in the morning. But it looks like some sort of thing that just did. $3:30 p.m. close of Wednesday. Fucking wild. So there are setups. It's just very, 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 very hard to see that existed before. Absolutely no pullback yet. The fuck is this shit?
Iran seized 2 foreign oil tankers in the Persian Gulf yesterday. This comes as U.S. and Iranian officials just begin talks. They began them today in Oman. Jennifer Griffin joining us now. What's at stake if these talks fail?
Well, really everything. There's a large military buildup, and the U.S. is focusing on Iran's nuclear program for now. The talks in Oman between U.S. and Iranian negotiators are over for today. They lasted about 8 hours. It's the first time U.S. and Iranian negotiators have held talks since the U.S. and Israel bombed Iran's nuclear sites last June. Iranian state-run media said both sides agreed to meet again. Present for the talks alongside U.S. Special Envoy Steve Witkoff and
Poll
the
is
President's
closed,
son-in-law,
folks.
Jared Kushner,
Poll
is
says
U.S. CENTCOM Commander
8
Admiral
people
Bradley
bullish
Cooper,
and 11 people
who has
bearish,
been
excluding
assembling an
YouTube.
armada in the Middle East to include a U.S. aircraft carrier strike group. Treasury Secretary Scott Bessent revealed Thursday the protests in December may have been the result of U.S. economic pressure, which led to a dollar shortage and one of Iran's largest banks failing.
We have seen the Iranian leadership wiring money out of the country like crazy. So the rats are leaving the ship, and that is a good sign that they know the end may be near.
The U.S. State Department is urging Americans to leave Iran immediately. If they cannot leave, officials advise finding a secure location and stocking food, water, medications, and other essentials. There is a lot at stake if talks fail. In the 48 hours leading up to the talks, the Islamic Revolutionary Guard Corps Navy seized 2 vessels in the Arabian Gulf that were carrying smuggled fuel, and 2 IRGC gunboats harassed a U.S.-flagged tanker, and the U.S. military shot down a Shahed 139 drone that Iran launched toward the USS Lincoln aircraft carrier, with thousands of sailors on board and nonstop verbal threats from leaders in Tehran.
I'm sure the Strait of Hormuz will be a slaughterhouse. It will
Time
be
is
healthy.
2:15.
Iran will show that the Strait of Hormuz historically belongs to Iran.
Negotiations today only focused on Iran's nuclear program, Stuart, not its
Man, I was
ballistic
so
missile
bored I took a
arsenal,
vape.
which Israel has
Hookah.
repeatedly urged. Satellite images show new activity at the Esfahan nuclear complex, possibly aimed at protecting the site
I
from
need a
future
cup of
military
water now
strikes.
too, man.
Stuart?
Jennifer Griffin, thanks very much indeed.
Market's so slow. I mean, the problem with going down is they're doing it super, super slow and structured, so.
Thank you very much, Gunjan. And good.
Gunjan. That's the issue. Anything going lower, I have no idea if it's real or not because they're doing it super structuredly slow.
Tom White in our Chicago studio. Time now for our Cash Tag segment, taking a look at Coinbase. For that, we want to bring in our next guest.
Maybe
that's
it's
Andy
zero
Swan,
DT
co-founder
too, but I
of
mean,
Likefolio. So Andy, Coinbase having a big rally today. It's up 11% right now at the moment.
Barely any move in my shit is anyway.
It's been a difficult year over the past year, where we've been watching it swept up in the downdraft that's happening around crypto. So
much of the Dow is up
dive into
to
your
50,000.
data about Coinbase as it compares to other. I know you've got PayPal on the list too. What does the landscape look like overall for sentiment?
The landscape's tough. I think, crypto in general has lost a lot of trust among investors, and for good reason. The October crash.
Wow, that's sick.
The flash crash that kind of started everything and pulled tons of liquidity out of the market
for sure.
Didn't do anybody any favors, and especially not Coinbase, as they're going out there and trying to really.
I guess this is how they fucking coming in, huh? IWM on the Dow.
Legitimate asset class that people can invest in with some level of confidence. It's volatile, yes, but you don't want to feel like
1, 2, 3 bearish days.
you're one scandal away from losing everything, which a lot of people did last year, and everything has been down since. I think we're getting close.
Would have never seen it coming. But wow,
all of that getting out of the system and the liquidation cascades ending.
I guess I should follow the Dow.
Coinbase is still on its heels.
How does anyone follow everything? Dow, IWM,
traffic has absolutely
Nvidia, SPY, Q. I guess that's what
which is the worst among
be doing.
PayPal down only 3%.
It's so crazy. It's so much.
What's happening here is, first of all, there's that lack of trust that started to occur.
Gotta step my game up on the Dow.
There's a lot of decentralized exchanges that are getting a ton of trading volume, a ton of consumer interest. They're becoming easier and easier for people to use, and people are just simply avoiding some of Coinbase's pretty high fees or pretty large spreads on the trades that they offer. So the alternatives are popping up, and the people that are still left in crypto are taking notice and are moving a lot more towards those decentralized exchanges. On top of that, you have Coinbase, is making a ton of its money basically off of interest rate spreads. And as, we get into a potential of multiple cuts of interest rates over the next year or two, that could really compress those margins for Coinbase. So I think Wall Street is right to have the stock
bearish with a divergence on the roof.
It is. And Coinbase just has a lot to prove here, as does the entire crypto market.
Andy, I got a theory on what's been going on. We always talk about Bitcoin, and everybody's got these outsized price targets for Bitcoin.
5 minute on IWM looks like it's a fucking boosted up trend.
Out there. We know that.
2080 MA maybe.
One of the concerns that I have for this area.
Yo, this is so wild. 2080 MA maybe.
And you mentioned the lack of
2080
trust
MA,
that's coming into the
2080 MA, 2080
But when you have different products that you can use, Bitcoin might be one, but then you've got all these others. But the decentralizing of this, whether you can trade derivatives, ETFs, all these different products that you can trade
so slow,
based
right
around
to the 2080
the original
MA.
Bitcoin, which has a finite
on
number.
QQQ,
Does
on
that,
IWM and
eyes,
SPY.
lend some credence to maybe your data waning here at this point? Because that's what it seems like to me, where if it was just Bitcoin and you didn't have all these other derivatives that you were able to trade that maybe act as a proxy, that would probably not be, the reason that, or that would be a reason that we're seeing the slide.
Yeah, I think so. I think essentially what's happened is the maturization process of especially Bitcoin becoming an institutional grade asset has also exposed it to becoming a derivative-based, ETF-based, becoming more of a paper product. Much like what happened to silver for a very long time until it finally broke out. There's a lot of there's a lot of ways to think you're buying Bitcoin or think you're buying Bitcoin exposure without actually buying Bitcoins. And so that is definitely an overhang on the market. But long term, what it does is it brings more money in and ultimately brings the market cap of the Bitcoin and
the
crypto
RSI
ecosystem
in negative
higher.
territory.
So it's better for everybody. It's just we've got a lot of leverage in this system.
Oh my
that worked on the way up. Everybody was happy when leverage was on their side. And Bitcoin was hitting 126,000. I'm one of those people, and you have to be able to stomach what happens on the downside of that leverage unwind. That's part of the process. That's part of the maturization process of Bitcoin becoming an institutional grade asset. It's par for the course. You have to be able to handle volatility if you're going to be in these asset classes. That's part of why you have the upside that you have, the asymmetric upside, just like it did with Tesla, Amazon, Netflix, all these companies that we've talked about in the past. If you've got asymmetric potential upside, you're going to have extraordinary volatility that is designed to shake you out if you're not convicted in your purchase. So don't get in until you are
spike up
unless you
to
are
ruin it
fully convicted.
time.
Let me ask you this, Andy. So that makes sense, obviously, when you think about Bitcoin and altcoins, for instance, like Ethereum. Do you apply the same kind of thinking
one last time to fuck it all up again? Maybe.
Since it's an exchange?
The only
Yeah,
thing
I do,
would
and
be the
I actually
divergence
think
at the roof.
Coinbase is in a worse position than Bitcoin because there's one Bitcoin, and there will always be one Bitcoin. There's Bitcoin, and then there's kind of the rest of crypto. But when you're talking about exchanges or on-ramps or ways to trade or hold your cryptocurrencies or your Bitcoin, Coinbase is becoming one of many. It's now competing with ETFs. It's now competing with decentralized exchanges like I talked about earlier. All of these methods and pathways that people have that they didn't have 6 years ago, 8 years ago when Coinbase came onto the scene and absolutely changed the entire industry and the financial ecosystem. Now they are, kind of the victim of their own success in that they've invited a ton of competition, and that competition is getting extremely competent and has very large distribution networks, especially when you're talking about the ETFs. There's an entire industry around how to sell ETFs to financial advisor clients. That is something, Coinbase benefits from that because they're they enable those ETFs, but they're also competing with that end user in terms of where they're actually making the transaction, and most are deciding to do it through their brokerage account.
Andy, I got a real quick follow-up for you on this on Coinbase. They've got earnings next week. The bar's really low on this one. It's off over 63% from those recent all-time highs. I mean, what's your score on this? Because your data, as far as the graphs, looks as bad as the stock chart does.
Yeah, I think it could be worse. The bar is low. I do think that it's possible that Coinbase gets under that bar going into this earnings because, again, there's so much loss of trust. There's so much competent competition coming that it becomes difficult to talk positively about the real moat that they have
the RSI
created. So
what
we're a little concerned
minutes
about
ago,
Coinbase going into this. I don't know that I would. I don't think I would be short the stock. I think
time
that's
is 120
taking far
still,
too much
time
risk.
is
I'll leave it to
125 here
you
at 54
guys.
seconds.
You're so good at helping us figure out risk-defined ways to make these trades, and so I'll leave that to you. But I do think it's very possible that Coinbase gets under this low bar.
All right, we'll leave our conversation there for today. That's Andy Swan, co-founder of Likefolio, with their latest data.
Man, is the cold air a breezing south or north? Cold air are brewing. That is one sick, one bounce again. Man, at this point, they go fucking go right here. Holy shit. At this point. One last ruin.
Sunday, our contestant Brewer caught up with some of the players about where they're investing right now, and she joins us with some of their answers today. Hey, Contessa.
Hey, Carl. Yeah, this is the best, my most favorite part of Super Bowl coverage, because all these other reporters are out there asking, about game strategy and mindset from the team on the field. And I'm out there saying, hey, guys, are you watching how Bitcoin plummets? Do you think that AI is in a bubble right now? I mean, this is the thing that really matters about the Super Bowl. Here it is.
What's the best investment advice you're getting?
Best investment for money? Just save it and say no. Learn to say no real quick.
No to what?
Everything. Anybody who asking for it, say no.
Investment advice?
What?
Right now as a young guy, for me, it's just really investing in myself.
I'm worried about the Super Bowl right now. I'm not worried about stocks and none of that.
Truly invest in things that you love and that you have a passion for.
You see metals going down a bit. I think Bitcoin was just down under 80,000 this past week. I'm currently right now I'm invested in just the S&P 500, the stock market, with the annual return that you get on average. Trying to expand the farm.
After football, would you like a job at CNBC? What's your big investment right now? What are you watching?
Obviously a lot of AI stuff. OpenAI, some NVIDIA.
I'm a big fan of just meeting with my financial advisor.
A lot of AI stuff. OpenAI.
I mean, you can get some really good cards, but for me, I'm not selling it. It's all for me, just collections about, that I like, or,
What's your favorite?
Bulbasaur.
And what's the health points?
Bulbasaur, I think he may be like 130, 150.
What's his attack?
It's like he has this vine attack.
You can tell I have voice.
Yes.
I I mean, I admit we digressed a little bit from is Pokemon an investment to how well do you know your Pokemon?
Joining us now in San Francisco is Contessa Brewer, along with DraftKings CEO Jason Robbins. Contessa.
Sarah, thank you very much for that. Look, we're looking in the gambling industry to set another new record for Super Bowl handle, or the amount wagered. The industry thinks $1.7 billion. How's it looking? Are you expecting another record this year?
Well, we're expecting really big things. I don't know if it'll be another record or not. We're in our quiet period, as you know, so have to be careful on that. But definitely love what we're seeing, and great to see that the industry is still growing, and I just think a lot of excitement and interest around this event every year.
The questions that investors have are really about predictions market and whether there's cannibalization. I've pointed out on CNBC multiple times that over the last 6 months, and you really tie it to when Kalshi said, look, we're going to offer combo bets that look an awful lot like parlays, that DraftKings stock is down 40% or so. The commissioner of the CFTC just came out last week and said, look, we're going to yank the proposed rule that would have banned sports from prediction markets. And we're going to go back to the table, and we're going to create some clear guidelines. DraftKings stock tanked. What do you want people to know about the opportunities and the challenges in prediction markets?
Well, I actually am glad you brought this up, and that very event was very perplexing to us because we were very excited about the chairman's comments and really felt like it was a positive step for what our plans are. We launched a predictions app, as you know. We intend to go out and win in this space, as we have said. So getting more clarity for a legal regulated operator like us, getting clear guidelines is a huge step forward versus, I thought, what was a bit of an opaque situation before. So I really thought that was a great statement, but sometimes it's maybe us not telling the story, maybe the public markets just aren't ready to hear it. Sometimes you have a different view than what the public markets do, and we just have to go out there and prove it, which I think we'll do.
A lot of the critics of prediction markets in the gambling industry have pointed out gambling pays high taxes.
The Super Bowl this week?
Prediction markets don't. And that's money that, if you don't have to pay state taxes, that's money you could reinvest in the business or invest in marketing and promotions and things like that. What do states need to recognize about how they're taxing gambling when it comes to earning tax revenue? Because we're seeing Illinois, the handle in Illinois is declining every month since they've passed on this fee per wager.
I think what people have to understand is still a new industry. And, one of the nice things about having all these different states is you get to see things that work and don't. Obviously, if you raise taxes in the very short term, you're going to get a boost. But I think over not so long a period of time, you're seeing exactly what you're talking about in Illinois. And I think the more data points we get like that, coupled with the very real threat of predictions to states, which, as you said, don't pay taxes, I think that's going to cause a real slowdown, at least I hope so, on the tax rate increase, and maybe make some of the higher tax states rethink, is this the right place to be if we want a long-term sustainable industry?
February 5th,
He's so
2026.
Cute. He's so cute.
And it is, I think, a very timely webinar to have to talk about markets. But I also want you to take a step back. We're at the start of February. We're 1 month into the year, and markets are wobbling, and yet you yourself might have turned quite bearish and depressed. I want to point something out. That is not what happens at a bull market top. If you're quick to turn bearish and your sentiment is affected by price, it shows you that conviction in this market is still quite low. I think there's some things to explain why people have become a little bearish, but as we kind of go through our macro discussion, I want you to pay attention to the things I'm highlighting. I'm going to bring Mark into the discussion, and then we'll talk about some best ideas in terms of our top 5 and bottom 5 stocks. Okay, so let's dive into the macro. There's two things I think that are roiling markets at the moment, and we comment on this in our videos, and I think we're going to continue to comment on it. And by the way, I think of the two things I'm going to talk about, one of them is actually have turned in a favorable way for equities.
What a fucking tease. All right, up next, Kathy Woods. Where is Kathy? Don't do me like that. Damn.
Amazon down big. Meta and Microsoft under more pressure as these CapEx concerns build after the 4 largest hyperscalers said they expect to spend more than $600 billion this year alone. But NVIDIA CEO Jensen Huang just told CNBC last hour he's not worried about that. He thinks it's appropriate and that AI demand is sky high.
Demand is sky high, and there's a fundamental reason for that. We're in the
if we pull back the VWAP by close, I'm going
infrastructure build-out. This is the largest infrastructure build-out in human history.
There's
a fundamental reason for that. Artificial intelligence is going to fundamentally change how we compute everything. Everything from database processing, the way we do search, the way we do recommender systems, you shop, the way you watch movies.
As demand is sky high, as he says, if big tech keeps saying it's working, why are the trades not working? Let's bring in Deirdre Bosa for more in today's Tech Check. Hi, Dee.
Hey, Kelly. So, Jensen's comments makes what we're seeing in the AI trade even more confusing. You've got software stocks that are just getting absolutely crushed because AI is too good and it's going to replace them. But then you have the mega caps building AI to be more powerful. They're getting punished for spending too much money on all of this. Now, Meta's a good example of the contradiction. 50 cents of every dollar is going into AI infrastructure. That is double Amazon's ratio, yet Amazon is the one selling off more. Meta's margins are falling. Free cash flow could get halved or even worse this year. Meanwhile, we spoke to Vercel CEO Guillermo Roche. He builds on top of OpenAI and Anthropic. He said something similar to what we heard from Jensen Huang. He says the pace of AI progress is only speeding up and new winners are coming.
Every single thing that we've said AI cannot do gets proven wrong 2 weeks later. One person, billion-dollar company, well within sight. Autonomous companies, well within sight.
So, Kelly, maybe the market is clearing out the old guard and it's making room for something new. And we might be about to see it sooner than we think. OpenAI and Anthropic both moving towards IPOs. When they file, the market will get the hard numbers on those pure plays, and we'll see sort of which side wins out. But right now, there's a lot of confusion, and the AI trade just feels broken.
Man, they keep saying
you own the whole array.
Billy.
You own the hyperscalers plus the infrastructure layer. What from this week did you think? Do you agree that 650 billion is what we should be seeing from these sorts of names?
I think what we're seeing, and we've been saying this is the third year into, if you think about from the start of ChatGPT and where we are today, this is the third year into the build. And I would say this is the year that we should start to see adoptions. And in fact, I think that's what's causing a lot of disruption in the marketplace. We're seeing rapid model drops and launches of new models, new versions of it. And the speed of that is accelerating. And that is something that we should be expecting to see at this point. But what's also interesting is that what it also means, and we said this is an interesting time.
Hey, stop trolling in chat.
They're spending a lot of money because it's as defensive as it is offensive, right? It's for growth, but it's also to defend your competitive mode. AI has the ability to disrupt many models, and this time it's interesting is AI holds the potential to disrupt tech, how we think about the way that the infrastructure layer is, and how we think about enterprise software, how the traditional business model with high competitive mode, how that could be changing going forward. Yeah. And that's exactly what we're seeing. So it's kind of hard for us to judge, is 650 the right number, or is it a different number? Yes.
Can I jump in and ask, where do you look for the evidence then? So, for example, Amazon talked up its backlog, which is very different from RPO, right, in the world of software.
Very low volume.
Because it's not invoiced. They talked about, the operating income. A backlog would suggest, oh my goodness, they've got hundreds of billions of dollars of revenues waiting in the wings from their AI offering. But the market doesn't seem to believe that. Do you believe that metric?
I think it's less about whether or not that is indeed just that one metric that we focus on, but rather, if you think about all these, this is basically a rebuild of the digital infrastructure layer. And that's why I said, what is 650 billion? Is that precisely the right number we should be anchoring on? But just the fact that how it could unlock the future of workload. And when we think about it, it's not just the hyperscalers per se, but also what does it mean for the rest of the economy? What could it unlock in terms of potential in productivity? And you're actually seeing the early evidence of that. You can see in the traditional retail industry, what does the future hold for shopping?
Stacking.
And what does agent
Volume
mean
needs
for
to
future
grow.
of shopping? Or if you
There's
think
a
about the
divergence
traditional
at the roof,
manufacturing
but they're
industry,
doing it anyway.
we are in fact seeing
If
real
220 breaks, then these algo ranges come into play.
AI, and that's only the beginning. And time and time again, I think if we look back in history, when you have such disruptive technology changes, what happens in the near term, some of the way that we do things gets disrupted. But then new business model, productivity gain, actually do emerge. And that is the power of innovation. It requires little imagination. So if you look at this point in time, yes, it's a huge number that we're spending. But you probably could look back, and back then when electricity was first invented, that probably was a tremendous amount of money to be spent on the grid. Right. What if this is the future of the grid?
Well, let's talk about, therefore, the innovation that we're seeing, Lei, at the moment. And I just want to bring to our viewers, of course, the latest that happened about midday yesterday, when Anthropic released a new version of its AI model, Claude Opus 4.6. It's designed, we know, to carry out financial research, other work-related functions. The company says it can scrutinize company data, regulatory filings, market information, to come up with really detailed financial analysis that would normally
the market's
take
moving like a
person
market now.
days to complete. This is after the market kind of fell out of bed following their legal plug-in to co-work. So how are you seeing these models becoming an entry point into software? What did you think about just the gargantuan sell-off across data services and software names?
It's in the time of such disruption, it's too early to call what's cheap, who is going to be the future winner, because this is only the beginning. And ultimately, it comes back to what is the real long-term competitive moat? And that's what the question really is at this point. Because, if you talk to the private companies, you probably are seeing some of the private companies, this is the fastest way for a company to get to $100 million of revenue. Yeah. But my question would be, what is the real way to look at it? Who can hold on to that $100 million of revenue for a long period of time? Yeah. And what we are seeing right now, what's interesting is it's not in the near-term numbers that's going down. But the question that we are asking, and I think all the investors are asking, is, well, it brings in the probability of what is the terminal revenue we should be paying? What's the terminal multiple we should be paying for the revenue? Because the probability of holding on to that revenue and the profit is probably changing really fast. And that's why we're seeing the terminal multiple actually is coming down pretty fast. And that's the disruption that we're seeing in the market today. But with disruption and chaos, there's always opportunities. Because on the other side of it is, while we are really concerned about, I feel like 6 months ago, everyone's concerned about the ROI. And now we're seeing models being dropped. And then in the meantime, there's a massive sell-off in the market. So I would think there's also opportunity as well, because now we're probably a little more comfortable with the ROI. And then the $650 billion question for everybody is, are we building a road to nowhere? And I would say, well, maybe there's hope that we're building a road to somewhere. So it actually creates huge opportunities if you have long-term horizon, and because there's dislocation in the market.
Do I need to bow to the market or something here? Like, what the hell?
Emily, what's going on?
Your guess is as good as mine, to be honest. We've been watching Bitcoin over the last 24 hours, and it's really been a roller coaster. As you said, it dipped about 13% yesterday. Now I think we're up about 10%, so we're recovering some of that. But it's really just been a roller coaster week. It's been hard to kind of guess at why that's been happening. There's been a lot of instability over the last few months with geopolitical tensions, and Bitcoin's really struggled to patch onto any narrative within that, whether or not it's a safe haven, a store of value, if it can latch onto stocks as it used to trade pretty in line with tech stocks back in the day. None of that seems to be sticking, and it's just kind of doing its own thing right now.
FUD, some would call it, in the market. Fear, uncertainty, doubt just consumed the asset class as a whole, and it's consumed companies that have ridden so high on the back of the climb in crypto. I think of Strategy and some of these other digital asset treasury companies, DATS. How have you seen, particularly on the back of Michael Saylor's earnings yesterday, how have you seen people still questioning how long they can ride this?
Well, if we look at Strategy, for example, that has also had a similarly up-down 2 days. So yesterday it was down about 17% at the close before the earnings. Investors were really bracing for some bad news coming from that, particularly with Bitcoin having such a bad day. And then today we're seeing it up more than 16% because of that kind of whipsawing effect. The earnings weren't as bad as people expected. Losses were in line with what we thought was happening. No new debt was being created. And so people are trying to stretch for, where can we see some like staying power within this rally? Where is there a bottom? Where is there stability? And that might be where we're now starting to see a sort of bottom. Maybe that 60,000 mark was it. And for Strategy as well, maybe it's kind of starting to see a way out of that.
Well, this shit is sick. It's like really just so slow, going down on purpose and then coming in with the bounce. Been here for 2 hours since 12:45. No stop pump up market, man. Bro. I don't even want to look at the screen. Man, I don't even want to look at the screen right now. Turning my face away.
It's Friday, February 6th. It is 8 a.m. on the button on the East Coast. Coming up this hour, in just moments from now, we will talk with the chairman of the Securities and Exchange Commission. Paul Atkins will join me right here coming up. And then at 8:30, don't miss Kansas Senator Roger Marshall on deck, all ahead. Treasury Secretary Scott Bessent, meanwhile, is urging Congress to pass the Digital
Time
Asset
is
Market
3
Clarity
and 10
Act, warning
minutes.
that all these delays are leaving crypto regulation in limbo. The bill remains stalled in the Senate on disputes over stablecoins and how digital tokens are defined. Meanwhile, a Senate panel has advanced a separate version that would place most non-security crypto assets under CFTC oversight. And a White House meeting this week aimed at breaking the legislative stalemate ended without a deal. Joining me right now is the chairman of the Securities and Exchange Commission, Paul Atkins. Mr. Chairman, welcome back. Always a pleasure to see you.
It's great to see you too, Maria. Thank you for having me.
And I want to start right there on the crypto legislation. What was the holdup in terms of the markup on Clarity? Because we've spoken with lots of people from Coinbase who had some issues with the way the rewards issue is being handled. From your standpoint, what right now is holding up this legislation?
Well, so I'm not involved in these discussions because, from my perspective, it's clear from the Genius Act, which was the first statute that has been enacted by the United States that clearly recognizes a crypto asset, and those are stable coins, and sets up their how they are to be regulated and how they're how they're created and all of that. So that was a great triumph, I think, back last year in mid-year, and when the president signed that into law. So that's great, and it clearly sets stablecoins aside and defines them not as securities. So that's not part of my remit. I'm focused on tokenized securities and to try to make clarity on that. The United States has been really dilatory over the last many years now by not addressing these issues as between what's a security and what's a commodity. But we have now a huge opportunity. The president has appointed a former colleague of mine at the SEC, Mike, who was in my office, Mike Seelig, to be chairman of the CFTC. And so the two of us are proceeding apace to harmonize our rules and then to bring clarity through the rulemaking process as to what's a security and what's a commodity. And that will dovetail with what Congress is doing, and we really need to have a statute that undergirds our efforts on this harmonization side, because otherwise it's rulemaking that we have authority to do, but it's really necessary to have this ensconced in a statutory form.
Yes, and I thank you for that, because, of course, I really want to get your take on what the oversight should look like in terms of these digital assets and this new.
I kind of imagined Friday to be trappy, but like not like this.
Coming up in terms of the actual
What a Friday.
legislation on Clarity and where that stands and the hang-up in the Senate. But, Mr. Chairman, talk to us a little about how things are changing and what kind of regulatory barriers we need in place. We did speak with your colleague, former colleague, and now the chairman of the CFTC this week, Michael Seelig.
What a Friday.
And he walked us through a little about the differences of commodities versus securities. And here's what he told us in terms of oversight there. Watch this.
For too long, we've had the Gary Genslers of the world regulating by enforcement, claiming that every digital asset is a security. And Chairman Paul Atkins and I really disagree with that view. We believe that most crypto assets in the markets today are commodities. These are digital assets that maybe were issued as part of a securities transaction, but they trade a lot like oil, gas, and other commodities in our markets. And the information that is prevalent to and important to trading these assets comes from the markets at large. It's not coming from a single source of information, as you see with the capital markets with an issuer. And so we need to build markets that allow for these assets to trade with clear rules of the road, and we can't regulate by enforcement anymore.
And Mr. Chairman, I think that's why the Genius Act
Our
is
hour
celebrated
is here
so much,
in
because
5.
you did make a clear delineation of what is a commodity and what is a security. So talk to us about how we should look at that and what specific differences you have identified.
Yeah, well, so so the Genius Act was great. It focused on stable coins and put them squarely in the banking sector. So my good friend and controller of the currency, Jonathan Gould, is working diligently on coming up with that regulatory framework for stable coins. With respect to other sorts of things, I gave a speech a few months ago delineating what we are going to be working on and coming out with here shortly is a taxonomy, so-called, as to what are digital commodities versus tokenized securities, so we can give clarity to the marketplace as to what it is, and as Chairman Selig was talking about, and the regulation through enforcement that has so long bedeviled this whole area of financial services, even predating the whole crypto world and going back, to decades, as between what's in the CFTC
Baby
realm,
snail falling asleep
SEC.
speed, unless they
So
break
there
one
are
of these
digital
algo ranges.
commodities and digital tools and digital collectibles that we have described and will be outlining in regulation. And then we have tokenized securities. So the first three clearly within the CFTC's rule remit, and then tokenized securities in the SEC's remit. So this is one of maybe the only time that a regulatory agency is voluntarily ceding clear jurisdiction to another regulatory agency. But again, we are out to harmonize the rules as between the SEC and the CFTC, giving clarity and certainty to the innovators and to investors in this particular area, so that people
no
can
drop through, no
develop
go
their
up,
products
just
in the United States rather than feel that they have to go offshore to do that. So if we can do this here in the United States under American law, I think that will be best for investors, best for the financial markets, and best for innovators, and help them save time and money.
Absolutely, and that's why Treasury Secretary Scott Bessent this week said, look, we need to get on board and get on the same team, otherwise this market moves to El Salvador. But, the idea of tokenized securities is really interesting to me, because I'm seeing tokenization ideas in basically every market. I mean, are we expecting all markets to ultimately be tokenized? And it appears that if you do have a slice of a security, a token, tokenizing markets, that it perhaps could open up the floodgates of more participation in the market, perhaps enabling smaller investors to get involved. So can you walk us through tokenization and what a token is in terms of a security?
Well, so a token basically is a smart contract, and by smart contract meaning it's a digital representation of an underlying asset. And so in the case of securities, which are traded now electronically for the most part, although some people still have stock certificates, paper certificates in their safe deposit box or wherever. So all of those are representations of a share of ownership in a company or some other sort of entity, a mutual fund or whatnot. And so whether that's in paper form or on a computer resting at the Depository Trust and Clearing Corporation, or what's tokenized is it's on-chain, on a blockchain, where the possibility whether you have stable coins, tokenized money market mutual funds, or tokenized bank deposits, the possibility of having an on-chain clearance and settlement of the transaction.
I almost actually just fell asleep. Somebody wake me up.
And then actually the clearance and settlement
something
of that,
happens.
to have that on-chain and an immediate
Scream in chat, hey yo,
a T0 sort of
wake up, bro.
Potentially for many instruments. I think that's very exciting for the prospect of de-risking the financial services sector. For years and years, that gap between
I should have just
transaction
slept
date
4 hours in today, man.
Settlement date, when the money's exchanged and booked,
today.
The two parties then are square as to the transaction. It used to be 5 days, 5 business days. Now we're at one business day. If we get down to T0 for many instruments, that'll be just a huge positive change for the marketplace. So that's what excites me.
Market has been taking a nap
the
since
investors
12:50.
will decide what's the most convenient.
On the cloud, set the roof.
How they
Look
want
at
to
QQQ. Wait, hold up.
transaction? Do they want to?
Why is my chart not up? Is my chart updated right now?
Deposit, tokenized bank deposit.
What's going on
QQQ? From their account immediately, or some other form of payment and delivery. So that's
sickest I've seen on IWM yet.
Really exciting for the future. And we're at the cusp of that right now to be able to.
Humanly doesn't even make sense. AI, artificial intelligence, artificial intelligence, artificial intelligence.
Are you envisioning in that space for tokenization? Is it the same regulation book that we have seen with regard to all securities? How does the regulatory framework change?
Well, basically, again, we're just migrating from, we already have enabled
QQQ heading lower, QQQ heading lower.
Old-fashioned
SPY is not
stock certificate. So that's one thing that has proven, really over the last, 40 years now or more, proven to be a real step forward, for financial services.
If this is not going to do,
and that's helped to
why are they doing this?
I think a very good way. Enabled growth and de-risking, as I was talking about earlier. And so now the next step, on-chain, on blockchain, using the distributed ledger technology that is what's behind, when we talk
I'm going to go get a honey bun and a cup of water.
I think is, the next step and is, as I said, very exciting. We will be adjusting.
All right, let's put on a better video. Alright, I'm sorry, but I really want a honey bun. Market ain't doing shit on the way right now. Alright, I could step away for 5 minutes and I'll be fine. It'll be fine. Well, to be honest, I was gonna say, what was this shit we on?
Welcome back. Breaking news overnight. Savannah Guthrie's brother, Cameron, making an urgent plea for his mother, Nancy's return as the search now is entering day 6.
This is Cameron Guthrie. I'm speaking for the Guthrie family. Whoever is out there holding our mother, we want to hear from you. We haven't heard anything directly. We need you to reach out and we need a way to communicate with you so we can move forward. But first, we have to know that you have our mom. We want to talk to you and we are waiting for contact.
The FBI is offering a $50,000 in a reward for any information leading up to the discovery of the 84-year-old Nancy Guthrie. The Pima County Sheriff's Office says that they believe Guthrie is still out there. That's what the sheriff said yesterday. But he claimed that he still doesn't have a suspect or a person of interest. The first ransom deadline passed. That was yesterday at 5 o'clock. And a second, what we understand is a, quote, more consequential deadline is coming up on Monday at 5 o'clock. Here's the FBI special agent in charge. FBI has been getting much more involved. Watch.
We are aware of a ransom letter that was sent to the local media and then to national outlets. We have made one arrest related to an imposter ransom demand, and a complaint will be presented to a magistrate judge later today. The ransom itself, one talked about an Apple Watch, and one talked about a floodlight. The ransom note that was distributed to the media did make a demand.
Guys, let's hit the like button on the live stream if we can. Thank you very much.
If it wasn't made, then I think a second demand was for next Monday.
Joining me now is former FBI special agent. She is Fox News contributor Nicole Parker. Nicole, thanks very much for weighing in. And I know you've been covering this as close as anyone these last couple of days. Does it seem to you, based on what we've learned, that this is a one-man operation, multi-people? going in there, abducting Nancy. How does it feel to you, Nicole?
That's a great question. That's a question that I have as well. This appears to be highly orchestrated, quite sophisticated, and I would be very anxious to see what the answer to that question is. It might be difficult for one person to pull this off, but again, they had 45 minutes based on the timeline. It was approximately 45 minutes from the time that the doorbell camera was disabled to the time that her pacemaker stopped syncing to her devices. And so that is very telling. That's, not much time to do a lot of damage, and it's absolutely heartbreaking, heart-wrenching what this family is going through.
This is
but
low-key
it's
bullish.
so important to
Pulled
look at
back.
these ransom emails. The family
Using
has now
all this
tried to
shit to go higher.
communicate to the offender twice. Savannah and her sister came out,
pulling back on fucking
the siblings
purpose to
came
go
out,
higher.
and then just last night, Cameron came out independently with another communication asking the offender, please communicate with us, talk to us,
30
please.
cents away.
I need proof of life. So far, nothing. And something that I think is interesting is normally, again, typically, not always, you will hear back within about 24 hours, something of this case, 24, 48 hours. But it has been radio silence, and I don't think that's a coincidence because they know that law enforcement is all over them, and any form of communication that they give right now will give more clues and evidence to law enforcement to track them down. And again, it's unusual also to see a two-tier deadline. The first deadline was 5 p.m. last night, and then now it's another deadline of Monday. That is highly unusual for a case like this.
Yeah, and you mentioned Savannah's sister, Ann. We have video of Ann's home. Ann is married to Tommaso. When the sheriff was asked who dropped Nancy off after they had dinner, apparently she had dinner with Ann on the 31st, the sheriff said, well, we're just going with quote-unquote family. So they wouldn't release who exactly dropped Nancy off after dinner. Was it Ann and Tommaso? Was it somebody else? I mean, she took an Uber to meet them. And Ann lives 10 minutes away from Nancy, and she took an Uber for a 10-minute ride. You mentioned something
They really
interesting
just
there.
did
You said that it was 45 minutes or 40 minutes
1,500%
from
on
the time the
IWM.
camera was disabled to the time that the pacemaker dropped off, meaning that she was out of the house.
That is wild.
That's a long time to be in the house. I mean, you're talking about an 84-year-old woman. How much pushback could you have gotten from an 84-year-old woman? That doesn't take 45 minutes, I imagine. So what do you suspect was going on in that house for 45 minutes?
Right, it's very difficult to know. Just based on my investigative experience, there could have been quite a struggle going on. I mean, I understand that this is a very strong-willed woman, and we don't know the condition that she was in when she left the home or was forced out of her home. We just don't know a lot about that. Maybe he was
cleaning up evidence. I mean, maybe he used the time to clean up evidence.
Exactly. There could be a lot going on in that home. And that's why I think it's interesting that the locals, released the crime scene so quickly. And again, the FBI comes in and says, no, we're going to come into our own investigation. And I know that the FBI is carrying a lot of weight right now. They're doing a lot of work. They're, investigating the ransom note, the banks, the finances, the social media accounts, the phone companies, the digital footprint. But let's go back to Annie Guthrie real quick, because that's extremely important. Was it normal for Nancy to go to Annie's house? Did she go there quite frequently on a Saturday night for dinner? Was it normal for her to take Ubers? I know that the FBI and law enforcement is looking very closely at her Uber patterns and even specifically speaking to the Uber driver. Was it normal for a family member to drop her off afterwards? And was it just the brother-in-law? Was Annie also in the car? Were there any family quarrels going on? Were there any discussions about finances? Any wills that were being discussed?
Full fucking bullish.
Again, law enforcement will rule out absolutely nothing. But I also think it's important from an investigative perspective, the pacemaker. We know that the heart rate, you can measure that on the pacemaker. I would be interested to know, was there any substantial heart rate activity on that car ride? Were there any sort of, anomalies in her heart rate during the time that she was picked up for dinner and the time that she was dropped off for dinner, and then obviously at the time of the, assault. So it's going to be very interesting. Those are the types of things, Maria. Law enforcement's getting into granular details right now. They've got to dig deep to determine what exactly happened. But looking at the family, they said, we will rule no one out at this time.
Right. And he was asked specifically about family members. The sheriff was asked yesterday about family members, and he said, we're not ruling anybody out. You make a good point about the will. I had not thought about the will. Nicole, thank you. We're going to keep following all of this, and we so appreciate your involvement here. Nicole Parker, we'll talk soon.
I don't know, maybe this is the new norms.
So it is kind of interesting since Kevin Warsh's name was announced as the new Fed chair, nominated by President Trump. Markets have basically been falling. Stocks have been falling, mostly techie stocks. Gold's down, silver's down, Bitcoin's down. So let's talk about it. We welcome Phil Kerpen, Unleashed Prosperity Principal, and Mohammed El-Arian, Allianz Chief Economic Advisor. Gentlemen, thank you. So Mohammed, maybe it's just a coincidence, but should I read anything in? Gold down, silver down, so precious metals are down, and stocks are down. They're not down a lot. We're still, I think, in bull markets, but nonetheless, and Bitcoin's down a lot. What do you make of it? Or is there anything to make of it at all?
So I don't think this is a Kevin Walsh story, Larry. This is a story about a market that saw incredible gains, led mainly by institutional investors. It attracted lots of tourist investors, speculators. And when the institutional investors started rotating out of the few names that had done really well into something else, the speculators got out. And we are seeing a very technical-driven sell-off right now. And you see it in Bitcoin, you see it in silver, you see it in tech, you see it in the most speculative areas of the market.
So this could be a good thing, right? I mean, every now and then you got to have a little cleansing.
Yes, I think of it as a cleansing. I also think it's going to provide opportunities, but rather than invest in themes, like last year, everybody fell in love with AI. It's really just a handful of names that are going to do well. And there's other areas of the economy that are benefiting tremendously from the high growth that we are seeing.
Phil Kerpen, let me come to you on it. It's a different subject, but one of Kevin Warsh's goals, and he said this many times and he's written, he wants to get rid of the Fed models, you know, that prosperity and economic growth causes inflation. He wants to get rid of QE, and I say good for him on that. He also likes to watch market prices, okay, instead of these old moribund Fed models. And it includes commodities. So we're going to put up on the chart commodity metals, all right, CRB metals index, we'll put it up on the full screen, is showing a very significant rally. You can see the upturn in that thing, and there's no correction there. And actually, the CRB futures overall there's the CRB spot. That thing is also, we'll put on this, yeah, you'll see the overall index is also looking strong. So let me ask you this. I mean, if those commodity indexes, which Kevin Warsh is looking at, they're forward-looking price indicators, sensitive price indicators. I think he's 100% right. Is that telling us that we don't need lower interest rates, or that lower interest rates might even be a bad idea, an inflationary idea?
Well, Larry, I think that, at the same time we've got a lot of these commodities that are rising in price, we've also got the decline in things like gold. Oil is still at a very low level. And so it's a little bit of a mixed basket. It's a little bit of a mixed picture right now. But I think what you're going to get with Warsh may be something like a synthetic price rule, where they look at all the commodities and they try to, in a forward-looking way, tune their policy towards limiting inflation, rather than, as you pointed out, the incorrect assumption that economic growth is going to be per se inflationary. So I think if they do move in a more rule-based direction, then market participants will be able to look at the same indicators the Fed is looking at and have a good indication of which way they're going. But I think this is all going to be part of what he explains when he goes to his Senate hearings and how he's going to operate the Fed.
I mean, Mohammed, I like the idea of looking at these forward-looking indicators and these market-sensitive indicators, and they happen to be inflation-sensitive indicators. Do you have a thought on this? I mean, metals are rallying. It may not be inflationary. The rally in metals may be strong growth, or may have something to do with AI data centers. Who knows? It may not be. Gold and silver, which are traditional inflation indicators, as you noted before, the bloom is off the rose on those. But anyway, how about bonds? Bonds, the bonds are an indicator of future inflation. The CPI break-evens and the TIPS market, all of those things would probably be a welcome change. What do you think?
So first, I think the bond market is well behaved. I think that the metals that you're talking about are a reflection of strong growth. As you said earlier in the show, the US economy is growing at an astonishing 4 to 5%. That's more than double what Europe is seeing, just to put it in context. I think what Kevin Walsh stresses, which is really important, and you and I, Larry, have talked about this, is he believes that we're on the verge of a productivity boom, that boom will increase the safe speed of growth, meaning the non-inflationary growth, which will allow interest rates to come down. This is a very important change because this Fed, which made huge mistakes, has been overly data dependent, backward looking, and we now have a nominee who's willing to look forward again, just like Greenspan did at a very important time in our economy.
You know, Phil Kerpen, on all this, one commodity that's come down, now it fluctuates vis-a-vis the Iranian possibilities of perhaps conflict, additional conflict in Iran. But energy prices on the whole have come down over the last year or so. They've come down about 20, 25%. So that's an offset, Phil Kerpen. And I think you have to take it, you know, metals are doing this, precious metals are coming down, industrial metals are going up, energy is coming down. You kind of have to figure out the whole picture. And it will be interesting to see how Kevin Walsh puts that picture together.
Yeah, absolutely. As I was saying, it is a mixed picture. We certainly have things that are up and things that are down. Even within energy, most places we've got electricity up and we've got oil and gas way down.
We are literally watching one video that is old. Okay? I showed even the time. Alright, stop getting distracted on wrong things, right? Stop being distracted on bullshit. Right? Why are we watching this news? Hear what they're saying, right? Realize what happened until last night. All right? Do you understand what happened yesterday? Do you understand what happened, right? If you don't, then just sit back and relax and just learn, right? Stop being distracted on bullshit.
So it depends on kind of how you look at that basket.
Stop distracting other people on bullshit. This is the last warning for people that channel hop or is distracted, because this is the last time I will say it on chat, because you are scaring people away, you are tiring people away, and you are distracting people away. You could do that somewhere else. I don't care.
Huge productivity boom. I agree with that, and that really does change the rules of the economy. Nobody knows how much AI and these other new emerging technologies are going to
so many
really
channel
boost
hoppers, man.
on a
Never even
permanent
fucking
basis,
hit the like
but
button
it could
anyway.
be a stepwise increase.
It's kind of weird.
I think that's why you're seeing the growth potential of the economy really
Why do they want to
increase over
keep
the
coming
past
into the group?
I'll tell you one thing, Mohammed, give you
Why
the
do they
last
want to
word.
fucking be here and
if it
be
gets rid
weird?
of QE,
No, hit the like. I don't know.
QT, any of the Qs.
Why do they want to troll
I would
always
be
when
very
they
happy.
can?
I would welcome
Not.
that. He says he's going to get rid of them.
Who cares if the
I
video
would
is
too,
17
Larry. I
hours
think
old?
we got carried away with QE. We distorted markets. We're now finding it difficult to get out of the markets we've distorted. And you and I know that when we distort market, we also distort the allocation of resources. So I'm glad we've got someone who's more level-headed and understands that the Fed should be operating on a smaller playing field and stop this mission creep that we have seen for the last 8 years.
Yeah, couldn't agree more. And that's what he wants to do. I look forward to his hearings and for the Senate. Anyway, Phil Kerpen.
HOD divergence is testing on QQQ and SPY and everything at the same time here. Dow breaks 50,000 for the first time. They're talking about.
We welcome in Stephen Orr, CEO and founder of Quasar Markets. So glad you are with us. I know we're going to talk a lot about tech and AI, but Stephen Orr, this is your chance for a victory lap pertaining to silver. You told me, I think it was a Friday, that you said I'm short silver. You were a little early, but then it sold off. It went up and then it sold off.
Life
and then
is
you
full
said,
of distractions,
now I'm
man.
buying silver. And here's a look at this incredible chart. And you were a little early, and then it took off. Tell us a little bit about this silver story and how you made. I mean, you made at least, what, 15% on each one of those calls, right? So I don't know.
Thanks for having me, Nicole. Absolutely. You know, one of the cool things about this is I've been saying this for a while. The thing that's missing in the markets right now has been common sense. When I was buying silver at $19, $20 an ounce, that's when we should be buying it.
is finally
we
passing
have that
here.
narrative. The
Divergence
narrative was
is cleared,
that
unspun,
major companies
QQQ into
need
320.
silver in their products. They need it in their phones. They need it in their, as Elon Musk told us, we need it in their batteries, in their products. So silver was definitely underweighted. So when we looked at silver, we looked at the charts, we're like, hey, okay, I love this. But when it got to about 50, 60, I was like, wow, it's starting to really pick up. The FOMO's picking up. And that's what happened. When the FOMO picked up, then it ran to over 100. And I'm like, this is absolutely asinine. And when I looked at the that side of it, you're right. I did a little bit early, but I was short the market. And I wasn't scared because the one thing that was missing in the market was common sense. And so when we started to short the market and the leverage that was in the market that we're seeing absolutely came out of it, deflated the market. And right back then, it went to about $65 an ounce. And I said, okay, there's going to be a bounce on this. So we went back and we bought back on silver, jumped up, took that money off, and now I'm sitting on the sidelines because I think silver's about fairly valued now of where it should be. So thanks, appreciate that, Nicole.
Yeah, a lot of fun to sort of take the ride with you as you were messaging me. You know, it's fun to see how a trader's mind works. Let's talk about AI. How's your mind working on that these days?
Again, the same situation. You're seeing it for these major companies like Amazon and Palantir and Apple. They're all telling the same thing. They're spending CapEx on AI. And when I look at the markets, I look at the future. I don't look at the past. I want to know what they're spending it on. If they're going to spend this kind of cash, where are they going to spend it? And they're spending it on AI. And there's a reason for it. And I don't want to just understand how much they're spending on it. I want to know where they're spending it on it. And they're saying, okay, look, we know that developers, we won't need that many. Dario Amodeo from Anthropic CEO said, look, we are spending a godly amounts of money on CapEx onto AI. Why and where? And they're saying, look, we want to make developers more efficient. So you're seeing that now in Amazon and Palantir and, of course, NVIDIA. And all these companies right now are saying, look, we're going to spend money right along with you with data centers. We're going to need it in energy. So energy companies are growing very fast here. And they're telling you that. They're not telling you we're slowing down our spend. They're speeding it up. This morning you saw NVIDIA CEO Jensen Huang saying, well, guess what? We're going to spend even more on AI. So I want to buy the pickaxe and shovels. And these are the companies that are doing it. So I'm very excited about that. And so, over the weekend, I thought about that. Over the week, I thought about it. And again, we made a bigger play. And when you saw liquidity come out of these companies yesterday, the big capitulation happened, and I bought into those companies: NVIDIA, Amazon, Palantir, CoreWeave. These are companies that are part of the next generation AI, and I want to be part of it. And they took a little bit off, and we made a position.
They called yesterday capitulation. Shit, that's what I said. Free market. Fuck.
So tech for the long term.
That's crazy.
I mean, for example, this morning I was talking about how the NASDAQ was down about 4%. And we've come up off those lows. I mean, it's still to the downside for the week, but what an improvement. When you see these kinds of dips, are you buying? I mean, let's
never brought up like President Trump come on and be like, oh, look at the stock market.
Earnings, but then the stock sold off.
Man, that's Super Bowl time.
Palantir is a very good example of that. When people ask me about AI, what companies should I be buying? I tell them which companies are actually being used, and they've got major contracts with the government. I like that, and but I didn't like it over, highs. I liked it when it dipped, and yesterday was a dip. And for me, it's not just about the government contracts they have, but it's how they're expanding, and they're expanding into healthcare. And we're seeing that now with Pfizer telling you that. Ginkgo Blowworks, I saw that the other day. I was like, wow, that Bioworks company, that's exciting. That are the kind of things that I'm looking at. And when I'm looking at those companies, where is the spend? They're spending it in biotech. So is Palantir going to be the forefront of that? Yes, because they understand how data works. Massive data sets. Amazon understands that. I love that. So I love that. And you know what? When I also look at that, I have to look at two things. The first thing is, how much should I be investing? And why should I be investing in that? And the reason I say those two things is they're saying we are putting big money into it. And why? Because we see a better production down the road, not just right now. So I'm not looking for this for the next week or two. I'm looking at this for the next 3 months. And I expect this to be a nice payoff, as it did the silver.
And then when we think about NVIDIA and Amazon, I mean, Amazon, we talked about some of the CapEx spent. Amazon, $200 billion, Meta, $115 billion, 175 to 85 for Google.
1.84% SPY
$100
showing
billion.
today.
When you saw Amazon $200 billion, I mean, the CEO, Andy Jassy, is talking about they're
is
very
up
comfortable with this. They're aggressively
1.99%.
investing in AI. They're confident with their plan. And you see Amazon sell off. Do you buy it? NVIDIA is higher after 5 days of selling. Do you like both those names?
$12.5 on SPY.
That's right. This morning I liked the sell-off in Amazon. I thought it was overcooked. I was like, wow, thanks for the cheap price. Yes, I'm long. I'm long about $200. I said, okay, let's go. Why? Because they're building the enterprise. Major companies don't really know how to handle their AI. They know they got to put it in there. What do I do with it? Well, AWS is right there behind him, the Google Cloud. I'm like, I love all these companies, and they're doing the right thing. And so when companies don't really understand AI, they have to turn to companies that are building it. And I love that side of it. So AI is definitely in the genome of Amazon. And when you look at it from the pickaxe and shovels, the cloud is right there. So Amazon was a nice pick. And guess what? On top of that, they're selling the products back to them, and they know what their retailers are buying. They have the data on people, so they're winning in both ways. I love this. Well done, Andy Jassy. I've got you back. You look at NVIDIA. When you see these companies, they're also going to be the pickaxe and shovels because it's the computing power. And Jensen Huang says, look, we're right there. And every infrastructure you see right now, those enterprise companies, is still going through NVIDIA. So yeah, I'm on their side too. So those three companies I love, Palantir, NVIDIA, and Amazon.
All right, well, keep them coming. Keep all your hot trades in our news box so we can keep paying attention. Stephen Orr, CEO, founder of Quasar Markets. Thank you.
Market is crazy.
We have got a Major League Fox News alert. Listen.
Because here we go. The Dow is now above 50,000. And it is happening now. 50,004. John, there it is. This is an all-time high. I believe it's we're on track for the 5th record close of 2026. The market is bouncing back from what was a really uncertain market all week. The S&P 500, the NASDAQ getting hit by a tech sell-off. And here we go. It is off to the races, up almost 1,100 points, 2.25% gain. John, 50,000 is a big round number.
Boy, I'll tell you, and look at where it is compared to November of 2016 when Donald Trump was elected and everybody predicted that the Dow was going to go in the toilet. In fact, it went exactly the opposite direction. And then last year, when Liberation Day hit and then all the tariff news came out, we started applying tariffs to a lot of goods coming in from overseas. Everybody thought, well, the sky is falling and the Dow's going to go back down to where it was in 2016. And I boldly predicted that by this time next year, the Dow would hit 50,000, and there you go.
Pretty remarkable. Right now joining us is our Fox Business correspondent, Lydia Hu. Lydia, it was a wild ride this week. I don't know if anybody saw things finishing up like this, but there was a couple big data points this morning. Consumer sentiment was unexpectedly up and beat expectations. Also, the inflation read was better than expected. So what all is getting the market to this point right now?
This is a huge psychological milestone, crossing that 50,000 point mark for the first time ever. And more to your point about where we've been coming from, John was just talking about the Liberation Day tariffs. Just to reset and remind everyone where we were back in April. And the days that followed the imposition of the Liberation Day tariffs, we sunk as low as 37,000 on the Dow. And look at how we've been punching back in shorter than a year's time since then. And Sandra, you are absolutely right. This week has been punctuated by a brutal sell-off in the markets that we've been tracking over in Fox Business. A lot of that driven by what exactly is going on with artificial intelligence. There was an announcement about a new type of software and its impact on really our blue-collar service sector. But it looks like we are the dip buyers, so to speak. They see prices go down, they see a sell-off, they swoop in because they've got confidence in AI and the ability of this market and this economy to keep punching forward. Sandra, you asked about the consumer sentiment survey. This is a monthly survey that comes out from the University of Michigan. They're measuring consumer confidence on a monthly basis, a really important leading indicator because so much of our economy is driven by consumer spending. So if consumers are feeling confident and more optimistic, then that would suggest that there will be more spending that would be good for business and therefore good for the markets. And you're right, today, consumer sentiment jumping mid-February. We're seeing a 6-month high on consumer sentiment. The index is up almost a full point, 0.9 points to 57.3. That is the highest that we have seen since August. And importantly, consumers are saying they see inflation, their expectations about the direction of inflation, they see that improving. They see that further moderating. That's also really important. And one final point that I would add here too is among the indices and the indexes that we track on the Fox Business Network, we also track
I'm going in one small SPX, but
and we got some really encouraging reads out of those surveys earlier this month for the country, showing that manufacturing, for the first time in 11 months, punching into expansion territory out of contraction territory that might have something to do with what we're seeing here today.
So Lydia, a lot of the increase in the Dow, in the last 5,000, 6,000 points has been
SPS
through AI
went from at open
investment, and then
100.
It seemed like it was a little shaky that there was an AI bubble that was building. That
went
doesn't
from
seem
yesterday
to have
close 100.
It does not seem to have happened. It is a constant and ongoing discussion, though, John. I will tell you, we are always tracking how the flow of money is going from the AI tech spend, from the infrastructure to the software.
Wow, they did fucking calls discussing, and then they did puts discussing.
Incredible amounts of what they call CapEx spending from companies. Amazon is a terrific example out with their earnings this week, blowing everyone away with how much they're spending in their build out to accommodate artificial intelligence. And even though they had also terrific earnings and revenue that beat expectations, meaning they're earning more than anyone anticipated, because they're also spending so much on AI, the Amazon stock fell off. So there are some questions about when exactly are we going to see the return on the investment. I will tell you, for the time being, there are a lot of bulls on Wall Street. Sandra will tell you that. There's a lot of optimism here.
Yeah, the tough part about this market is the volatility, uncertainty surrounding certain sectors. There's been a lot of movement in the Bitcoins and the precious metals. The precious metals, by the way, are bouncing back right now as well.
6925 calls getting fucked around and played with.
On the day,
that's every single put
pretty
is getting
big
crushed.
move in the precious metals markets. Silver's also up, copper's up. Some of those industrial metals, the energy market's moving as well. Right now, oil is back.
Zero DT went from $83 to it's at $3 now. What the fuck am I looking at?
Movement all around here. Really interesting to look at these markets. But the Dow above 50,000.
You can literally see the 3/3 of the contracts too. Holy
for the American stock market,
3 days.
This would be the 5th record close of 2026. Obviously reflecting what is a strong economy, a growing economy. This really flies in the face of a lot of those expectations that things were turning around. But next week's another week. It's been a very volatile market. That's hard for traders. There's been a lot of uncertainty out there. As from an investment standpoint, though, if you've let your money alone in your 401k, you can go peek at it today and you will be pleasantly surprised, Lydia.
Yeah, absolutely. And I think back to the point about what we
Damn,
call
someone
the
said
buyers, when they
they need to keep the market green so they could do that.
Earlier this week, a lot of investors looked at, hey, that's a good point, a good place to get into the market and put more money to work. And that might be some of what we're seeing here reflected on the screen at the moment.
But here's the interesting thing. People are finding a reason to be very
1.8%
optimistic and
SPY's up
about
today.
what's going on
How is
with the
this
Dow
shit
now,
fucking
but
normal?
This time next week, they'll
Market
have
going
found
up
a
and down,
reason
up
to
and
be
down, up and 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 down. Last fucking 1 month like nothing. Last 3 months like nothing.
Lydia, thank you very much. I know that FBN's covering this as well. John, you always say markets go down. This is in a market that's only been going up. I mean,
but you see those little dips in the green line there?
That's usually a sign of health in a stock market. You don't
up
want
and
to
down,
see
up and down, 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 up and down.
Opportunities for buyers to step in.
Jesus Christ. I need more water. More water.
Administration has launched a new website they say will help patients buy prescription drugs at a discounted rate.
Everybody, you're going to save a fortune.
It's a government-hosted website called TrumpRx, but it's not a platform for buying medications. Instead, it's set up as a facilitator, pointing Americans to drug makers' direct-to-consumer websites where they can make purchases. The site is part of a larger effort by the Trump administration to show it's tackling challenges of high costs. Affordability has emerged as a political vulnerability for Trump and his Republican allies going into November's midterm elections. The website also provides coupons to use at pharmacies.
For example, you will see dramatic reductions in the cost of popular weight loss drugs known as GLP-1s.
The site launches with over 40 medications, including those weight loss drugs, Ozempic and Wegovy. Many of the details of Trump's deals with manufacturers remain unclear, and drug prices for patients in the U.S. can depend on many factors, including the competition a treatment faces and insurance coverage.
Market is chopping. Chopping. Nothing other than slow up for now. Has been. Damn, our gas prices are going up apparently.
Tries to roll back the Good Neighbor plan. It was initiated under former President Biden. This program required 23 states to reduce industrial emissions. EPA Administrator Lee Zeldin joins me now. Sir, are you rolling back these emission rules completely? If you roll them all the way back, that's a real big deal, isn't it?
What we're doing is advancing cooperative federalism. What the Biden administration did was, instead of having state implementation plans where the state is producing their own plan and the federal government works with the state, instead the federal government under the Biden EPA did a federal implementation plan, a one-size-fits-all approach for all of these states, and took that shot at federalism and not working with the states. One of the key pillars for President Trump at the EPA under his watch is to be advancing these state implementation plans and working with these states all across the country. The first shot, by the way, at the Good Neighbor rule was the Supreme Court. The Good Neighbor plan, as the Biden EPA pushed out, was immediately challenged, and there's been all sorts of legal issues with the approach. But we want to work with states more, not less.
Would the bottom line be more CO2 emissions?
No, we're not. That's not our objective here. We believe that we can accomplish very similar goals of being able to reduce emissions.
1.87% now.
By working directly with states.
IWM up 3.6.
What they are going to do for them, making those decisions for them. We don't think that's the right approach.
Okay. Mr. Administrator, you and Small
really
Business
done did it,
Administrator
coming in with a
Kelly
2%
Loeffler
move
met with
yesterday
Los
and
Angeles
today.
Mayor Karen Bass earlier this week. I understand you discussed changes
Some
in the
fucking
permitting
stupid
rules
ass shit.
to allow a faster
Came in with a
recovery
2%
from the
move some
wildfires.
day.
What did the mayor say to you?
Yeah,
We had a really
big
good
ass 3/3
meeting,
though.
a great visit. But it was with the
3/3.
LA County Supervisor, Catherine Barger. Then we met with the LA Mayor, Karen Bass, and her team. We met with residents of the Palisades and victims of the Eaton fire as well. And there's a lot that goes into this. On the permitting front, there are a whole lot of people, thousands of people who just haven't rebuilt. There are many who haven't even submitted their applications yet. There are others who have submitted their applications and they're waiting for approvals. A big issue that we got a whole lot of extra color and context on, and speaking to residents, is that there are some insurance companies that are really dragging their policyholders through the mud. It's taking way too long, requiring way too much information, and then underpaying on a policy,
crazy.
Which is really setting back the effort of that policyholder to have the resources to be able to rebuild. So there's a lot to it. Permitting is one component. The insurance, rental assistance, but I would also say preventing this from ever happening again, learning lessons that the state should have learned beforehand on water flow, on forest management and fire prevention. There's a lot here the president wants to, the focus has been on federal equities. Now the president wants us to just break through whatever local log jams exist on behalf of these victims, and we're happy to do it.
Good stuff. Lee Zeldin, EPA Administrator, thank you very much for being with us today. Thank you, sir.
What the f... How much do we fucking move today? 130 points up. Oh, what the f... This is crazy as fuck. That's crazy as fuck. 1/3, 2/3, 3/3 from the bottom of Thursday. Friday. 1, 2. What is a cycle today, literally? Oh my god. Just no cycle melted up almost. No cycle melted up. Just like some presidential fucking election news. Yeah, I'm about to short fucking crazy. It's making me fucking want this so bad. 690.6. Such a weird day. 3.63%. IWM calls must be up like 2,000% now. Like, this is actually disgusting though. What the fuck even are we doing right now? Crazy. 15 minutes left. fucking nasty. Yesterday's close 677. Today's close 690. 691. Market is on something today. SPY is up 1.95%. Dow is up 3.66%. Never before have I ever seen in my life Dow up 3.66%. 690 breaking up too. Man, what kind of bullshit market is this actually though? What the fuck are we doing now? Oh my god. They're really doing the 15-20% probability from fucking breaking down the trend line on QQQ and then coming back up from the fucking floor. That's crazy as shit. We're not QQQ that much, but SPY is showing like fucking nuts. Wow. Well. What a market. Literally. This shit is almost scary. What a market. What the fuck is this?
The broadening out of the rally, something we talk about, right, a lot as a positive, noting, though, that equal weight has outperformed.
6,800. Where are we right now? 6,933. Man, this shit is so broken. This shit is actually so broken. They're coming in with the 5-minute gap here at 6,925 and they're going higher. That's how fucking crazy this shit is now. Oh, yoy, yoy. So dumb. There's some presidential news coming out tonight. So I guess we'll see what that is about. It's the crazy shit. 11:20 breakout. Purple box and just gone. Burnt everybody in here. What the shit? Can you fucking believe? Wow. What the 1/3, 2? Look, there's so many puts here, and they show the real direction, and they burnt that. Another gap here, and a gap here. Oh my god. Oh my god.
Cap weight, and we're talking significantly. So let's bring in iCapital Chief Investment Strategist Sonali Bassett. And Sonali, we're going to just show this is so, folks. RSP, that's equal weight versus the S&P. So for a long time, I could have gone up much further. You can see it underperformed, but since late October, my goodness, and look at this big spike here. It's really coming on A lot of money going into equal weight.
It feels good, doesn't it?
Yeah, it does. I like it. I do. I think it's good. I'm a fan of, or you know, a cheerleader of a broad stock market.
QQQ is up 2.26%, and SPY is now up 2%.
Over how valued
Today,
or overvalued some people felt that those big tech high flyers were. The fact that 10 companies
is the day for the bulls for like, wow.
Of the S&P 500. We like
what a fucking day for them to do this shit.
Fact, when you even look at some of the other
yesterday
places,
and the day before that.
What the fuck? Run-ups, you can buy just here at home.
Right. Hey, let's talk about something I saw you note that was intriguing. You're saying, okay, this is good stuff, but there's some interesting, like if you really nuance it. So banks are killing.
How is this shit normal? What the fuck are we talking about on QQQ2?
Yep.
And how do we account for something like that?
There are a few things that you can look at. When you look at the broader S&P 500 financials index, what has sold off? The alternative asset managers has sold off quite drastically.
The private equity stuff?
Private equity, private credit, and actually you haven't seen them go anywhere near back to their highs in like 2024, even 2023. And so they have not recovered. You have seen crypto really weigh on the broader index as well. That might continue to hurt continuously. But also the regional banks can continue to get more of a lift here too when you think about the underlying trends in the economy.
A similar situation, bifurcation, if you will. Industrials, consumer. You mentioned industrials. Again, just look at that monster move. In the meantime, for a while, consumer discretionary they had a similar move, not parabolic per se, but now it's coming down, and it's coming down rapidly. Is it just that we have two economies?
We certainly do have two economies, and we wonder how much that K-shaped economy, or I think you call it the French eye, is that right?
Exactly.
And so with those two economies, we don't know if in consumer discretionary we're seeing a meaningful trade down from consumers rather than a more broad health of the consumer. But industrials we do continue to like, but cyclicals and financials are not all trading uniformly.
So your clients are looking for equity exposure. You mentioned international, cyclical, small caps, and private markets. Where in this private market area are they seeing, or is there?
Yep. There's a lot of areas actually, despite all the noise. So that includes, for example, venture capital. We know that there's going to be a bunch of IPOs this year, a really large year for IPOs, but it is also not uniform. So venture capital is a big space. Private equity is starting to come back. We haven't heard that in a while, as you know. And the reason people are talking about it is this is the first year in about 2, 3, 4 years now, last year being an exception, that distributions are starting to outpace capital calls. So money going back to investors is starting to outpace the money that was being called from investors to put in the ground. So finally, they're feeling the money coming back to them.
Before I let you go then, AI. I also read that you are seeing demand for AI, but the caveat is you got to have some downside protection, right?
Yeah, and you can consider this an alternative exposure because what happens is the banks issue notes and they buy options around those notes so that you can get a single stock like Nvidia or Apple capped at,
what
say,
a crazy fucking way to close.
So long as the stock
time is
drop a certain
3:50,
amount.
3:55.
Is that a collar? Is that considered a collar?
It's a collar-like trade, You can buy buffered notes as well, but generally speaking, clients are seeking exposures, including, by the way, right now, we're starting to get calls around software, single names in software.
Okay.
So it tells you to the RSI that you were talking about, people are looking for what has been thrown out with the bathwater to get in.
I forgot there's one chart I meant to show is the call options on software. But shattering the record in the last 24 hours, shattering the record like it's never been. So to your point, people are kicking those tires.
It's historic RSI levels right now.
Exactly.
Historic.
This shit is scary, man. What the fuck are we doing today? Yeah, it says a 15-20% chance we do this shit in the fucking day, and then we fucking actually did it. What the fuck are we actually doing, man? Wow. You gotta be kidding me, man. Least expect this shit at the fucking end of the week coming in. I'll burn everything at the top, burn everything at the bottom, Friday close in the middle. This is fucked. This is fucked. It's been so dangerous up here, man, but this is so fucked. Never seen a big candle like that in a long time. It's been green at least. Never seen a big candle like that in a fucking quite a while, folks. That's us.
That's a classic. The triple Lindy, right?
Oh, man. I guess this presidential news coming out, and then the weekend open will take care of whatever the fuck's gonna happen here, because this is... wow. What a way to close on Friday, man. This is the most fucking rarest shit ever on Friday. The fuck did they do to the VIX, man? Ay, 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 ay. What a fucking crazy ass fucking VIX. They really closing at 2% up today. Just like that, it closes. What a fucking way to band it at the top and band it at the bottom, though. What the fuck? Oh my god. So nuts. Shit is so nuts. I mean, the market really has been going down that long, huh? 1, 2, 3, 4, 5, 6. What the hell? They're trying to fucking make me. Yo, this is unbelievable. What the fuck? Hey, yo, bro. Hey, yo. Hey, yo. Oh my god. Nah, bruh. What the f... What the fuck? What is this mess? Fuck, what is this mess? Ugh. I mean, one, two, three. Counter rally, 4, 5, 6, 7. 1 week in 1 day. That is scary as fuck. This shit is scary as fuck. Just tech rebound propels S&P 500 to the best day since May now. Get the fuck out of here with that stupid. Oh my fucking god. Huh. All right. Have a good day, everybody. That is weird. Have a good weekend. That's fucking crazy. $3 p.m. already done. That's it. He ain't even coming on over the weekend, is it? A big ass fucking move missed on the video, damn. It sucks. Man, look at fucking the video 180. They fucking showed 170 and then went to 180. Like,
let's bring in Richard
day.
Bernstein. He's the CEO and Chief Investment Officer at Richard Bernstein Advisors. Rich, I can't wait to hear, where are you value hunting? What are you steering clear of? I have to imagine you're loving the cyclical story here. Why do you think the market's doing so well today? What did you make of the Amazon quarter? So many questions.
In 4 days, it went from fucking $900 to 36.
I think, look, I think the broadening of the market,
$9 to 0.36, and then it's back at $3. Like, bro, fuck.
And that's really been
that
going
180
on
line on Nvidia,
since the end of
crazy
October, more or less.
Nvidia
fits
up
and starts, but it really
7.86%
started
today.
in October. And I think that this
shit.
is very healthy. You know, I think people don't realize how strong the overall economy is. Nominal GDP last quarter was over 8%. Excluding the post-pandemic, the United States hasn't had a nominal GDP quarter over 8% since 2006.
Wow.
It's been 20 years. So why you would have a narrow market when you've got GDP, nominal GDP over 8% is mind-boggling. And so what you're seeing is actually the market begin to broaden in acceptance of the economy, and that corporate profits are turning out to be much stronger and much broader than people thought.
Is there any of the Mag 7 you like here? You know, Nvidia is up 7% today.
Well, Kelly, I'm going to beg off on the question because we are very much a macro firm. And one of our stories has always been that we don't know anything about Coke versus Pepsi. And so I will say I don't know anything about Microsoft versus Nvidia as well. I can tell you that the key thing, and I've said this many times with you before, that the key thing for the Mag 7 is that they are fine companies. They are not unique. There are many companies in the United States and around the world that are growing as fast, if not faster, than the Mag 7 and are a lot cheaper. So my question would be, if you can get 20, I'm going to make up these numbers for a second. If you can get 20% growth for 40 times earnings and 20% growth for 20 times earnings, why in the world would you not take the 20% growth for 20 times earnings?
And where are you seeing that kind of profile? Now, for instance, Eli Lilly earlier this week reminded us they've got 40 and 40. They've got, 40% revenue growth. They've got 40% operating margins. That's a $1 trillion company. Where are you seeing places that are as fast growing, 20+% as you mentioned, but trading? I mean, Microsoft's trading at like 20. I'm like, the company you're describing sounds to me like Microsoft.
So, Kelly, I'm going to sound extraordinarily boring here for a second. And I'm just going to say, if people are willing to look outside the United States, you will find earnings growth is accelerating in many parts of the world. It's not that U.S. earnings growth is imploding. It's not. It's actually kind of leveling off and maybe coming down a little bit. But outside the United States, you have profit cycles that are actually coming up. So you're getting, I don't even think you have to be very sexy about this. You just have to have non-U.S. investments. Most U.S. investors have zero in non-U.S. So I think this is a pretty easy thing to figure out, that when the non-U.S. markets are 35 to 40% of the global equity market and U.S. investors have less than 10%, I don't think we should worry about a specific stock or the optimal weight of non-U.S. It's just, do you have any non-U.S.? And I think that will solve the problem.
I always worry a little bit about the dollar. Do you think that's just the moves you're describing are so powerful it doesn't matter if the dollar appreciates a couple points?
Well, that's a good one. I mean, usually people ask me the other way. They say, well, the only reason non-U.S. outperformed was because of the dollar. And my answer is, well, so what? I mean, I don't want the return coming from currency. Now, your question's the exact opposite. What happens if the dollar appreciates a little bit? Yeah, I mean, that would be a little bit of a prevailing force against them, but I don't think it's enough to make that much of a difference. And if the Fed is cutting rates into the strong nominal GDP environment, the odds are the dollar gets weaker, not stronger. And I think most people would argue that the Fed is still on a rate-cutting course.
Do you worry, it's kind of go back to the concern in January and after Warsh was not, we was just talking to Larry Lindsay about that. I mean, do you share these concerns one way or the other, either about dollar debasement, you got to own gold, you got to own silver, or the flip side, which is now, hey, we might be in a hawkish stance, and so, the momentum trades are pulling in their reins, and then you can argue about whether or not we're actually going to be in that stance. Are there any macro narratives that you find believable here, or does it go back to the 8% NGDP?
I think there's actually several that are going on that are quite believable. I think number one, although it's great to talk about dollar debasement, I think that's a little hyperbolic. Will the dollar weaken? I think there's a fair chance the dollar weakens, but there's many ways to play that. Yes, you can play it in commodities, but again, just to repeat what I said before, you can play this in non-U.S. stocks. Remember, when your currency is falling, it's always good to have assets in appreciating currencies. So, why not invest outside the United States if you think the dollar is going to weaken? The other side, though, is that what's really been driving crypto, the Mag 711, has been a lot of speculation, and liquidity is the lifeblood of speculation. And so if the Fed nominee Warsh turns out to be more of a hawk than people expect, then your liquidity is going to, on the margin, dry up. People used to call this the Fed taking the punch bowl away from the party.
Right.
Right. And that was the old saying. So maybe that happens, but that's an argument that you want to look at fundamentals and not at speculation and momentum. Fundamentals, as I tried to say, you've got a broad range of companies that are doing quite well.
Let's bring in CNBC contributor, FundStrat's Tom Lee, who's so timely to speak with, not only for Dow 50K and the jump back in tech, but also as the chairman of BitMine. Tom, I know you're watching what's taking place in crypto. We're talking about a 7-month low for the stock of BitMine, the Ethereum paper losses, $8 billion. Is this in jeopardy of going into a pretty dark place?
Hi, Scott. Thanks for having me. BitMine is designed to be a vehicle that tracks Ethereum prices, but on the upswing, because we're adding Ethereum, we'll outperform. So Ethereum's in drawdown. BitMine's going to be in this drawdown spot. BitMine has no leverage. It has roughly 4.3 million Ethereum that earns 3% annually, and we have 600 million cash earning about 4% in money markets. So the company is making about $1 million a day. So there is no risk, no need for the company to actually raise money because it's debt-free and actually generates about $360 million a year in net income. I think crypto sentiment is rock bottom because it has been a terrible drawdown. I mean, just the past 10 days, Ethereum's down 40%. And that's triggered, I think, a lot of concerns about whether crypto is even viable. But, all of those statements that I just heard from just a minute ago, I heard the same thing in November 2022 after FTX. And that's the reality, that crypto is sort of characterized by hypervolatility and big drawdowns. I mean, just in the last 8 years, Ethereum's had 7 drawdowns of 60% or more. The good news is 7 of those were all V-shaped recoveries. So we had a waterfall decline. If crypto's bottoming now, which it kind of looks like it is, especially given MicroStrategy's 25% move, the recoveries are V-shaped. So we recover as quickly as we've fallen.
Just want to follow up on that. Where you suggest there's no risk to the company, is that assumption that Ethereum has stopped going down, that this is a bottom? If there is what some have predicted to be a coming quote-unquote death spiral for certain cryptocurrencies, if the situation with Ethereum gets worse, what happens here?
Well, yeah, I mean, it's a fair question. I think we can look at metrics, for instance. If you look at the number of active addresses on Ethereum, it's up 117% versus a year ago. In fact, in just the last 3 months, that's actually gone up parabolically. As you know, coming out of Davos, what was the big story around what Wall Street plans to do? It's tokenization, which is moving a lot of their financial infrastructure onto the blockchain, Scott. That's not going to change just because crypto prices have fallen. But what is the blockchain that is evident, listed, named by whether it's UBS, Standard Chartered, or Fidelity, where they're tokenizing products? It's on Ethereum. So Ethereum is not in a death spiral because the utility is going up. The price, of course, has been awful. Unfortunately, crypto prices are volatile. It's not like earnings estimates change for Ethereum. In fact, network usage is up 80% in just the last 6 months. But it does mean prices move a lot. I mean, it's sort of a feature of crypto itself.